Good morning everyone. So today we are starting with input tax credit. So yesterday majorly lot of topics got completed and input tax credit, exemptions and liability to pay tax. These are very important topics. So please pay attention. First, in input tax credit we need to know, so when a person can avail the credit and what credit can be availed. So whenever they make an inward supply on that, GST paid can be taken as credit, and that GST paid can be taken as credit provided it is coming in GSTR 2B. When it will come in GSTR 2B? Only when the supplier has reported that details in GSTR 1 and he has filed GSTR 1. Only then it will be reported in GSTR 2B, and when it is reflected in GSTR 2B we can take it as credit. However, GST paid under RCM will never be reflected, so that can be taken as credit irrespective of the fact whether it is coming in GSTR 2B or not. So therefore the equation will be like, so whatever is the matched ITC as per GSTR 2B minus ineligible ITC, because ineligible ITC also will come in GSTR 2B. For example, blocked credit, you are making some purchases which is a block credit, that will also be there in GSTR 2B. And if you are making some purchases and you are using it for exempted supplies, that will also be there in GSTR 2B. But you should not be taking that credit. So therefore what we need to do, first we need to take the match credit as per GSTR 2B minus ineligible credits, that is used for non-business purpose or used for exempted or blocked credits, we need to take out. So these three only we call it as T1, T2, T3. So T1 that is used for non-business purpose, T2 that is exempted supplies, and T3 that is blocked credits. So this should be taken out, and then add RCM, whatever GST that is paid under RCM. So then we will be getting the credit that can be availed in 3B. So therefore ITC availed in 3B, ITC availed in GSTR 3B, so will be equals to, so ITC as per 2B, ITC as per GSTR 2B, and for that you need to take out ineligible ITC. What is this ineligible ITC? Ineligible ITC means, so that is A, so used for non-business purpose, used for non-business purpose, and B, used for exempted, and C, blocked ITC, C, blocked ITC. So then we need to add back GST under RCM. So now whatever we get is known as, eligible ITC, eligible matched ITC. So therefore don't forget to do this in the exam. So we need to first see whatever is the matched ITC. Suppose if it is not coming in 2B, don't take that, eliminate it, don't take at all. Even though you are eligible to take, you don't take at all. And thereafter you need to see which is coming in 2B but on which we should not take the credit. So why we should not take the credit? Maybe it is used for non-business purpose, or it is used for exempted, or it is blocked ITC. Then whatever GST under RCM we need to add, and that is known as eligible matched ITC, that only we will take in GSTR 3B. First we will recognize the ITC in the books, that is just for accounting purposes, whereas monthly matching we need to do. So that monthly matching is as per 2B only now. So then 2A is only for reference purpose, and then how much is the ITC that we take is this 2B ITC, and 5% matching is now withdrawn, but matching with respect to GST paid and RCM can be availed. And which month we can avail it as ITC? Whatever GST that we pay under RCM, can we take it as ITC in the same month, or we should take it as ITC in the next month? Same month itself we can take ITC, there is no restriction. And annual reconciliation will not be applicable if you are taking only the matched credit. Suppose if you are taking the extra credit, but extra credit possibility is not there now, sir. So that for this financial year it is there. For the financial year 2021-22 it is there, because only matched ITC can be taken as credit with effect from 1/1/2022. So before that we can take extra 5%. So due to that reason, for this financial year alone, that reconciliation we need to do. But from next financial year onwards, that problem will not be there, because what we can take as credit is only the matched ITC. and whatever extra ITC that we are not supposed to take, suppose if at all we take, that will lead to suspension of registration. So yesterday we discussed that whenever we are taking the ITC in 3B which is more than the ITC as per 2B, so then immediately that will trigger suspension and cancellation of registration. So due to that reason practically it is so not possible now. So therefore in future this reconciliation problem will not be there. So ITC availed in GSTR 3B should be reconciled with ITC as per 2A, and if ITC availed in 3B do not match with 2A, then excess ITC should be added to the liability, and suppose if it matches, then provisional ITC becomes final ITC, and whenever it is not matched means you have taken the extra credit. Again I am repeating, this is for the period from 1st April to 31st December. So for that period only, because from January 1st onwards only match credit we are taking. So therefore in that case we need to reverse it along with interest. Then here what is GSTR1? We know that is written containing the details of outward supplies. GSTR 2A and 2B. So 2A is a dynamic document which gets frequently updated based on the GSTR1 filed by the supplier either after due date or if there is any amendment that is done by the supplier in GSTR1, but GSTR2B gets updated only when the supplier files the GSTR1, and that too whenever he files. Suppose if he files by due date, then only it will come in 2B. For example, if the supplier filed GSTR1 by 11th, it will definitely come in that month 2B itself. For example, for the month of September, it is 11th October. He filed on 11th October. So it will be coming in September month 2B. Suppose he filed on 14th October or 15th October like that. So little delay he filed GSTR1. But definitely before we file our 2B, that 20th, by 20th October he filed GSTR1. Can we take that as credit? No. We cannot take that as credit even though it reflects in GSTR 2A, but it will not be reflected in GSTR 2B. So due to that we cannot take credit now. Then when we can take credit? Next month only we can take the credit. That is the problem with respect to this. Then GSTR 2B is a static auto drafted monthly statement, and it is like 2A, but only difference is that it will remain static. Then GSTR 3B is containing the consolidated details of inward supplies, outward supplies, everything. Whenever we take the credit, that will go into electronic credit ledger which will be used for payment of our liability. And GSTR 9 is an annual return that already we have discussed. And here 2A 2B difference is that 2A is dynamic but 2B is static, and so 2A we have data from 7 and 8, GSTR 7 and 8, that is TDS TCS data will be there, but in GSTR 2B we will not have TDS TCS information. So the TDS TCS deducted by the recipient will be reflected in 2A. So this is the difference. Then next, so far whatever we have discussed is in terms of Rule 36 sub Rule 4. Rule 36 sub Rule 4, and section reference is section 16 subsection 2 clause AA. A new clause got added. So based on that, section 16 subsection 2 clause AA read with Rule 36 sub Rule 4. So whenever you are writing about the match credit only can be taken, you give this reference, section 16 subsection 2 clause AA read with Rule 36 sub Rule 4. Okay, and then manner of utilization of credit. So here we have to remember these 4 principles, but this will be like a adjustment for the regular computation question. That is, whenever we are computing the net GST payable, the first principle is that, so IGST there is no restriction, which means IGST credit can be utilized for payment of any GST liability, and any GST credit can be utilized for payment of IGST liability. Whereas with respect to the remaining 3, what is that remaining 3? CGST, SGST and UTGST, respective credit should be used for payment of respective liability, and if we have any excess, that is anyhow used for IGST. Then second principle is the order of utilization. First, IGST credit should be utilized for payment of IGST liability, and balance any can be used between CGST, SGST in any manner, any proportion. There is no priority over there between CGST, SGST, UTGST. Whereas in case of other 3, CGST, SGST and UTGST, first for payment of its liability, then balance any for payment of IGST. That is the second principle. And the third principle that you need to remember is that before utilizing CGST credit and SGST credit, the credit of IGST should be exhausted. IGST should be fully spent, and then only we need to touch CGST, SGST. Then when we have multiple credits and IGST liability, anyhow first we need to exhaust IGST credit, and thereafter we need to use CGST credit, thereafter SGST or UTGST credit for payment of IGST liability. So these are the 4 principles that we need to keep in mind whenever we are doing the adjustment. And also remember this point, that whenever we have IGST credit, when you can use it for payment of CGST and SGST liability, check whether they have given any question which says that minimum SGST payable. Minimum SGST payable means, so we need to give priority to SGST. So minimum SGST payable means what? They wanted to pay as less SGST as possible. So which means IGST credit first priority you give for SGST, that is the meaning. Suppose if they say minimum CGST payable, so which means that we need to give priority for CGST. Suppose if they say optimum utilization, optimum utilization means what? So we can use it for payment of CGST, SGST, but ensure that we are not having some liability and some credit getting carried forward. For example, when we have CGST, SGST and IGST, so like 10,000, 5,000, 5,000, 5,000 and 5,000. Whereas credit, if you see, so we have a credit of 2,000, 2,000 and 10,000. So now what we need to do? So first we will be utilizing 10,000 for payment of IGST. So still 5,000 is there, but don't spend 5,000 fully for CGST. Why we should not spend fully for CGST? If you spend 5,000 fully for CGST, then there will be only 2,000 adjusted with SGST and there will be 3,000 liability and 2,000 carry forward. So that is not making any sense. So therefore what we need to do, when we are taking 5,000, 5,000 and 5,000, anyhow first IGST credit should be exhausted and that should be used for payment of IGST liability. Don't spend more than 3,000 for CGST, SGST. So which means that we will be using 3,000 for CGST, 2,000 for SGST. So then we have this 2,000, 2,000 of CGST, SGST credit. So there is nothing called as credit carried forward now. So there is only 0 and 1,000 and 0 like this. Or even alternatively, equally also you can pay, that is 2,500, 2,500 also you can pay. So then the answer will be 500 and 500. So multiple answers will come in the exam, but when your answer will be correct, the total net GST liability should be same. The total of the net GST liability, because in another alternative what we are doing, 5,000, 5,000 and 5,000. So we are utilizing first 5,000 rupees, then we are utilizing 2,500 and 2,500. So thereafter 2,000 and 2,000 when we are utilizing, so what will happen here? 500, 500 and 0 will come. So which means the total of the net liability equals 2,000. So you will get marks, definitely you will get full marks. So that is the total of the net liability only they will be checking. So therefore if this is tallied, so then yes, because alternative answers exist. But if you try to pay 3,000 rupees as liability, net GST payable, and 2,000 if you carry forward, means you are not optimum utilization of credit is not there. So this point you should keep in mind in exam. That too, for the first question, this adjustment will definitely be there, because in first question they will be given that 14 marks question, they will be giving gross liability as well as input tax credit. So like we need to take outward supplies liability, input tax credit we need to adjust, and then we need to arrive at the net GST payable. There definitely this point we will be using, okay. And also yesterday we studied that 86B, that will also be used. So when we are like last time they have asked that, so that will also be used. So when you are using this, please keep in mind that if you are paying minimum 1% of the liability through cash ledger, so then you can use fully for the purpose of payment of liability we can use. And here what is the meaning of payment through cash ledger? Payment through cash ledger means not RCM liability, because RCM liability by default we pay under cash ledger. Don't take that. I am talking about the FCM liability. So that restriction of 1%, 99% is only for FCM liability, because RCM liability by default you have to pay by cash ledger. Then so IGST credit after utilizing for payment of IGST liability can be used for payment of CGST, SGST in any proportion. So multiple answers possible in exam. My view is that depending upon CGST, SGST liability, it should be apportioned. So then it will be proper, because what is the GST liability here? 5,000, 5,000. So if you are using equally 2,500, 2,500, automatically the answer will be correct. So that thumb rule you follow. So how the CGST, SGST liability is there, in that proportion you adjust, so you will not have any kind of issue with respect to optimum utilization. And then GST compensation cess. Can the GST compensation cess be taken as credit? Yes, it can be taken as credit, and it can be adjusted only against GST compensation cess. It cannot be used for payment of IGST liability. Even IGST credit cannot be utilized for payment of GST compensation cess. Then conditions for availment of ITC. So as per section 16, so only a registered person, there are some conditions that are given in 16 subsection 1 and 16 subsection 2. Only a registered person can avail ITC, and that should be used or intended to be used in the course or furtherance of business. Intended to be used means which I will be using it in future in the course or furtherance of business. And next 4 additional conditions we had. Now one more point is added. So 5 additional conditions. That is, you should be in possession of the tax paid document. Suppose if the invoice is missing, whatever credit that we have taken will not be available, so it means it should be reversed. So we should be in possession of the tax paid document. You should have actually received the goods or services. And next, the supplier should have paid the GST if it is FCM, and recipient should have paid the GST if it is RCM, and supplier should report the details in GSTR1. That's a new amendment. So they have added this as one condition, that supplier should report the details in GSTR1. And next, the recipient should be filing the returns, GSTR 3B, then only they can take ITC. So total, now we have 7 conditions. So only registered person can avail ITC, and it should be used or intended to be used in the course or furtherance of business, and the person should be in possession of tax paid document, should have actually received the goods or services, supplier should have furnished the details in GSTR1, and supplier should pay the tax, and recipient should have filed the returns. There are 2 things which is not in the control of the recipient, that is, supplier should have paid the tax, and number 2, supplier should have reported the details in GSTR1. So these 2 are not in the control of the recipient. That supplier has to do, means recipient should ensure that supplier is doing it. And what are the various tax paid documents? So we have tax invoice, debit note, ISD invoice, and bill of entry. These are the 4 tax paid documents on the basis of which we can take ITC. Bill of entry is used for the purpose of import. When we are filing bill of entry, in that we mention IGST, and that IGST can be taken as credit. And ISD invoices, whenever input service distributor gives the credit, distributes the credit, they will be giving ISD invoice. On the basis of that also we can take the credit. So these are the 4 tax paid documents. And what is generally input tax means? Input tax means, so CGST, SGST, UTGST, IGST, and which is paid under FCM. Even GST paid under RCM also is called as input tax credit. So GST paid under RCM can be taken as credit, but remember, whatever GST that is to be paid under RCM should be paid only using cash ledger, and first we need to pay, and that we can take as credit and adjust against our FCM liability. So it cannot be adjusted with the same liability, which means the computation needs to be done separately. So first we need to take FCM, then RCM. Okay, so then we need to see what is the liability. What is the liability? Suppose if the FCM liability is 2 lakhs and the RCM liability is 40,000, then what is the ITC that we have? Say ITC already we have 1,20,000. Now this 40,000 rupees will also be added here as ITC, 40,000 rupees. So then what will be the net liability? 2 lakh minus 1,60,000, 40,000. And RCM liability will be 40,000. Like this we need to show in the exam. Okay, so clearly we need to show as to FCM liability and RCM liability. Then, but input tax does not include, so tax paid under composition scheme, because first of all a person opting for composition scheme should not be charging GST to us. Suppose if they charge GST to us, can we take it as credit? So no, we cannot take it as credit. And next thing is that even IGST paid on import also can be taken as ITC. Then there is a document, and that document do not contain all the details which are supposed to be there as per rule 46 and rule 48 of CGST rules, that is contents of the tax invoice. So suppose if a document is not having the proper contents like description, serial number, date, and thereafter HSN, SAC, all these should be there. Suppose if those details are not there, still can we take the credit on the basis of the document? Yes, provided there are some 6 minimum details that are present. What are those 6 minimum details? Number 1, GSTN of the supplier. Number 2, GSTN of the recipient, and description of the goods or services, and thereafter value and the tax. and finally place of supply if it is interstate supply. These are the minimum details that should be present in a document, and then the document will be called as a valid document for the purpose of taking ITC, even though that is not called as a valid document from the supplier point of view. Supplier has breached the condition, on which the supplier will have a general penalty up to 25,000 because of not giving all the details which they are not supposed to give. And also one more point in this regard, e-invoice. Suppose if e-invoice is applicable to the supplier, but supplier did not follow e-invoice, he gave a normal invoice only. E-invoice he has not given. What is called as a e-invoice? Obtaining three things from the invoice registration portal is known as e-invoice. Invoice reference number, QR code and digital signature. These three things should be obtained from the invoice portal. Invoice registration portal, IRP. So they need to obtain these three. So then only it will be called as a valid invoice, which means that our supplier is required to follow e-invoicing, but he did not follow e-invoicing. He gave a normal invoice. He reported it in GSTR 1 and we are getting that in GSTR 2B. So we took the ITC. So whether that ITC is valid? No, that ITC is not valid. So therefore we should also check whether our supplier is eligible for e-invoicing or not. If he is eligible for e-invoicing, we should insist that. So he need to give the e-invoice only. Otherwise we cannot take the credit. Even if we have taken the credit, that credit is not a valid credit. Okay, you remember this? Then so suppose if the supplier has given invoice, normal invoice, he is supposed to give normal invoice, he gave a normal invoice, but it does not contain all the particulars. So still we can take the credit if these minimum particulars are there. But will there be any penalty on the supplier? Yes. So what will be the penalty that will be applicable? The penalty will be under section 125, that is up to 25,000 penalty under CGST, up to 25,000 under SGST, but there is no penalty on the recipient for this purpose. Then what is the meaning of inward supplies? Inward supplies means capital goods or inputs or input services. Inputs means any goods purchased and charged to P&L will be coming under inputs, whereas capital goods means any goods purchased which are capitalized in the books of the recipient is known as capital goods. We need to understand this difference because there is a separate treatment for inputs and separate treatment for capital goods in input tax credit. Then input services means any service received by the person will be coming under input service. But when they can take credit, provided it is used or intended to be used in the course or furtherance of business, which means it has a nexus to the business, definitely they can take credit. Whether it is present in the outward supply or not, they can take the credit. And suppose if there is any closing stock, they purchased 1 lakh units, but they sold only 70,000 units. 30,000 units related credit can be used for payment of GST on 70,000 units. Yes. So because intended to be used is the word that is given. So which means that on closing stock also we can enjoy the credit, we can utilize it for payment of our liability. Then deemed delivery concept. Deemed delivery concept will come into the picture when, so there are two conditions. That is, recipient can take ITC only if they have received the goods and they have got the invoice. Both should be there. For example, invoice pertains to April month, but the goods are received in the month of June. So when the credit can be taken? Only in the month of June the credit can be taken. Here what happened? In case of bill to ship to transactions, the goods are sent to some other person on the instruction of our recipient. So now recipient cannot take the credit because recipient has got the invoice but he has not received the goods. And the third person to whom the goods are sent also cannot take the credit because he has received the goods but he is not having invoice. That's why this deemed delivery concept has been added, wherein whenever the goods are delivered to the third person, it is deemed that, so the goods are delivered to the recipient and the recipient can be taking the credit. That is the registered person. Billing address can take the credit. And this is not only applicable in case of goods, also applicable in case of services. On behalf of the recipient, if the services are rendered to some other person, so definitely the recipient can take the ITC, and under this bill to ship to model, deemed delivery concept. So the date when the third person has received the goods or services, it is deemed that the billing address or the recipient has received the goods or services and they can take ITC. That is this deemed delivery. And goods received in lots or installments, ITC can be availed only upon receipt of last lot or installment against a single invoice. Suppose if the invoice is separate, we can take the credit immediately, but against a single invoice, if the goods are sent in lots or batches, then only we can take on last installment. Then whenever recipient is not making payment to the supplier, so then also recipient can take the credit. There is no restriction with respect to that. So because recipient don't have any problem with respect to availment of ITC, recipient can always take ITC because this is not a condition, first of all, for the purpose of availment of ITC. However, if the recipient is not making payment to the supplier within 180 days from the date of invoice, so much of the credit that is availed by the recipient needs to be reversed along with interest at the rate of 18% per annum. From which date to which date? From the date of availment till the date of reversal. So therefore, what is the date of availment? Here the date of availment is not the date on which he availed it in the books, because logically the date when he availed is in the credit ledger. So when he will avail in the credit ledger, whenever he files 3B, he will be taking it in the credit ledger. Okay, so which means the 3B filing date should be taken or the next date should be taken. Usually we will take it as the next day, because that gets reflected into the credit ledger the next day. That is, in the sense 3B same day. Literally, if you see, as per the law, we need to take from the date of availment till the date of reversal. But for interest computation, so in study material also, so what they have given is that, so from the next day it is computed in one question. So due to that reason, we will be taking from the next day. But even if you take it from the date of availment also, legally it is correct. That will not be a problem. Okay, so you can follow anything. So both the answers are correct. But my advice is follow from the next day. For example, if the date of availment is 20th August, so you calculate interest from 21st August till the date of reversal. What is the date of reversal? Whenever they file 3B for the month in which 180 days is expired. And what if there is clearly information as to 3B filed date, we will take that. But if suppose there is no information, then what will be taken as the date of reversal? The date of reversal will be taken as the due date of filing 3B for that particular month. And due date generally we will take 20th. So even though 22nd and 24th is there, unless otherwise it is given in the question that they are going for QRMP, so we will not take 22nd or 24th, we will always take 20th. Suppose in the question they have given that the said person is apted for QRMP, then be careful and see the state where that person is, then accordingly the due date will change. So up to the date we need to compute the interest. Okay, they may play around in this. So these provisions are not applicable in case of 3. That is supply without consideration, 7(1)(c), because there is no consideration at all. Then 15(2)(b), payment made to some other person on behalf of the supplier. So because payment already made to some other person, supplier did not receive it, it's okay. So 180 days condition not applicable. Then another case is reverse charge mechanism. When GST is payable under RCM, so then also this 180 days condition is not applicable, because the liability to pay GST is on recipient only. And suppose if proportionate amount is paid within 180 days, say 60% is paid within 180 days, then the reversal is only with respect to the 40%. And upon payment after 180 days, and this 180 days is not automatic, the recipient has to do this as a self-assessment exercise. And suppose if the recipient is not doing it and department identifies during the audit, so they will be issuing the demand and recovery notice for the purpose of recovering that interest portion. So because they need to reverse that ITC, but they did not do that, so they need to pay the interest. And suppose after 180 days they have made the payment, the recipient has made the payment to the supplier. In that case, recipient can avail the ITC, and the time limit, so generally time limit is there 16 subsection 4, that 20th October of the succeeding financial year or date of filing and return, that is not applicable in this case, because it is re-availment of ITC. So in that case this condition will not be, time limit will not be applicable, they can definitely take the ITC. And how much they can take as ITC? Whatever they reversed as ITC, that much only can be taken. But they paid interest, can that interest be taken as credit? No, that interest is gone, Govinda, Govinda. Okay, so that and all you cannot take the credit. So only whatever tax that is reversed, that is ITC component reversed, only can be taken. Literally here the loss is only interest. Suppose after 180 days, if proportionate amount is paid, only that proportionate amount can be taken as ITC. For example, after 180 days, if 60% of that only paid, then that 60% portion only can be taken as credit. And here, even though as per the contract, so the credit period is given for more than 180 days, but this provision only will prevail over the contract. So therefore, recipient has to reverse the ITC and compute the interest. So that is with respect to this. Then section 16 subsection 3. Section 16 subsection 3 talks about depreciation. Suppose while computing income tax depreciation block of assets method, when we are adding to the opening WDV asset along with the GST component, we should not take the ITC with respect to that. But at a later point of time, suppose if you are taking the ITC on that asset, then we need to add back, that is whatever we have added to the asset, that should be reduced. And depreciation purpose, we need to show that as a minus. For example, opening WDV plus additions minus disposal closing WDV. Suppose if you don't want to take ITC, you add it. Because we have one point called as capital goods. At the time of initial purchase, we came to know that it is used for exempted supply, which means that you cannot take the ITC. So therefore, the GST component will be added there. And at a later point of time, so if you are using it for both taxable and exempted, we can avail it as ITC. So because initial purchase used for only exempted, at a later point of time used for both taxable and exempted, now we can avail the ITC and we will call it as common ITC. Now the moment when we take the ITC in that the WDV computation, block of assets computation, so we need to show that as minus disposal. In that disposal we need to show how much our ITC you are taking, that should be shown as a disposal. Okay, so therefore that is about the treatment in income tax for the purpose of GST, which means that, so yes, depreciation, even if we have calculated on the tax component, still we can take the ITC in future, provided we are reducing it from the asset for the purpose of depreciation. So that is this. Then 16 subsection 4, time limit for availment of ITC already we have seen, and debit note, don't see the invoice time limit. Generally we have to see the invoice time limit for the debit note, but now they have delinked it, which means for debit note to take ITC, the time limit is based on the debit note date only. So debit note, how invoice you will see separately, like generally invoice comes in which financial year, for that financial year what is the next financial year, 20th October of the next financial year, date of filing annual return, same way you see for debit note, because in the past we used to see the invoice time limit for the purpose of availment of ITC on debit note, but that is not applicable. So in case of debit note, availment of ITC depends on the debit note but not on the date of invoice related to such debit note. Then, so this is about section 16. So these 4 subsections we have. 16.1 and 2 talks about the conditions, and 16.3 talks about depreciation, and 16.4 about the time limit for availment of ITC. Then section 17. So total from section 16 to section 21 we have in input tax credit. In that 16 talks about conditions for availment of ITC, 17 apportionment of credit and block credit, 18 input tax credit in special cases, 19 so when the goods are sent on job work and received from the job work, what is the treatment, and then 20 and 21 related to input service distributor. So 17 talks about apportionment of credit. In that 17 subsection 1 says, if you are having some inward supplies and that inward supplies are used for business purpose, you can take the credit. Used for non-business purpose, you cannot take the credit. Partly used for business and partly used for non-business purpose, you can take proportionate credit. Same way 17 subsection 2 says, you have an inward supply used for taxable supplies, taxable outward supplies, you can take the credit. If you are using it for exempted outward supplies, you cannot take the credit. If you are using it for both taxable and exempted outward supply, you can take proportionate credit. Okay, and then in case of 17 subsection 3, the meaning of exempted supplies, total 10 points you need to remember in case of meaning of exempted supplies. There are 3 supplies which are treated as exempted both for payment of GST as well as for availment of ITC, that is notified as exempted, nil rated and non-taxable. These 3 are exempted both for payment of GST as well as for availment of ITC. Next 3 you need to remember, actually they are not a supply, but for the purpose of ITC they are treated as exempted supply, that is sale of land, sale of building and sale of securities. These 3 are not at all a supply for payment of GST, but for ITC purpose it is treated as exempted, because of which what will happen, so there will be more exempted supplies and the less availability of common ITC. So that is why they are adding. But in case of land and building, so we will not do valuation, then what value should be taken? Stamp duty value should be taken. In case of securities also we will not do valuation because it is not a supply, then what should be taken? 1% of sale value of security should be taken. Then first 3, if it is exempted both for GST as well as for ITC purpose, notified as exempted, nil rated, non-taxable. Next 3, land, building and securities, not a supply for payment of GST, but for ITC it will be treated as exempted. And next one, that is supply covered under RCM, actually it is a taxable supply for payment of GST, recipient will be paying GST, but for ITC purpose, for the supplier it is treated as exempted supply. For example, if my outward supply is covered under RCM, for me it is treated as exempted supply, I cannot take ITC on my inward supply. And then we have 2 more points, next to 2, actually they are exempted, but for ITC purpose it will be treated as taxable, that is interest on loans, advances, deposits for a person other than bank, financial institution, NBFC, actually interest is exempted but it will be treated as taxable. But this is not applicable for bank, financial institution, NBFC. For bank, financial institution, NBFC, interest is exempted both for payment of GST as well as for availment of ITC. And then transportation of goods by vessel from India to outside India is actually exempted. Exemption extended up to 39/2022. It is exempted, but for the purpose of ITC, it will be treated as taxable. So these are the 9 points. Apart from that, the last 10th point, apart from these 9 cases, any other transaction, if it is taxable for payment of GST, it is taxable for ITC. If it is exempted for payment of GST, it is exempted for ITC. If it is not a supply for payment of GST, it is not a supply for ITC purpose. So that is what you need to remember. So these 7 points and these 2 points. And here, so for sale of securities, 1% of sale value, land and building, stamp duty value should be taken. And these are the 2 cases, interest on loans and advances other than bank financial institution, except in case of bank financial institution NBFC. And this is transportation of goods by vessel, not outside India to India, India to outside India. Actually, outside India to India is taxable, and it will be taxable both for payment of GST as well as ITC. So from India to outside India only exempted for payment of GST, so it should be treated as taxable for availment of ITC. That is this. And then whenever we are taking ITC, so we need to, that is this common ITC, proportionate reversal and all, there is a particular format that we need to follow. What is that format that we need to follow? So generally what we will do, we will take the ITC as total ITC into taxable divided by exempt, taxable divided by total. So this is what generally we take as ITC, but that should not be followed. So because when you take the ITC itself this way, then when you take proportionate ITC, that will not be matched with GSTR 2B, because in GSTR 2B there will be somewhere 2 lakhs. For example, 2 lakhs is your total ITC and the taxable turnover is 40 lakhs and the total turnover is 60 lakhs. Then exempted turnover is 20 lakhs. So which means how much credit you will be taking? 2 lakhs into 40 by 60. 2 lakhs into 4 by 6. So that is 1,33,333 will be taken as the ITC. But here what happens, in GSTR 2B 2 lakhs will be visible, but you are taking the credit 1,33,333. So they will think that okay, you have taken credit correctly, but in this manner blocked credits and all also we can enjoy. So due to that reason we should not follow this methodology. Then what we need to do, first we need to avail ITC. First we need to avail ITC, so that ITC availed will be 2 lakhs, and thereafter we need to do the reversal of ITC. So what is this reversal of ITC? It's like same way whatever we computed, but we need to take it on exempted to total ratio. So 2 by 6. Why 4 by 6 is taxable to total ratio. Now we are taking exempted to total ratio and we are doing the reversal. So that will be what? So 66,666. So 667 we will reduce. So therefore the net ITC that is available will be 1,33,333. Anyhow the answer is same only, but we need to follow this format only. Where is this given? In rule 42 and rule 43 it is given, and rule 42 is in case of inputs and input services, rule 43 is in case of capital goods. So what we need to do, first we need to take the invoices, total invoices, whatever is available that we need to take. Okay, so in the total invoices whatever is available, so we need to segregate the total invoices into 4. So what are those 4? T1, T2, T3 and T4. T1 refers to, so total ITC with respect to non-business purpose, that is whenever, see these are the total invoices, whatever total invoices that I have. Now I need to do the segregation. So this invoice I am using it for only non-business purpose, taken out. Okay, then invoice it is used for exempted supply, taken out. Then invoice which is for blocked credit, so taken out. Now this is only my invoices on which I can avail ITC. So this invoice is only I can avail ITC. Then what about these 3? These are waste, not required. T1, T2, T3. You understood? I should not at all take it into the credit. You understood or not? Now whatever I have taken into credit, in this credit whatever I have taken, it includes even common credit also, and exclusively for business or non-business purpose. So what I need to do? First I need to divide this again into, first this I have taken. This I have taken, these are my credit, those are not my credit. So I have taken out. Why? I should not suppose, I am not supposed to take that as credit. This only I can take the credit. But in this also, fully I cannot take the credit. In that, there are some credits which are fully used for taxable and business, I can take. But there are some credits which are used for partly taxable, partly exempted, partly business, partly non-business purpose. Exempted portion. Okay, so total common credit, exempted portion, this I should reverse. You understood? Then non-business purpose, So this also I should take. Now this is the remaining common credit. This I can take, and this fully also I can take. This is my credit available for utilization. Understood or not? That is this part. So total ITC with respect to inward supplies, and that we need to segregate into 4. So total ITC will be say 10 lakhs, and then so non-business purpose. So out of this inward supply, how much is attributable to non-business purpose? Say 2 lakhs is attributable to non-business purpose and 1 lakh is attributable to exempted supply. Then 50,000 will be blocked credit, which means how much credit I will take into my ledger. So credit ledger means how much will be called as ITC avail. So 10 lakhs minus 3 lakh 50,000, that is 6 lakh 50,000 only I will take as credit in my electronic credit ledger, which means in my 3B I will be taking only 6 lakh 50 as the ITC avail. So T1, T2, T3 I should never take it into credit. So therefore 6 lakh 50, and now in this 6 lakh 50 again I am segregating as to how much is used for taxable and business purpose. Say 3 lakh 50 is used for taxable and business purpose. Then what is the common credit? The common credit will be 3 lakhs. So from 6 lakh 50 I should take out 3 lakh 50, then I am getting 3 lakhs. So 3 lakhs will be the common credit. Out of this 3 lakhs, how much is used for non-business purpose and how much is used for exempted supply I need to find. That is known as D1, D2. So 3 lakhs into exempted divided by total, this computation. So 2 lakhs into this we did now. Same way, how much is used for exempted to total. Say for example 3 lakhs into 40 divided by 80. So this is for exempted. So which means 40 is taxable, 40 is exempted. So which means 1 lakh 50 is gone. 1 lakh 50 is gone. And thereafter, how much is for non-business purpose? So generally we cannot determine that. So that's why they are telling 5%, a thumb rule, 5% of the total credit. 5% of the total credit we should take out. So therefore, 5% of this means 3 lakhs into 5%. So that is 15,000. So should be taken out. So which means what is the credit that I have availed? 6 lakh 50. What is the credit that I have reversed? 1 lakh 50 and 15,000 I have reversed. So 1 lakh 65,000 I have reversed. Remaining is the credit available for utilization against the liability. Now in this case, sir, suppose if you can identify how much is used for business and how much is used for non-business purpose. Say I am taking a immobile property on rent. 1/3 is used for business purpose and 2/3 is for personal purpose. Then the 2/3 I will put it in T1 itself, because it is for non-business purpose, and 1/3 I will put it in T4, because at that stage itself I can do the segregation. So it will not travel into the common credit if I can do it at that stage itself. Okay. Suppose I could not determine how much is for business, how much is for non-business, that's why it is traveling into common credit. But the problem is when it travels into common credit, so not only that particular invoice we are taking 5%, all the common credits into 5% we are doing, not that particular invoice. If that particular invoice it is good only, just 5% we need to pay, but no, total common credit we are taking 5%. So which means out of this entire 3 lakhs, what is used is maybe one invoice, partly for business, partly for non-business. Even then entire 3 lakhs into 5% will undergo. So the tax planning we need to do. Suppose if there is a data that is available, this much, 1/3, 2/3 that is available. So then we will follow that only. If that is not available only, we need to follow this. It is not like we will decide between these two options. Okay. So therefore every person should strive to create that percentage used for business and percentage used for non-business purpose. Then, so this is about rule 42. So you need to stick on to the format. If you get question like that, I said many attempts. If you get question this time, if you get question this time, it came. May 22 it came. Okay. So yes, it came. So therefore this T1, T2, T3 computation, so that was tested last time. So that's why stick to the format T minus, so T1 minus T2 minus T3. What is T1? Non-business purpose. T2, T3, block credits. So the remaining C1. What is C1? C1 is called as ITC availed in electronic credit ledger. Means ITC availed in 3B. This is known as availed ITC. And then minus T4. T4 is what? Is exclusively, that is for taxable purpose. Then if you take out T4, the balance is known as C2, common ITC. C2 is known as common ITC, and from this common ITC we need to take out D1 and D2. So D1 is known as common ITC attributable to non-business exempted supplies, and that is C2 into E by F. D2 is common credit attributable to non-business purpose, that is 5%. So therefore, once you do this computation, then finally you need to do the conclusion. What is that? ITC availed. ITC availed in 3B will be called as C1, and ITC reversed in 3B. What is the ITC reversed in 3B? D1 plus D2. Okay, so that is what I have given there, that numbers like the T1, T2, T3 means what, how need to arrive. So just you remember this half a page information, that is sufficient. Then whether we need to do this computation every year also, again yes. Monthly we need to do, again at the end of the year we need to do this computation, because monthly to yearly there could be some differences, maybe on account of some sales made in one month and returned in another month, yet another month we made sales, but when we do it on a yearly basis, we consider that sales only once, and then it so happens that we don't know how much is used for business and non-business, so on some basis we reverse, but actual information we came to know at the end of the year, because of which whatever we reverse on a monthly basis is known as provisional reversal. Whatever we are required to do the computation throughout the year is known as final reversal, annual reversal. Suppose if the provisional reversal is less than the annual reversal, means what we reversed is less than what we are supposed to reverse, so the balance we will be reversing along with interest at the rate of 18% per annum. From when? From the 1st April of the succeeding financial year. Means we need to do this computation by the end of the financial year, and therefore from 1st April we need to do this computation. Okay, and that is we need to compute and we need to pay, otherwise we need to pay interest from 1st April. Logically no one will be making payment by 31st March itself, because the 3B itself is by 20th April. So by default they have to pay interest, because GST finance company they started, so they need to get some revenue for that. So for that purpose, so this interest will be computed from the 1st April of the succeeding financial year till the date of reversal. Suppose if I have reversed more, D1 D2 provisionally reversed this more, then the final D1 D2, will I get interest, sir? Nothing you will get. So the difference amount only you take credit. That too if you want take credit, if you don't want, don't take credit. The time limit to take credit is by September of the succeeding financial year. By that time you want, take credit. You don't want, okay, we are so much happy, so don't take that credit also. Understood or not? So which means that, so we will not get the interest on refund and all here, but on differential ITC we need to pay 18% from 1st April of the succeeding year till the date of payment. If the amount is less than amount added to output tax liability, the additional amount paid has to be claimed back as credit in the return of any month till September of the succeeding financial year. So generally you said 20th now, sir, but here they are using the word that return of any month. So logically correct only, return of any month. Return of any month till September means, so September month return whenever you file, so by that time you should be taking that credit. That is the logic here. Which one? That is whatever we reverse excess, if you want to take that as credit, so we need to do that by this time. Then rule 43. So far we have seen rule 42, that is in case of inputs and input services. In case of rule 43, what we need to do? So we need to take, so first inward supplies is capital goods. Capital goods used exclusively for taxable or business purpose. Can we take the ITC? Yes, we can take the ITC. And inward supplies is capital goods which is exclusively for exempted or non-business purpose. Can we take the ITC? No, we should not take ITC. What if the capital goods are partly used for taxable and partly used for exempted? Yes, we can take the ITC. Full ITC we can take, but we need to do the reversal on a proportionate basis over the next 60 months. So here the life of the capital goods should be taken as up to 60 months. As the word used are up to 60 months, we can take even 48 months or 36 months also. We need to check out for that in the question. If the question is silent, we will be taking it as 60 months. Suppose if the question says 36 months and 48 months, you don't add it as 60 months, so that is okay. 36 months or 48 months also it is okay. We can do the credit like computation. Only thing what will happen, the monthly ITC will increase. Suppose if we have purchased some capital goods, so capital goods are purchased and these capital goods are purchased in June 2020. June 2020 we purchased capital goods for 10 lakhs plus GST at 1,80,000. 1,80,000. Now what we need to do? For the month of June 2020, for the month of June 2020, avail ITC. This is a common capital good used for both taxable and exempted purpose. For the month of June 2020, avail ITC. How much will be that ITC? 1,80,000 you will avail it as ITC. After availing it as ITC, so then we need to compute the monthly ITC. So that monthly ITC only, I told you, either we can take 60 months or less than that also, because the law uses the word up to 60 months. Suppose if the question is silent, you take it as 60 months. So that will be 3,000 will be taken as the monthly ITC. Now what you need to do? Starting from June 2020 over the next 60 months, we need to take 3,000 into what is the exempted supply for that month divided by total supply for that month will be called as reversal of ITC. Understood or not? So, but we should not stop here. So, for example, if the exempted is 20 and the total is 80. So, how much will be reversed? 3,000 into 20 by 80. 3,000 into 20 by 80, so that is 750 rupees will be ITC that will be reversed. But on this 750 rupees, I need to compute interest. And what is the rate of interest? 18%. From when? From the date of availment till the date of reversal. For the first month, interest will not be there because the date of availment and date of reversal is the same month. From second month onwards, we will be having date of availment is the month in which you take the credit, that is June 2020, you would have filed 3B by 20th July. So on that day you would have taken the credit until the date of reversal, which means for 60th month should we compute 60 months interest? Yes, we need to compute 60 months interest in that case. So avail 100% ITC with respect to GST paid and transfer it to electronic credit ledger. That is this 1,80,000 we will first take and transfer to credit ledger. Then compute monthly ITC. So life of capital goods is assumed to be 5 years or 60 months, so 3,000 rupees. For the next 60 months, we need to do monthly ITC into exempted divided by total. And this should be added to liability along with interest. Interest at the rate of 18% per annum from the date of availment till the date of reversal. And the 60 months period, now suppose if you have disposed of the capital goods before that 60 months, we don't have to do this computation reversal for the next life, balance life. For example, after 36 months, I sold this capital goods, and then in that case for the remaining 24 months, I don't have to do. Why I don't have to do? Because at the time when I dispose of the capital goods, under 18 subsection 6, I will be doing a computation. What is that computation that I do? GST payable under 18 subsection 6 on the capital goods on which ITC availed is supplied is so much of the ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of disposal, or GST on sale value, whichever is higher I am paying. So that's why for the remaining period I don't have to do this computation, a proportionate reversal computation. So the above procedure is not required from the month when capital goods are sold, as GST is payable in such case under 18 subsection 6. What is the GST payable under 18 subsection 6? First of all, when 18 subsection 6 will be applicable, that is whenever we are purchasing the capital goods, and on that capital goods GST paid has been taken as credit, and that capital goods are being supplied. Then in that case, A, so much of the ITC availed as reduced by 5% for every quarter or part thereof. From which date? From the date of invoice, not from the date of availment of ITC. From the date of invoice, from the date of invoice, from the date of invoice, from the date of invoice. Don't forget this, because too much impact you will be having about rule 42, that you will think, okay, from the date of availment, that 180 days condition also will be haunting you. It will take date of availment. That is only correct. Like that your mind will say, don't listen, okay. So you should listen to my voice. What is that? Date of invoice, date of invoice. So date of invoice till the date of supply. And or GST payable on value of capital goods determined under section 15, whichever is higher should be taken. And suppose if it is refractory bricks, molds and dies, jigs and fixtures, in that case if it is sold as scrap, then don't take A or B, whichever is higher, just GST on sale value. Refractory bricks, molds and dies, jigs and fixtures sold as scrap, just GST on sale value, we will not take that A point. Then next, initial purchase, we are using it for CG1, and at a later point of time we are using it for CG2. What is CG1? Exclusively for taxable, and at a later point of time commonly for both taxable and exempted. Now what we need to do? Simple. initially you purchase and you avail the ITC at the time itself. No need to take ITC now, because already at the time itself we have taken the ITC. Then what we need to do now? Now you consider it as common credit and you do the proportionate reversal for the balance life. For example, we purchased the capital goods in June 2020. What will be the life of capital goods if you take it as 60 months? That is May 2025. So this is the life of that capital goods. Now say for example up to March 2021 we are using it for taxable, and thereafter from March 2021 you are using it for both taxable and exempted. Then already in the month of June itself we would have taken the credit. Don't take the credit again, because already it is availed and therefore don't need to avail it now. Then what we need to do now, from March 2021 onwards you consider it as common credit, and that common credit you need to do the proportionate reversal for the balance life. What is the balance life? The balance life from March 2021, how many months we used? June, July, August, September, October, November, December and Jan, February, March, 9 months. So therefore for the balance 51 months, correct? So till March we used. So therefore for the balance 51 months what we need to do? We need to do the proportionate reversal every month. So that is what we need to do. And what is a common credit? Monthly ITC. So monthly ITC is divided by 60 only. Don't do divided by 51 months. You will do it divided by 60, and this period you are enjoying the credit, so you are not supposed to do the reversal. For this period you should not enjoy full credit, so you need to do the reversal, but divided by only take 60. That is this. Then initial purchase CG3, and at a later point of time we are using it for both capital, that is both taxable and exempted. What is that we need to do? Here also the same. Say for example June 2020 we purchased capital goods, and what will be the life of that capital goods? May 2025. Say March 2021 we are using it for both taxable and exempted, and initially purchased we used for exempted. Whether we would have taken credit during that time? No, we would not have taken credit. So now you need to avail the ITC. Now you need to avail ITC. Why you need to avail ITC now? Because now only you are recognizing that as capital goods, so you avail the ITC, and that ITC will be called as common ITC divided by 60. So that is monthly ITC. You do the reversal for next 51 months. Next 51 months you need to do the reversal. What about those 9 months? Those 9 months you used exclusively for what purpose? Exempted purpose. For that 9 months period we need to calculate the ITC. But how should be calculated? Exactly 9 months like that we will calculate? No, we will be calculating like 5% for every quarter or part thereof. That is June 2020, 1 quarter. That is also 1 quarter. Then July, August, September, October, November, December, Jan, Feb, March. Unnecessarily for 1 quarter we are reversing. That's why they are asking us to take 5% for every quarter or part thereof. If it is exactly 9 months, we would have taken, so say 1,80,000, 3,000 rupees, 3,000 into 9 months. So 9 3s are 27,000. That much only we will be reversing for that period. Which period? June to March. But what they are telling, take 5% for every quarter or part thereof, which means it will become 4 quarters. How 4 quarters? June is there na, part thereof. So therefore 4 quarters, 4 into 5, 20%. 1,80,000 into 20%, 36,000 we are reversing. In the place of 27,000 we are reversing 36,000. This reversal they want. Okay, so due to that reason, so 5% for every quarter or part thereof should be taken. This is reversal for the past period. So what we used to do before is that we used to take the credit minus this, remaining only we used to recognize as common credit, but they are changing that. They are telling whatever is the credit pertaining to the past period, so that credit you reverse. First you avail full ITC. Then there will be 2 reversal. One is reversal for the past, second is reversal for the future. So reversal for the past 5% for every quarter or part thereof, and reversal for the future proportionately based on every month. That's it. So ITC not available at the time of purchase, so it should be availed now. Ineligible ITC to be reversed for the period it was used for exempted will be GST paid into 5% into number of quarters or part thereof. Monthly ITC is original ITC by 60 months. proportionate reversal from the date of conversion for the balance life. Then next, this is about rule 42 and 43. So then section 17.1, 17.2, 17.3 we completed. Now 17.4, special provision applicable to a banking company, financial institution including NBFC. What is that special provision? That is, they can either go for option 1, proportionate ITC method. In proportionate ITC method, so far what we have done, that only they will do. That is total ITC minus T1, T2, T3. That is exclusively for exempted, exclusively for non-business, exclusively blocked credit. So that will be taken out, and remaining credit they will take, and in that common credit they will identify, and in that common credit also proportionately they will do the computation. This is what they need to follow under option 1, proportionate ITC method. But under option 2, it is not like that. Under option 2, what they need to do is that they need to take total ITC minus blocked credits alone they need to deduct. Only blocked credit alone they need to deduct. The remaining credit fully will be considered as common credit. Even though it is exclusively for exempted, even though it is exclusively for taxable, everything will be considered as common credit only under option 2. Be careful with respect to this. This could be tested. So that is what we will do. Both places same way we will do. Here proportionate we calculate, then there we will do 50%. That is CA intermediate syllabus. Okay. So that is you are in CA final. That is what we need to do. That proportionate regularly we do. But in case of option 2, what we need to do? First we need to take total ITC. From the total ITC, only one should be excluded, that is blocked ITC, T3 alone. T3 alone will be excluded. The remaining ITC will be fully considered as common ITC. Out of that 50% will be gone, and remaining 50% you can take. But here when you go for option 2, one more advantage is also there. If you have inward supply from a distinct person, you can take 100%. No need to do deduction of 50%. So that is two special points we need to remember for option 2. Option 1, nothing. So far whatever we have done the same way. Option 2 is that first we need to take the total ITC minus blocked credit. So remaining ITC into 50% plus inward supply from distinct person for a bank or financial institution. Means one branch will be receiving service from another branch separately registered. In that case, they can take full ITC, no need to reduce 50%. And when I need to decide this, I need to decide this in the beginning of the financial year, either option 1 or option 2, and that will be applicable throughout the financial year. Yesterday also in valuation, I told one point, that is, there are two options available to money changing, foreign exchange transaction. There also it is option 1, option 2, they need to decide in the beginning of the financial year, that will be applicable throughout the financial year. But sir, you said transaction value and rule 32 invoice wise you can decide. Yes, between transaction value and this rule 32 invoice wise. But inside rule 32 itself for foreign exchange transactions, two options are there, option 1 and option 2. So that they need to decide in the beginning of the financial year, and once decided it will be applicable throughout the financial year. Again in this place also we have the same way, that is, so in case of a banking company, financial institution or NBFC, so they need to decide between this option 1 and option 2, whichever option they decided, that will be applicable throughout the financial year. So then 17 subsection 5, blocked credits. Blocked credits is very, very important, because in the first question they will be giving some inward supplies. So we need to check it is a block credit or not. There will be definitely 2-3 blocked credits that will be tested there. Okay. So what is that? We have blocked credits divided into 3. Motor vehicles related block credit, construction related block credit, and thereafter we have blocked other block credits. Motor vehicle related block credits, first when we are purchasing a motor vehicle, that motor vehicle is divided into 3. That is motor vehicle for transportation of goods, motor vehicles that is vessels and aircrafts, and other motor vehicles. Other motor vehicles always eligible for ITC, but motor vehicles for the purpose of transporting persons. So motor vehicles for transporting persons includes 2-wheelers, 4-wheelers, buses, cars, everything will be coming there. But if there is a 2-wheeler and that 2-wheeler is used for the purpose of food delivery or any product delivery, etc., then the 2-wheelers will be coming under other motor vehicles. If the 2-wheelers are used for the purpose of transporting the people, persons, then it will be coming under for transporting persons. For example, a person purchased a bike for the purpose of using it for transportation like Rapido. So in that case, so whether that will come under motor vehicle for transportation of persons? Yes. Suppose if a person purchases a motor vehicle for pizza delivery or food delivery or Dunzo, etc., In that case, it will be coming under other motor vehicles and ITC available, because this point has been clearly tested in MCQs. In MCQs, ICA MCQs, they have given one question based on this. So that's the reason why I am stressing this. And next, in case it is motor vehicle for transportation of persons, again divided into two. Capacity does not exceed 13 and capacity exceeds 13. If the capacity exceeds 13, so ITC available. There is no restriction. If the capacity does not exceed 13, again it is blocked credit, but we have 3 exceptions. In those 3 exceptional cases, we can take ITC. What is that? If it is for further supply, means I am engaged in the purchase and sale of motor vehicles, or I am into the business of renting of motor vehicles. I take a motor vehicle and I will give the motor vehicle on rent. So renting of motor vehicles. So further supply used in the business of transportation of passengers. I am into the business of transportation of passengers. And finally, driving schools. In these 3 cases, ITC available, whereas in other cases, ITC not available. So that is with respect to capacity does not exceed 13. If the capacity exceeds 13, ITC is available. And what are the examples for that? So bus purchased by a company for the purpose of transporting its employees, can they take ITC? Yes, they can take ITC because the capacity exceeds 13. Whereas in case of vessels and aircraft, that is also block credit, but we have 4 exceptions. Number 1, further supply, and number 2, same, used in the business of transportation of passengers. Number 3, imparting driving skills, same, but last one, used for transportation of goods. A company purchasing a ship for the purpose of transporting its finished goods, can it take ITC? Yes. A company purchasing an aircraft for the purpose of using it in the business of transportation of passengers, yes, they can take ITC. A company purchasing an aircraft for transporting its director, no, they cannot take ITC because they are not into the business of transportation of passengers. But when it comes to goods, they need not be into the business of transportation of goods. So their own goods also they can transport. For that purpose, they can purchase the aircraft or vessel, they can take ITC. In all other cases, ITC not available. And that is vessels and aircrafts, other cases. And other motor vehicles, ITC available. Example, truck, lorry, bulldozer, crane, EOT truck, then EOT crane, forklift trucks. Then we have even this, caravan, which is used by the actors and actress, but that is not for transportation of passengers. It comes under other motor vehicles, ambulance. All these will come under other motor vehicles. ITC is available. Then repair and maintenance in relation to motor vehicle. Then authorized service station service in relation to motor vehicle. And then hiring, renting and leasing of motor vehicle, and insurance with respect to the motor vehicle. These are the 4 services in relation to motor vehicle. If the motor vehicle is eligible for ITC, on these 4 services also GST paid can be availed as ITC. If these 4, that is motor vehicle is not eligible for ITC, these 4 services ITC not available. For example, if I buy a car, and on that car I cannot take ITC. If that car I take on rent also, on rental charges I cannot take ITC. If I buy a car, on that car I can take ITC. I am into travel business. With respect to that car I take insurance. Along with insurance I pay the insurance premium with GST. So that GST component can be taken as credit. Because as car is eligible for ITC, so that insurance service is also eligible for ITC. That is with respect to this. And while capacity determination, driver also should be included. So therefore the 13 will be including driver. And further supply includes purchase and sale of motor vehicles or motor vehicles used in the business of renting, hiring or leasing. Repair, insurance and servicing of motor vehicles received by general insurance company is always eligible for ITC. The restriction is only to the person other than insurance company. When insurance company receives the insurance services, what happens in case of claim, bumper to bumper insurance, insurance company will make the payment of charges to for the repairs. In that case, the invoice will be raised in the name of the insurance company. Can the insurance company take the ITC with respect to that? Yes. Hiring or renting of leasing of motor vehicles as a statutory obligation by employer to employee is also eligible for ITC. So that is, suppose if they are taking as per government's order rent-a-cab services, a company takes rent-a-cab service as per government's order, statutory obligation. In that case, they can take ITC. Generally, if they receive rent-a-cab service, they cannot take ITC. Why? Renting, hiring and leasing of motor vehicles is block credit. A company purchasing a car, using it in the business of using it for their employees is not in the business of transportation of passengers. So therefore, car capacity does not exceed 13 and not covered under exception. So car is a block credit. If they take that car on rent, rent also block credit. Okay. However, if that is under a statutory obligation, they can definitely take ITC. That is this point. Ambulance and caravan are not motor vehicles for transportation of persons because it is mainly used for providing first aid during the travel, and caravan is used mainly for the purpose of short term accommodation. So therefore these two will not be treated as motor vehicles for transporting persons. So this is about the block credits for motor vehicles related. Then construction related block credit. Construction related block credit total 3 services, that is any services used for construction of an immobile property, works contract service used for construction of an immobile property, or any goods purchased for construction of an immobile property is a block credit and ITC is not available. And suppose if that particular construction expenditure is charged to P&L, then it is available for ITC. When construction expenditure will be charged to P&L, if it is for renovation, repairs, etc., then the construction expenditure will be charged to P&L, we can take ITC. Then another example, another exception is that suppose if that expenditure is for construction of plant and machinery, example lifts, escalators, etc., in that case even though it is immobile but ITC available, means the restriction is only for land and building. Again, plant and machinery excludes telecommunication towers and pipelines laid outside factory. What if the pipelines are laid inside the factory? For that, if they receive construction service, they can take ITC. The restriction is only for telecommunication towers or pipelines laid outside the factory. So 3 cases this exception not applicable: land and that buildings, then plant and machinery excludes what? Telecommunication towers and pipelines laid outside factory. These 3 cases, so this exception will not be applicable otherwise. So if it is for construction of plant and machinery, ITC is available. And then the above discussion is not applicable to the supplier, which means that the block credit is only for the owner of the property, not to the supplier. For example, if a works contractor purchases any goods or receives any construction service, can he take ITC with respect to that? Yes, he can take ITC with respect to that, because the restriction is only to the owner of the property, not to the supplier. But sir, a construction contractor or a works contractor, outward supply is 1.5% without ITC, 7.5% without ITC. The applicable rate of GST on flats is 1.5%, 7.5% without ITC. Then how they can take the credit? Not only that, if they are constructing any commercial properties, the rate of GST is 18% with ITC. So therefore they can definitely take the credit proportionately. So here, suppose if their outward supply is taxable at 1.5%, 7.5%, whose outward supply? The builders outward supply 1.5% or 7.5%, proportionately they cannot take credit. But if their outward supply is taxable at 18%, definitely they can take the credit. That's what I have given below. Sale of building by a promoter or builder when covered under supply. So when it is covered under supply, sale of building, so only when part of the consideration is received before completion certificate and remaining part is after completion certificate, or entire amount received before completion certificate, then it will be covered under supply. If entire consideration is after completion certificate, then it will be excluded from the supply. So when it is excluded from the supply, we don't have to bother about ITC at all. When it is covered under supply, and what will be the rate of GST? If it is residential flats, 1.5%, 7.5%. If it is commercial complexes, 12% or 18%. So when their outward supply is 1.5, 7.5, they cannot take ITC, because that is without ITC. When their outward supply is 12% or 18%, they can take ITC, because that is with ITC. So like proportionate ITC they will be able to take. Okay. Then next, what is the difference between a construction and a works contract? Construction means pure labor contract, there won't be any material involved. But in case of works contract, there will be material as well as services. There will be transfer of property in goods as well as services in relation to immobile property against a single consideration. Okay. So then it will be called as, works contract service. Now, one second. Other block credits. You can see that other block credits, inward supply. Inward supply is membership of a club, health and fitness center is a block credit. So any membership taken, so social members, social club membership or etc., on that, even though it is used for business purpose, but the GST paid cannot be taken as credit. However, we have one exception provided by employer to employee under a statutory obligation. We don't have anything under that category. So because generally statutory memberships, whatever they need to take, so all those memberships are exempted. So employer will be taking statutory membership from ESIC, Employee Provident Fund Organization, etc. But those memberships are actually exempted. because any money collected by EPFO, ESIC is exempted. So due to that reason, we don't have anything right now under this exception. But remember, membership of a club, health and fitness center. Suppose gym membership given by the employer to employee, ITC not available. Suppose if a chartered accountant take the membership of a social club, ITC not available. Then suppose if they take membership of ICI or ICMAI, etc., like that memberships of that professional bodies, if they take, will it be coming under ITC? Will it be coming under ITC? So actually this is an interpretation issue. So they use the word membership of a club. Membership of a club means ICI, ICMAI, ICSI is not a club. So due to that reason, so credit can be taken and it is used in the course or furtherance of business. You understood or not? Then travel benefits to employees on vacation. Travel benefits extended to employees on vacation is a block credit. However, if it is provided by employer to employee under a statutory obligation, the employer has to send the employee on vacation. Yes, it is there mainly for workers. So in case of labor force, that in Karnataka government they have given something of that sort for northeastern state people. So yes, under a statutory obligation, if the employer is sending the employees on vacation, then the GST paid can be taken as credit. But remember, it is only for employees. What if a statutory auditor who signed a report and who is, it's very much satisfactory, then the company has sent the statutory auditor on a vacation, whether that expenditure incurred be available for ITC? Yes, because statutory auditor is not an employee of the company. But it's a hypothetical situation, they will not send and all. But for example, I am telling you, and suppose if directors and all are going for vacation, whether the ITC is available? Yes, ITC is available, because here the restriction is only to the employee. Then suppose if employee is sent on a business visit, then also ITC is available. And non-resident taxable person, NRTP, who is coming from outside India to India, is not having any physical place of business, cannot take any ITC, but a casual taxable person can take the ITC. NRTP cannot take the ITC. Only with respect to one they can take ITC, that is with respect to import of goods by NRTP. Okay. Then food and beverages, outdoor catering, beauty treatment, including cosmetic, plastic and hair transplantation, life insurance, health insurance. We can put it into three simple points: food, beauty, insurance. Okay, related to food. So related to food is what? Food and beverages, outdoor catering. Related to beauty, beauty treatment, then hair transplantation, cosmetic surgery, plastic surgery. Insurance to insurance, that is life insurance and health insurance. So these are block credits. But when it is available for ITC, first exception, if inward supply, outward supply are in the same category, which means that I am into the business of sale of food and beverages. I purchase the food and beverages. Can I take ITC with respect to food and beverages? Yes. Then inward supply is part of composite or mixer outward supply. For example, I am into the business of transportation of passengers by air, and I also provide food to my passengers. For providing food to my passengers, I purchase the food and beverages. Can I take ITC with respect to that? Yes. Then provided by employer to employee under a statutory obligation. That is, generally companies, factories are required to provide food to their workers who are working over there. Under that statutory obligation, if they are purchasing, that is food and beverages or outdoor catering, can they take ITC with respect to that? Yes. That is this. And I gave examples only for food and beverages. It does not mean for others it is not applicable. For others also these exceptions are there. That is for the beauty treatment as well as insurance. But beauty treatment and all will not be coming under statutory obligation. Which law will obligate beauty treatment? No, that's why. Then for the balance cases, that is import, that is for a composition scheme. This is actually repeated point, because in input tax definition itself, we have input tax excludes tax under composition scheme. Again it is repeated under block to credit. That is, if you are making purchases from a person opting for composition scheme, you cannot take ITC. And personal consumption, that is also a repeated point, because it should be used or intended to be used in the course or furtherance of business. If it is for personal purpose, we cannot take ITC, specifically given again in the block credit. And thereafter, goods lost, stolen, destroyed, written off or disposed of by way of gift or free samples. So this case, that is, whenever we purchase the goods and those goods are lost or destroyed, we cannot take ITC. Even when that goods purchased are given as gifts or free samples, also we cannot take ITC. However, If that gifts or free samples become supply, then we can take ITC. For example, an employer purchases a mobile smartphone and that smartphone is 60,000 rupees plus GST. Now that smartphone is given by the employer as a gift to the employee. Now in that case, is it supply? Yes. Employer giving gift more than 50,000 rupees per annum per employee will become supply. So it will be chargeable to GST. Now in this case, can they take ITC with respect to the smartphone purchased? Yes, they can take ITC because there is a CBIC circular which is given. See the note below. That is, if the gifts and free samples is treated as supply under 7(1)(c), then ITC is available with respect to the inward supplies. Okay, and then next one, if GST is paid under 74 or 129 or 130 or any other recovery proceedings, such GST is not matched ITC. Actually, this point is given as a block credit. That is, GST paid under section 129, 130 or 74. First of all, that supplier would not have reported it in GSTR1. That's why recovery will come into existence, correct or not? If he has reported in GSTR1, why recovery will be 74? Recovery will be 73. So 74 will come only when he is not reporting. He reports in GSTR1, that is self-assessed tax PA. Self-assessed tax recovery will be either 73 or 79. So therefore, definitely it will be available for ITC. But suppose if he is not reporting in GSTR1, then only the recovery will be under 74 or 129, 130. Then in that case, whatever GST we paid, but he did not pay, can we take it as ITC? No, because he has not reported it in GSTR1 and we cannot take it as ITC because it is not a matched ITC. That is this point. Then whether drinking water ITC is available. Beverages. What drinking water? Is it metro water, bore water or any other water or Bisleri mineral water? Mineral water will come under beverages. Mineral water will come under beverages. What about RO plant? RO plant, why we pay for water? We pay for the plant. We are not paying for the water. So RO plant we can take ITC. Why? Because it is used for business and used in the course or furtherance of business, not in the block credit, we can take ITC. Suppose if bottles, water bottles are purchased, where sir, they are purchasing Bisleri and all, they are purchasing Himalayan water and now some black water and all is there, Evictus, so that they are purchasing. So definitely on that, GST paid cannot be available as ITC because that comes under the category of beverages. Then look into this, ITC in special circumstances. So section 18, we completed up to section 17 here, input tax credit in special cases. So section 18 subsection 1 talks about availment of ITC on closing stock. In which case, total 4 situations, 18, 1A, 1B, 1C and 1D. 1A is whenever a person is under liability to get registered and they got registered within 30 days, they made application for registration within 30 days, before the date they are liable to get registered, whatever is the closing stock, on the closing stock GST paid can be taken as ITC. What is the meaning of closing stock? Inputs as such held in stock, inputs in WIP and inputs in FG, on that we can take ITC. And whereas if it is a person who voluntarily get registered, then it is 18(1)(b). In case of 18(1)(b), we can avail ITC on closing stock, inputs as such held in stock, inputs in WIP, inputs in FG, same. But only the situation is different between 18(1)A and 1B. 18(1)A liable to get registered and you are making application for registration within 30 days. 18(1)B, you are voluntarily getting registered. And which date closing stock should be taken? In 18(1)A, we need to take the closing stock before the date we are liable to get registered. In 18(1)B, we need to take the closing stock before the date when we get the registration certificate. Then 18(1)C, 18(1)D is whenever you were under composition scheme. From composition scheme, you are going into normal scheme. Then in that case, at the time when you were in composition scheme, you would not have taken ITC. So that closing stock, you can take ITC. What is the meaning of closing stock for 18(1)C? Inputs as such held in stock, inputs in the form of WIP, inputs in FG, and capital goods also. But capital goods full credit cannot be taken. Why full credit cannot be taken? We need to take total ITC minus 5% for every quarter or part thereof from the date of purchase till the date of conversion, because the value of capital goods would have been come down because you are using it for composition scheme for some period. So we need to reduce 5% and remaining credit can be taken. Understood? And this credit when we are taking, so then whether the provisions of rule 43 will be applicable? No, the provisions of rule 43 will not be applicable, which means we can take this as credit, and here we can take this life of the capital goods as the next 60 months also. Got it? We can take the life of this capital goods as next 60 months also. So that provisions of rule 43 will not be applicable, which says that whenever you are taking a capital goods like this, so the balance life only will be taken as the life of the capital goods, but that restriction is not there here. And next, one important point is that in case of 18(1)(c) there is matching. In case of 18(1)(a)(1)(b) there is no matching, but in case of 18(1)(c) there is a matching. And 18(1)(d) also, that is whenever your exempted supplies becomes taxable. When your outward supplies was exempted, you would not have taken credit, and that will be there in the closing stock. On that closing stock, GST paid can be taken as credit now. So because now it becomes taxable, and therefore this credit also the same line with 18(1)(c). So what is taken as credit? Inputs as a children stock, inputs in WIP, inputs in FG, capital goods as reduced by 5% for every quarter or part thereof. So what is the difference between 18(1)(a) and 1(b)? Situation difference. So 1(a) liable to get registered and they are making application within 30 days. What if the application is made beyond 30 days? 18(1)(a) benefit is not applicable. 18(1)(b) is you are not liable to get registered, voluntarily you are getting registered. And another difference between 1(a) and 1(b) is the closing stock date. Before the date they are liable to get registered, whatever is the closing stock that should be taken, and in case of 18(1)(b), before the date they get the certificate of registration. What is the difference between 18(1)(c) and 1(d)? In case of 18(1)(c), so we need to take the ITC with respect to inputs, input service, capital goods, but that is in case when composition scheme to normal scheme. But 18(1)(d) exempted supplies becomes taxable supplies. That is the difference between 18(1)(c), 1(d), and situation difference as well as closing stock date is same, conversion date. That is before the date they are going from composition scheme to normal, before the date their exempted supplies becomes taxable. What is the difference between 1(a), 1(b) versus 1(c), 1(d)? 1(a), 1(b) there is no matching, 1(c), 1(d) there is matching. 1(a), 1(b) there is no credit on capital goods, 1(c), 1(d) there is credit on capital goods. And input services you will not get anywhere here. Input services you will not get anywhere, only inputs and capital goods. Then 18 subsection 1(c), 1(d), one important point is there, that is applicable only to a registered person, because this is one question which is already tested in exam. That is a person who is getting registered now only. Until that point of time he was making exempted supplies. He was making exclusively exempted supplies. So as per section 23 he is exempted from registration. Now his exempted supplies becomes taxable. So therefore he is liable to register, and he made application for registration and he purchased some capital goods. Can he take credit on capital goods? Every student has applied in that attempt that they can take credit on capital goods, and 18(1)(d) was applied. But first of all 18(1)(d) is applicable only to a registered person. Read that. So registered person's exempted supplies becomes taxable. Registered person is going into normal scheme from composition scheme. So only for registered person that will be applicable. And then 18 subsection available. So all these inputs and capital goods should have been purchased within 1 year prior to the closing stock date. And this ITC can be taken through a declaration in ITC 1, and that ITC 1 should be duly certified by a practicing CRCMA. Suppose if the claim of ITC exceeds 2 lakh rupees. And what is the time limit within which this ITC 1 should be filed? Within 30 days from the date when they are eligible. 18(1)(a) when they are eligible, post registration certificate. 18(1)(b) post registration certificate. 18(1)(c) the moment when they go into normal scheme. 18(1)(d) whenever their exempted supplies becomes taxable. From that time, within 30 days they need to make this application in ITC 1 for the purpose of taking credit, and this credit will be coming into their electronic credit ledger. Okay. Then next one, transfer of ITC 18 subsection 3. Whenever there is a transfer of business, that transfer of business is subject to the provision that there is transfer of liabilities. Any business will be transferred with specific provision for transfer of liabilities, provided the business is transferred as a going concern. So then in that case, whatever is the unutilized ITC in the credit ledger of the transferor can be transferred to the electronic credit ledger of the transferee. And for that one form needs to be filed, that is ITC 02. In case of amalgamation of two companies into a single resulting company, then two companies will be filing ITC 2, so both the credits will get merged into one single company. But in case of demerger from a single company, when it is going into two companies, resulting companies, then in that case how the ITC will be distributed? Is there any ratio to be followed? Yes, we need to follow total assets ratio. So here assets means whether we need to take the value of assets of ITC related assets or non-ITC related assets also. All assets. All assets should be taken for the purpose of distribution of credit. In case of demerger, credit shall be transferred to the new entities in the ratio of net assets, whether ITC availed or not on such assets post demerger. And ITC2 should also be certified by a chartered accountant, cost accountant, irrespective of the amount. ITC1 should be certified by a CACMA only when the amount exceeds 2 lakhs. But ITC2 should be certified by CACMA irrespective of the amount. And here the certification is not about how much balance of ITC is there. It is about that the business is transferred with the specific provision for transfer of liabilities. That is only the certification that is required. And whenever there is a transfer, that also includes sale, amalgamation, merger, demerger, even change in constitution from firm to company or partnership firm to, that is from individual to partnership firm, everything will be covered, even death of a sole proprietor. So whenever there is a death of sole proprietor and there is a succession, in that case also 18(3) is applicable. So the successor, legal successor, can file ITC2 in the name of his father and the ITC gets transferred to him, unutilized ITC gets transferred to him. But remember, the legal successor cannot continue in the same registration, so he need to get a new registration to be done. Then next one, transfer or change in ownership of business will also include transfer or change in ownership due to death of sole proprietor. Then, so this particular point, actually this is not given in the law, but this is given in the portal. Transferor and transferee should be in the same state. This restriction is as per GST portal. Suppose if the transferee is in another state, we cannot transfer this credit. So this is not specifically given in the law, but this restriction is there in the GST portal. So therefore, in exam, suppose whenever you are coming across, so if it is MCQ, be careful. You write that even if the transferee is in another state, the ITC can be transferred, because law wise there is no restriction, but the restriction is only given by the portal. Okay. So suppose if it is a descriptive question, you write that as per law there is no restriction. However, practically as per the portal there is a restriction. So this point you need to stress upon. Okay. And when a single registration gets converted into multiple registrations, in that case also, from the single registration to multiple registrations, ITC will be transferred. For transfer of this ITC, they will be filing one form. What is that form? ITC 2A. ITC 2A form will be filed. And here in what ratio the assets will be transferred? The assets will be transferred in the ratio of assets. Assets on which date? Assets on the date of registration, new registration. In case of demerger, we need to take assets on the date of demerger. Assets on the date of demerger. Then 18 subsection 4 read with section 29 subsection 5, reversal of ITC on closing stock, that is opposite of 18(1)(c), 1D. 1C is composition scheme to normal scheme. Now it is normal scheme to composition scheme, 18(4). And 18(1)(d), taxable exempted supplies became taxable. Now taxable supplies are becoming exempted. And this is also connected to section 29, cancellation of registration. 29 subsection 5. In these three cases, we need to reverse the ITC on closing stock. What are the three cases? That is, a person is going into composition scheme, or his taxable supplies have become exempted, or there is a cancellation of registration. So what is the meaning of closing stock? Same meaning what we have in 18(1)(c), 1D. That is inputs in FG, inputs in WIP, capital goods. But how to do the reversal? For that inputs in FG and inputs in WIP, we need to find the purchase invoice on which how much ITC we avail. What if the purchase invoice is not available? In that case, you need to take the market value prevailing as on today. While taking ITC, if you don't have invoice, no matching, don't take ITC. But reversal, you have to. Even if you buy 4 years before or 10 years before also, you need to reverse. Suppose if you don't have invoice, what you need to do? Take the market value as on today, and that market value, you need to get certified from a CA or CMA, and that market value into GST rate should be taken. In case of capital goods, what we need to do? While doing the reversal, we need to take total ITC divided by 60 months into balance useful life. That is the ITC to be reversed in case of capital goods. So we are under composition, normal scheme going into composition scheme, or taxable supplies to exempted supplies, cancellation of registration. We need to take inputs as such, inputs in WIP, inputs in FG. These three inputs, how much ever GST paid, that much you would have availed as ITC. Now ITC reversed equals to GST paid. Then capital goods. Capital goods, how much is the reversal of ITC? Total GST paid divided by 60 months into balance useful life. And inputs on capital goods can be purchased any time on which ITC availed. If ITC is not availed on such inputs and capital goods, then the reversal shall not arise. What if the capital goods are purchased 5 years before? 5 years before, if it is purchased, divided by 16 to balance useful life will be 0. So therefore reversal shall not arise. Suppose if the invoice pertaining to that inputs are not available, then we need to take the market value as on the date of closing stock, and that should be certified by a practicing CRCMA. And for this reversal, we need to file one form, that is ITC 3. ITC 1, availment of ITC on closing stock. ITC 2, that is transfer of ITC. ITC 2A, transfer of ITC from single registration to multiple registrations. ITC 3, that is in case of reversal of ITC on closing stock. Suppose we reverse the ITC on closing stock, still there is some balance in ITC. What will happen to that balance in ITC? That will be lapsed. Next, if there is any shortfall for reversal, then the shortfall shall be payable in the cash ledger. For example, 1,50,000 we need to reverse, 2 lakhs we have, so 1,50,000 we will reverse. What is the balance? 50,000. That will be lapsed. What, you are getting sleep? No. I can't do anything. I have to discuss. Okay. So I cannot deviate because I need to take the class. It's a rocket revision. Okay. So you should have slept yesterday. Who asked you to do night out and all? So I did not ask. Okay. So maybe you might be watching and slept somewhere. Might have went to US, UK and all and come back. So please don't sleep. So if there is any shortfall for reversal, then such shortfall shall be paid using cash ledger. That is 2 lakh rupees and 1,50,000 is the reversal. So 50,000 is lost. And suppose if 1,50,000 we need to reverse and 75,000 only credit available, so remaining 75,000 we need to pay. Then computation to be made separately for CGST, SGST and IGST. That is like this point, you remember in exam, whenever they give GST, you do single computation. Whenever they give CGST, SGST and all, you do the columnar presentation. That is CGST separately, SGST separately, IGST separately. When the question talks only about GST, you do only GST. Then section 19. So section 18 we completed. 18.1 availment of ITC on closing stock, and then 18.2 time limit 1 year. 18.3 transfer of ITC. 18.4 reversal of ITC on closing stock. 18.5 is application of rules that we have not discussed because it is inbuilt into this discussion of 18.1 to 3 itself. And then we have 18 subsection 6, that is payment of GST on capital goods, we discussed in the beginning itself. Job work provisions section 19, that is whenever the goods are sent on job work, wherever you refer to section 19, you refer with section 143 of CGST Act. That is, we are sending the goods on job work, and at the time of sending the goods on job work, we don't have to reverse the ITC availed on that goods, provided the goods are returned within 1 year or 3 years as the case may be. 1 year in case of inputs and 3 years in case of capital goods. I am purchasing some inputs, I am sending it for job work. On that inputs I availed ITC, I am sending it to the job work. Now from the job worker, the goods should be, that is the processed goods should be back to my place within 1 year. And can it be extended? Yes, it can be extended for a further period of 1 year. So 1 year plus 1 year. And in case I purchase some capital goods and that capital goods I am sending it to the job worker, I should ensure that the capital goods are returned within 3 years. Can this 3 years be extended? Yes, 3 years can be extended for a further period of 2 years. So 3 plus 2. And suppose if I am purchasing some molds and dies, concentrate, molds and dies, jigs and fixtures and tools, not refractory bricks. Refractory bricks is for 18.6. So molds and dies, jigs and fixtures and tools I am purchasing, and that I am sending to the job worker. There is no condition to bring it back within 3 years or 5 years as the case may be. Means we don't have to bring it back, we can enjoy the ITC. So this section 19 read with 143 is not applicable in case of, come on, molds and dies, jigs and fixtures and tools, applicable in case of other capital goods. Then what will happen if the goods are brought back within that time? No need of any provision. So deemed supply and all will not be invoked. Suppose if the goods are not brought back within that time limit, then section 19 talks about deemed supply. The day when we are sending it to the job worker, it is deemed as supply now. Okay. So capital goods to be received within 3 years when it is sent to job work, and input should be received within 1 year when it is sent to job work. And suppose if it is sent from the principal place of business, it should be received back within the time from the date when it is sent from the principal's place. But suppose if the job worker directly receives it from the principal's supplier, for example, I am the principal, I am sending the goods on job work to you. So from my supplier's place directly if you receive, from the date when you received, that 1 year or 3 years should be counted. Suppose if I purchased it and again I am sending it to you, then from the date when I am sending it to you, from there 1 year or 3 years should be counted. Then ITC not required to be reversed by principal when goods are sent on job work, and such goods should be sent under the cover of a delivery challan. And e-way bill. E-way bill is mandatorily required irrespective of the value. Actually, value restriction is there for e-way bill. If the value does not exceed 50,000, e-way bill is not required. However, in case of two goods, e-way bill is definitely required even if the value does not exceed 50,000. Goods sent on job work and handicrafts. Very good. Handicrafts. In these two cases, we need to give the e-way bill. So therefore, here the goods are sent on job work. So therefore, delivery challan plus e-way bill. Suppose if the goods are directly received by the job worker also, ITC can be availed by the principal under bill to ship to transactions. So that is deemed delivery concept. The day when job worker has received the goods, it is deemed that the principal has received the goods and the principal can avail ITC. Then some additional points. Who will take the ITC on the goods? Principal will take, and job worker will take ITC on the goods purchased by the job worker for the purpose of doing the process on those goods. And if it is not returned, suppose if it is not returned, then what will happen? So it will be like so much of the ITC that is availed. Now it will be treated like a supply. Now it is treated as supply. After 1 year or 3 years, it will be treated as supply, and we need to pay GST along with interest. Then if processed goods or capital goods are returned after 1 year or 3 years, it is treated as a new supply by the job worker and chargeable to GST. Suppose within 1 year it is not returned, 3 years not returned, so the principal treated it as supply and charged GST, that is along with interest he is paying. Thereafter job worker returned after 1 year or 3 years. Now again he will not avail the ITC back, rather for the job worker it is treated as a new supply, new sale. Then the period of 1 year can be extended for a further period of 1 year, and the 3 years can be extended for a further period of 2 years. And if the job worker is not registered, principal should declare job worker's place as the principal's additional place of business. And jurisdictional officer must be intimated about job work contract. Processed goods may be brought back to principal's place or can be sold directly from the job worker's place. And all the goods which are sent on job work and received from the job work should be reported to the government in one form. What is that form? Form GST ITC 4. And that form GST ITC 4 is to be filed previously by 25th of the month following every quarter. But now it has to be filed by 25th of the month following half year. So in case the aggregate turnover during previous year exceeds 5 crores. If the aggregate turnover during previous year does not exceed 5 crores, yearly once only they need to file, that is annually by 25th April. Whereas if it is aggregate turnover exceeds 5 crores, half yearly they need to file. So that is for up to September it is 25th of October, up to March it is 25th of April. So this is about section 19 read with 143. Then section 20 and 21. 20 and 21 input service distributor. So what is an input service distributor? A head office which will be receiving the input services, avails the ITC with respect to that input service, will be distributing that to the branches which are under the same permanent account number. And when they are distributing the credit, very important, so few points you need to remember that they need to distribute total credit on input services, only input services, not inputs and capital goods, only input services, total credit, even blocked credit should be distributed, ineligible credit should be distributed. Sir, one of the branches engaged in exempted supply, distribute. One of the branches engaged in non-business purpose, distribute. That inward supply is a block credit, distribute. Everything should be distributed. So therefore, that division which will be to which it is distributed, suppose if it is a block credit, the division will not take, and suppose if it is used for exempted supply, the division will not take. But while distribution, you need to distribute it uniformly to all the branches, and in what ratio it should be distributed, that is the second important point. First important point is every credit should be distributed, and second, in what manner it should be distributed. Suppose if that input service pertains to only one registration, one division, or one branch, but the invoice is raised to the head office, the entire ITC will be distributed to that particular division or branch. Suppose if that input service pertains to 2 divisions, then the credit will be distributed to the 2 divisions only. And suppose if it is a common input service, advertisement, audit, software, etc., like that, the common activities, so then the credit will be distributed to all the divisions in what ratio? Turnover ratio. In what ratio? Turnover ratio, the credit will be distributed. Okay. Which year turnover? Previous year turnover. If you don't have previous year turnover, then take the current quarter, that is previous quarter. For the current quarter, you take the previous quarter turnover. That is second point. Then third point, important point that you need to remember is CGST credit will be distributed as CGST, SGST as SGST, IGST as IGST if that head office and the division is in the same state. If the head office and division is in different state, then all 3 will be distributed as IGST credit. CGST and SGST distributed as CGST, SGST for the unit in the same state, and distributed as IGST if the unit is in the different state. Input service attributable to 1 unit, distributed to that unit. 2 or more units in turnover ratio. To all units which are operational based on turnover ratio. So turnover of previous financial year or last quarter should be considered. Then some additional points in this regard. Whether ITC is to be distributed on a monthly basis or quarterly basis or yearly basis, only monthly basis. They need to file one return mentioning the details of ITC distributed GSTR 6 by 13th of the month following every month. Excess distributed ITC can be recovered by issuing ISD credit note. That is, suppose if some ISD credit is excessively distributed to 2 divisions. For example, 3 divisions are there, A, B, C. So for that A, B, C, so 4 lakhs and 6 lakhs and 3 lakhs are distributed. But this is what is distributed. But what they should have distributed, is 4 lakhs and 5 lakhs. 4 lakhs and 5 lakhs should have been distributed. Now they have excess distributed to division B, correct or not? So this is what they have distributed part. This is what it should have been distributed. So the excess distributed to division B. For division B, a ISD credit note should be given. ISD credit note for what? For what? That is already 6 lakhs distributed. To bring it down to 4 lakhs, ISD credit note for 2 lakhs should be given. What about division C? ISD invoice regular. For distribution of credit, ISD invoice. For reduction of excess distributed credit, ISD credit note. That is this. Shortfall in the distribution can be distributed by using ISD invoice. And distributed credit should not exceed the credit available for distribution. Suppose if they distribute excess credit, what will happen? That is an offence under section 122 subsection 1, biodiscredits TFT, and that leads to penalty 10,000 rupees or 100% of the ITC distributed, whichever is higher. And it is not a penalty, it is not an offence for imprisonment, correct? ISRDSTT, in that it is not a offence for imprisonment. Then if the ISD has distributed excess credit to any recipient, the excess can be recovered from the recipient only. Means suppose they did not give ISD credit note. Suppose if they did not give ISD credit note, then what will happen? Then department will give a notice under section 73 to division B for the purpose of recovery of the 2 lakhs. For the purpose of recovery of the 2 lakhs along with interest, the notice will be given to division B asking him to pay the 2 lakhs with applicable interest. Okay sir, then the 2 lakhs collected by government, will they give it to division C? For that we don't have any provision. For recovery only they gave a provision. For returning they did not give any provision. Okay. So if ISD has distributed excess credit to any recipient, the excess can be recovered from the recipient with interest. Then, so this is atrocious. My credit I am distributing to my own people. Who the hell you are to tell? Okay. So you are an outsider. Actually government is an outsider. Say my division spa I will give or I will not give, or I will throw it in Bay of Bengal. It is my money, my wish. So in that, who are you to tell? So atrocity it is. ISD should obtain compulsory registration irrespective of aggregate turnover. So that ISD has to obtain separate registration. So this section 20 and 21 is not being followed by Big Four SPA. Big Fours, they have created a new mechanism called as cross charge. by copying from European Union GST, they copied that cross charge mechanism, and that cross charge mechanism only they are advocating to all the clients, and they are following cross charge. That is, one person will be raising invoice to the other person. Why we need to have ISD, turnover, all these stupid points and all? No need. So that's where GST Council has tabled that for discussion. So in the forthcoming meeting, already they appointed a committee to look into whether this should be there or not. Suppose if it is omitted, then this will be the last attempt for which it will be asked. Okay. Then that is with respect to this. We completed input tax credits. Okay. And one important point, sorry, I forgot. It is there. You write. Note. While computing turnover under rule 42, 43 and under section 20, while computing turnover under rule 42, 43 and under section 20, old IDT, what is that? Excise duty, service tax will not be there, excise duty, then CST and VAT should be excluded. Excise duty, CST and VAT should be excluded. Why it is to be excluded? Because generally this point we don't have to remember separately, because section 15 subsection 2 clause A says all taxes and duties other than GST should be included in the value. Then logically old indirect tax also should be included in the value, but here specifically it is given that this old indirect taxes should be excluded. So don't forget this. On this also a question can be coined. Okay, so that is it. Then everything I have covered. Okay, so we'll take a break and we will meet at, now it's 10:55, we'll meet at 11:10, but come soon, 11:10 we will be starting with liability to pay tax and exemptions. Okay. Okay, we'll start. So there are few queries for some students. Let me clarify those queries and then proceed. So here, while determining the time limit for issuing credit note, due date of filing and return or actual date of filing and return, which one have to be considered? So definitely actual date only, not due date, because yesterday I was discussing that the time limit for rectification of return and the time limit for issuance of credit note and the time limit for availment of ITC, in these three places we have A or B, whichever is earlier. In that B is the actual date of filing and return, not the due date of filing and return, actual date of filing annual return. Then next, section 129, when redemption fine is calculated for section 67, its market value of the goods minus tax chargeable. Is this amount of tax chargeable includes tax payable plus penalty? No, only tax. So the maximum redemption fine under section 130 not 129, 130 is, so market value of the goods minus tax chargeable thereon. So that market value of the goods means the normal market value of the goods. Tax chargeable is the tax payable on those goods. That only should be taken, not tax and penalty. That is the maximum, but they can levy less than that also. Then ITC 4 is not filed, any penalty applicable. We don't have any specific penalty, so the general penalty, that is up to 25,000, will be applicable. Then yes, that's your doubts. So now we are moving on to segment 2. Please take page number 24. Liability to pay GST. There are three sections which are applicable here, three subsections, that is 9.4, 9.3 and 9.5. First, 9.1 says alcoholic liquor for human consumption will not come into the ambit of GST and it is indefinitely excluded from the ambit of GST. Whereas 9.2 says petroleum products, that is crude oil, petrol, diesel, aviation, turbine fuel and natural gas, will be excluded from the ambit of GST till the time GST Council decides. Whenever GST Council decides, it will come into the ambit of GST. I am also telling this from 2017. Then 9.3 says that in case of notified goods and services, liability to pay GST is on recipient. And so list of goods and list of services are notified, but this list of goods are not applicable for exam. List of services are only applicable for exam. And who will be liable to pay GST? The recipient is liable to pay GST. Supplier can be registered or unregistered. What about recipient? That recipient has to compulsorily get registered. However, if they are covered under 23, they are exempted from registration. If they are not covered under 23, then a person who is liable to pay GST under RCM 9.3 is compulsorily required to get registered. Then 9.4 is applicable whenever there is inward supplies of a registered person, that is promoter or builder, purchases by a promoter or builder from an unregistered supplier. A promoter or builder making purchase from an unregistered person is required to pay GST under RCM. So that is given under 9 subsection 4, and here recipient only will pay. And who is the supplier? Supplier is some person who is supplying the goods to promoter or builder. Should he be registered or unregistered? Definitely he should be unregistered. If he is registered, 9.4 is not applicable. So only when purchase are from an unregistered person, 9.4 is applicable. Then 9.5. 9.5 is there are some notified services supplied through e-commerce operator. When it is called as supplies through e-commerce operator, the supplier and e-commerce operator should be different. If the supplier is having their own e-commerce portal, through that if they provide services, that will not be called as supplies through e-commerce operator. So the e-commerce operator should be different. And what are those notified services? HATE. So some students ask me, sir, you can also call it as heat na. Why negative word hate? I'll tell you the reason now. H and A has one treatment, that is the supplier should be unregistered, then only it will come under 9 subsection 5. But T and E, one treatment, that is whether the supplier is registered or not, it will be coming under 9 subsection 5. That's why I just made it that way. Okay. So H for housekeeping service, A for accommodation service, and T for transportation of passengers. Here in case of transportation of passengers, there is an amendment part, that is transportation of passengers by any motor vehicle is covered under 9 subsection 5. Transportation of passengers by any motor vehicle. So it need not be. Previously red bus and all was not covered under 9 subsection 5. There is a bus operator who is listing their bus services with red bus, and they will be providing services to the passenger. Previously it was not covered because previously it was transportation of passengers by motor cab, maxi cab, motorcycle, but now they included any motor vehicle, so it will be coming under 9(5). However, motor vehicle means it do not include trains and aeroplanes. So therefore in this case, suppose if Goa Ibibo or Make My Trip books the flight tickets, will it come under 9(5)? No, it will not come under 9(5). 9(5) will come under transportation of passengers by any motor vehicle, usually by road transportation. Then E for eating food from the restaurant. Eating food from the restaurant, that is Swiggy, Zomato is covered, and in case of housekeeping services and accommodation services, H and A, it will come under 9(5). In 9(5), who will pay GST? Liability to pay GST is on e-commerce operator, and in case of H and A, it will come under 9(5) only when the supplier is unregistered. If the supplier is registered, it will not come under 9(5). Whereas in case of T and E, that is transportation and eating food from restaurant, it will come under 9(5). Whether the supplier is registered or not, it will always come under 9(5). Liability to pay GST is on e-commerce operator. For example, if a Ola driver is unregistered, so liability to pay GST is on e-commerce operator on the transaction. If the Ola driver is registered, also e-commerce operator only. If a restaurant is unregistered because your aggregate turnover does not exceed threshold limit, so then e-commerce operator only will pay. If the restaurant is registered, then also through e-commerce operator only will pay GST. Then restaurant will pay GST on what? On the direct supplies to the customers. So that GST only they will pay, but through e-commerce operator will pay. Got it? And what will be included in the aggregate turnover of the restaurant? In the aggregate turnover of the restaurant, we will be including, so only that part what they get from the e-commerce operator. For example, I have a restaurant and I am selling food through Swiggy or Zomato, they will take 30%, they will give me 70%. So what will be included in my aggregate turnover is only that 70% portion, because I am not raising invoice is raised by the e-commerce operator, and because who is liable to pay GST, they only should raise the invoice, then only that 70% component will be included. Because some places, some faculties are telling that so 100% will be included in the restaurant's turnover. No, definitely no. A circular is also given for that, supporting that whatever is the money received by the restaurant, that will only be included in the turnover of the restaurant. Logically, whatever they are getting only should be included. Now, with respect to direct supplies, what should be included in the restaurant's turnover? So whatever invoice that they are raising, that will be included. Then another important point also is there. So here also there is some confusion with many. That is, generally restaurants outward supply will be taxable at 5% without ITC, which means that restaurants cannot take ITC on their inward supplies. Now, when they are supplying food through e-commerce operator, now e-commerce operator will pay GST, same 5%. Now, in that case, can e-commerce operator take ITC? Yes. Here, the intention behind the lawmaker, why they are giving no ITC is on the food items purchased for cooking the food, so they should not be given. Even if e-commerce operator is paying GST, but the food items, that is rice, dal, vegetables, etc., is not purchased by e-commerce operator, purchased by restaurant only. Then whatever is the inward supplies of the e-commerce operator is not purely related to restaurant service, it is related to their business, they can take ITC. So, if the restaurant is paying GST at 5%, they cannot take ITC on their inward supplies. On the same restaurant service through e-commerce operator, if e-commerce operator is paying GST, they can take ITC. You understood or not? So this is one point, please keep in mind. Then, so supplier, housekeeping service and accommodation service, supplier will be liable to, that supplier should be unregistered, then only e-commerce operator will pay. Whereas T&D, supplier registered or unregistered. So this is the snapshot of 9.3, 9.4 and 9.5 overview. Then 9.3. Whenever you are referring to 9.3, you should also refer to the notification 13 of 2017. There are two notifications, three notifications perhaps you need to definitely remember. Notification 12 2017 talks about exemptions. Whenever you are writing about exemptions, you need to refer to section 11 read with notification number 12 2017. Whenever you are writing the said service is exempted, definitely in exam without exemption the question paper will not be there. Of course, if you write this you will get exemption also. So then section 9.3 read with section 93 read with, so notification 13/2017. So this is for RCM. So definitely we will be writing this also, okay, because without exemption and RCM, indirect tax paper will not be there. So now you need to think where and all I can write, okay. So whenever we learn something, not that only when they ask we need to write, wherever possible we can, okay. So then next, so section 12 subsection 2 read with, section 12 subsection 2 read with notification 66/2017, that is no GST on advances, no GST on advances in case of goods, no GST on advances in case of goods. So these are the three notifications that you need to remember. Notification 12/2017, section 11 read with notification 12/2017 for exemptions, section 9 subsection 3 read with notification 13/2017 for RCM, section 12 talks about time of supply in case of FCM subsection 2 for goods, read with notification 66/2017, no need to pay GST on advances in case of goods. Now, so this notification 13/2017 gives some list of services. In case of these services, liability to pay GST is on recipient. Now what you need to remember here is that who is the supplier, what is the service, who is the supplier, who is the recipient, is there any conditions and special points. Exemptions we have, exemptions also we will connect later, but first we need to understand who is the supplier, who is the recipient, what is the service, and is there any conditions or special points. First we will complete that. Number 1, yes refers to security lending. So you need to remember this with a keyword, sir CG got salads. Yes refers to security lending. In case of security lending, who is the supplier? Lender of the securities. Who is the recipient? Borrower of the securities. And who is liable to pay GST? Borrower of the securities. In case of all 9(3), liability to pay GST is on e-commerce operator. Is there any special points in this regard? Conditions or special points? No, nothing. So first one, security lending, supplier, lender of securities, recipient, borrower of securities. Any conditions or special points? No, leave it. Then next, I for import of services. In case of import of services, supplier is located outside India, recipient is located in India, and any conditions, special points? Yes, that is in case of OIDR services provided to a non-taxable online recipient in India, liability to pay GST is on the supplier located outside India. That is only in case of OIDR services. Okay, first we will quickly complete this, then I will link to the exemptions also. Okay, so then number 3, R refers to renting of motor vehicle services. In case of renting of motor vehicle, supplier is the one who owns the motor vehicle, recipient is the one who is taking the motor vehicle on rent. And any conditions or special points? Yes, there are 3 conditions, only then RCM will be applicable. Supplier should be other than body corporate, recipient should be body corporate, and the rate of GST should be 5%, then only it will come under RCM, otherwise it will be FCM. And then C for copyright services. In case of copyright services, we have 4 copyrights, that is original literary, dramatic, musical and artistic works. Original literary means related to books. In case of original literary, who is the supplier? Author is the supplier. Who is the recipient? Recipient will be publisher, and in that case liability to pay GST is on publisher. And is there any conditions or special points? Yes. So the author can opt to pay GST under FCM. There is an option available to the author. First, primarily the liability is on recipient, but if the author opts to pay GST under FCM, so then author can opt to pay GST. Why author opts to pay GST under FCM is because they want to take ITC on their inward supplies, but there is a lock-in for 1 year, which means suppose if author opts to pay GST under FCM, for the next 1 year author only should pay GST under FCM. He cannot authorize the recipient to pay GST under RCM. Then, but RCM to FCM there is no lock-in anytime. So author can take up from the publisher the liability, but from author to publisher it will be 1 year, minimum 1 year author should have paid. And then in case of dramatic work, musical work and artistic work, the supplier can be any person and the recipient will be the producer or the music company. Liability to pay GST is on them. We don't have the option here. The option is only in case of original literary. And then we have G, Sir, CG. So in that, yes, security lending, I for import of service, R for renting of motor vehicles, C for copyright services. and G for GTA services. In case of goods transport agency services, supplier will be a transporter engaged in transportation of goods by road and issues a consignment note by whatever name called, then only he will be called as a GTA. Two conditions: they should be transporting goods by road and they should be issuing a consignment note, then only it will be called as a GTA. And the recipient will be consignor or consignee, and it will come under RCM. Any special points or conditions? Yes, there is a special point that GTA has option to pay GST under FCM, and suppose if GTA don't want to pay GST under FCM, so then it will be RCM. Is there any lock-in? No lock-in, which means with respect to each invoice, the GTA can decide to pay GST under FCM or RCM. And suppose if the invoice is raised for 12%, then GTA will pay GST under FCM. If invoice is raised for 5%, then the recipient will be paying GST under RCM. And can GTA pay GST under 5% FCM also? Actually, there is one clarification that is given, but that clarification says that yes, GTA can pay GST at 5% under FCM also without ITC, but that clarification is applicable for May 23 exams, even though it is right now at present it is available, but not for your exam. For your exam, you have to remember, the moment you say 12%, it will be FCM, GTA will pay. The moment you see 5%, it will be RCM. So liability to pay GST is on recipient, that is consignor or consignee, and there is no lock-in and all here. Then next, sir, CG got. G for government services to business entities. Here who is the supplier? Government. Who is the recipient? Business entity. Any special point? Yes. In case of renting of immobile property services by government to business entity, if that business entity is unregistered, liability to pay GST is on government only, except that all other cases government service to business entity will come under RCM. Only one case government will pay under FCM, that is renting of immobile property, and the recipient is unregistered person. Then sir, CG got. In the G over O for overseeing committee services to RBI. There is a overseeing committee. That overseeing committee is appointed by RBI to restructure the NPAs, that is the supplier, and the recipient is RBI. In that case, any special points? No. Liability to pay GST on RBI. Then T refers to TDR, FSI and long-term lease. TDR is whenever I have a property and that property under compulsory acquisition is taken over by the government. In that case, I will be given, instead of compensation, a TDR, that is like a virtual land, and in whichever area they have given TDR, in that area if already I have a property, I can enhance the FSI of the property using the TDR, or I can sell the TDR to any other builder to enhance the FSI of a property. FSI refers to floor space index. Floor space index means on a plot of land how much can be constructed is known as FSI. That is the maximum construction permissible, but there is a breach for it. That is breach in the sense like loophole is there. So when you can exceed the FSI, only through TDR you can exceed the FSI. This TDR builder will be procuring from the landowner who has surrendered their land to the government. So this TDR, whenever this landowner is selling it to the promoter, for that the landowner will get consideration, either monetary or non-monetary. On that consideration, the liability to pay GST is on that promoter or builder under RCM. Same way, FSI. FSI refers to floor space index. On a given plot of land, how much I can construct is known as FSI. Suppose if there is unutilized FSI, say the FSI is 3 and I have used, for example, I have 2000 square feet and FSI is 3, means 6000 square feet I can construct, but I constructed only 3000 square feet. Remaining 3000 square feet is unutilized FSI, that I can give it to the promoter or builder and he will do the construction on that, and therefore he will be giving me some money for doing that construction, and on that I will not pay GST, the promoter or builder only will pay GST. Then long-term lease of land. Long-term lease of land means lease for a period greater than or equal to 30 years is known as long-term lease. In case of long-term lease, on the lease rental, the landowner will not pay GST, but the promoter or builder will pay GST, because using that land they will be constructing some leasehold. On leasehold land they will construct some flats and they will be giving for the lease period, so that flats will be given on lease. So these flats are called as flats constructed on leasehold land. So that's why builder will pay the lease rentals, and these lease rentals promoter or builder will pay GST under RCM. So that is with respect to TDR, FSI and long-term lease, and we don't have any special points related to this. Then sir, CG got over. Then salads. S refers to sponsorship services. In case of sponsorship services, so the supplier will be organizer of the event. Generally sponsorship service we will be confusing. So we will be thinking that the one who sponsors is the supplier. No, the one who sponsors is the recipient. Means the one who pay money is always the recipient. The one who receive money is the supplier. Got it? So therefore organizer of a event or organizer of a exhibition or any organizer of a sporting event, so will be taken as the supplier and they will be receiving the sponsorship money. So the recipient will be the one who pay the sponsorship money. And when it will come under RCM, is there any condition? Yes, there is a condition. If the recipient is firm or body corporate, it will be coming under RCM. If the recipient is firm or body corporate. If the recipient is other than firm or body corporate, it will not come under RCM, it will come under FCM only, sponsorship services. Then yes, A for agent services. Total 5 agents are covered there. That is insurance agent. So insurance agent is the supplier to whom they will be providing service to the insurance company. So liability to pay GST is on insurance company. Whereas next one is recovery agent. Recovery agent will be providing service to a bank or financial institution NBFC. On that commission, liability to pay GST is on bank, financial institution NBFC. And then direct selling agent. Direct selling agent will do marketing of banking products, and if the direct selling agent is other than body corporate or firm, if the direct selling agent is body corporate or firm, it will not come under RCM, it will be FCM only. So the direct selling agent should be other than body corporate or firm. They are providing services to the bank, financial institution NBFC. The liability to pay GST is on bank, financial institution NBFC. Then business facilitator. Business facilitators are agents appointed by the bank for the purpose of doing money remittance activities. So these business facilitators will be providing services to the bank for which they get a commission. On that commission, liability to pay GST is on banking company. We don't have any special points in case of agent services. And then in case of agent of business correspondent to business correspondent, not business correspondent. Business correspondent services to bank is not covered under RCM, but agent of business correspondent to business correspondent of a bank is covered under RCM, where liability to pay GST is on business correspondent. These are the 5 agent services. And then SAL. L refers to legal services provided by individual advocate or firm of advocates. There is an individual advocate or firm of advocates who will be providing services to a business entity, and the liability to pay GST is on business entity. We don't have any special points or conditions here. Then, so A for arbitrator services. Same way, an arbitrator will be providing services to the business entity. Liability to pay GST is on business entity, and there are no special points. Who is called as a business entity? Any person engaged in business is known as business entity. Individual also will come under business entity. HUF, firm, everyone will come under business entity. They should be engaged in business. Then they will be called as a business entity. But who will be called as a body corporate? Body corporate means private limited company, public limited company, or any body established by the government will be called as body corporate. So any body established under state law or central law will be called as a body corporate. ICI, body corporate. LIC, body corporate. SEBI, body corporate. RBI, body corporate. So these are all called as body corporates. So wherever we come across body corporate means, so not only private limited company, public limited company, but any body established under parliament or state legislature will be coming under body corporate. But business entity and body corporate is not same. Business entity means any person engaged in business is known as business entity. So in business entity meaning, firm also will come, HUF also will come, individuals also will be coming, but provided they are doing some business. Okay. Then next one, in case of D for director services. Director is providing service to a company or body corporate, where liability to pay GST is on company or body corporate. But here special point we need to remember, the director should not be an employee of the company. So if the director is employee of the company, or the remuneration paid to the director is deductible for TDS under 192 of Income Tax Act, so then in that case, the director is an employee of the company and it will not come under supply, because supply excludes employee to employer in the course of employment. Whereas if the director is not an employee, or if the TDS is deducted under section 194J of Income Tax Act, then that money will be taxable in the hands of director under PGBP or IFOS, then in that case, so that will be chargeable to GST. On that GST is not payable by the director, but payable by the company or body corporate under RCM. Then security agency services. Security agency services means it is a manpower supply, but only security. Manpower supply but only security personnel. So other manpower supplies and all will not coming under here, only security personnel agency. So manpower agency which is supplying only security personnel, that will come under the security agency services. That is the supplier. Who is the recipient? Any person. What are the conditions? Two conditions. Supplier should be other than body corporate and recipient should be registered, but they should not be opting for any composition scheme. Recipient should not be opting for composition scheme. They are registered but not opting for composition scheme, and registered, and they should not be registered only to deduct TDS under section 51. Then only it will come under RCM. Suppose if they are registered opting for composition scheme, FCM only. If they are registered and registered only for the purpose of deducting TDS, then also it will be FCM. So this is the list of services that you need to keep in mind, because whenever you see, the moment you see the service, first you need to determine whether it is supply or not a supply. Remember this checklist. Remember this checklist. If you want, you can write that checklist here. That is mainly in that 14 marks question. So many students, what they will do, directly they will put it under RCM without knowing whether it is supply or not a supply. So the first thing that you need to know is whether the activity is supply or not a supply. And the second thing that you need to know is that, is it covered under exemptions or not? Is it covered under exemption or not? Exempted or taxable? So first we need to check exemptions. If it is not exempted, it will be taxable. If you know the answer, it is exempted. If you don't know the answer, it is taxable. Next, number 3. So we need to check whether it is RCM or FCM. So when it is RCM, we need to check whether it is covered under Sir CG got salads. Yes, then it will be RCM. Otherwise, it will be FCM. Okay, so this is the checklist you need to apply. So don't proceed to the third point itself first. So first check whether the activity is supply or not. If the activity is not a supply, so then leave it. You don't have to write about anything. If the activity is supply, and then you need to check whether it is exempted or taxable. Okay, now so far what we have been discussing is about what are the activities which are covered under RCM. Now in all these activities, there are in two places FCM versus RCM option. What are the two places where we have FCM versus RCM? GTA services and option itself is there. FCM versus RCM. Not that if RCM is not applicable, it is FCM. Copyright services, GTA services. Only these two places we have. No, renting of motor vehicles we don't have. Renting of motor vehicles, if the conditions are not satisfied, then it will be FCM. But what I am telling is, even if the conditions of RCM is satisfied also, then also the supplier has the option to pay GST under FCM. Like that, the option is in only two places, that is copyright services and number 2 GTA services. In that also, what is the difference? Copyright services, FCM option is having a lock-in of 1 year, and GTA services, they can choose between every invoice FCM versus RCM. Then there are few cases where conditions are there for the purpose of RCM. That is, RCM is applicable if these conditions are satisfied, not special points, conditions. What are the places where we have conditions? Only if those conditions are satisfied, RCM is applicable. Renting of motor vehicles. What are the conditions? Supplier should be other than body corporate, recipient should be body corporate, and the rate of GST should be 5%. Then another place, sponsorship services. In sponsorship services, what are the conditions? That is, recipient should be firm or body corporate. Then another place, direct selling agent. In direct selling agent also conditions for RCM is there. That is, the direct selling agent should be other than body corporate or firm. Okay, then any other place, security agency services. In security agency service, what is the condition? That the recipient should be supplier should be other than body corporate, and the recipient should be registered but not opting for composition scheme or not registered only to deduct TDS. These are the 4 places where we have conditions for RCM. Understood or not? And then Next places, some special points. Special points we will see. What are the cases where we have special points? That is, in case of import of services, we have special point, wherein generally it is RCM, but if it is OIDR services provided to non-taxable online recipient, it will be FCM. Then another place is generally government service to business entity RCM, but in case of renting of immobile property provided to a unregistered person, it will be FCM, correct? These are the two places where we have special points. Am I right, pa? So like this you need to remember. So I discussed this in a crisp manner, and now we will see the exemptions, connecting with the exemptions. Wherever RCM comes, that I am connecting with the exemptions. So now I have given the page number references here. You refer to that page numbers, corresponding page numbers. So first you look into page number 79. Page number 79. That is import of services. Import of services. Generally, import of services is covered under RCM, but we need to analyze, is there any exemptions in relation to that? Yes. Import of service broadly divided into two. OIDR services other than OIDR services. OIDR services means online information database access and retrieval services, and in that case, so we need to test whether two factors are satisfied, whether the service is mediated through internet and it is automated, then it is called as a OIDR services. Live gaming will not come under OIDR services, because even though it requires internet, but it is not automated. So there is another person who is required to play the game. So therefore it will not come. Suppose if it is computer games or mobile games which requires internet to play the game, but it is not live, so it is automated, then it will be coming under OIDR services. And then recorded lectures will come under OIDR services. If you need to play only through app and you need to watch it online, OIDR services. If it is Google Drive, it will not be a OIDR services, even though it is automated, but you don't need internet in order to watch the lectures. And then live classes, online live classes will not come under OIDR, even though it requires internet, but it is not automated. If the faculty is not there, you can watch the classes. So therefore OIDR service means both the conditions are required, that is, it should be automated and it requires internet for the purpose of services. Then it will be called as a OIDR services, but exception could be there. That is, majorly it requires internet, but sometimes offline download is also allowed. Then it is still OIDR services only. Okay. Then that is, for example, OTT platforms. Generally it is requiring internet, but sometimes offline download facility is also available, but it does not mean that it is not a OIDR, it is still a OIDR service. In case of OIDR service, always it will be taxable. Who is importing it? Non-taxable online recipient or other than non-taxable online recipient. Who is a non-taxable online recipient? A person, any person who is unregistered, importing for other than business or commerce is known as non-taxable online recipient. In that case, liability to pay GST is on supplier outside India. So it will be taxable under FCM. Suppose if it is other than non-taxable online recipient, which means the recipient who is registered or unregistered but using it for business purpose, will come under other than non-taxable online recipient, because non-taxable online recipient means two conditions. Condition number one, that is, they should be unregistered. Condition number two, they should be using it for other than business purpose. So then only it will be coming under non-taxable online recipient. And then if it is other than OIDR services, imported by non-taxable recipient is exempted. Who is a non-taxable recipient? Non-taxable online recipient will come only when there is O, okay, OIDR, NTOR, otherwise NTR only, got it? Only when there is O, in this NTR, O will come, NTOR, you understood or not? Then suppose if it is other than OIDR services, non-taxable recipient. Who is a non-taxable recipient? Individual, trust, government, correct? Individuals are usually trusting government. So individual, trust, government. These three people will be coming under non-taxable recipient. So individual should be unregistered and trust should be registered or unregistered under GST. Government registered or unregistered under GST. Individual importing service for personal purpose. trust is importing service for charitable activities and government importing service for other than business or commerce, then it will be exempted. For example, Swami Nityananda Trust will be importing video conferencing solutions in order to interact with the pilgrims. You understood? So that is a case where import of other than OIDR services by a trust for charitable activities. Interacting with pilgrims is a charitable activity, so that's a divine activity and all. So due to that reason, so it will be exempted. You understood or not? Not taxable. Then same way, suppose if there is a person who is importing some consultancy services in order to set up a project in India, so then in that case he is unregistered individual importing services, but for what purpose? Business purpose. So it will be coming under taxable because he is not a non-taxable recipient. Individual should be unregistered and importing services for personal purpose. Then, so that is exempted. And if it is other than OIDR services by other than non-taxable recipient, then it will be taxable under RCM. So OIDR means what I have given, and who is non-taxable recipient? Individual and trust, charitable trust and government. And whenever I am referring to charitable trust, it can be section 12AA charitable trust or section 12AB charitable trust. Is YouTube Live coming under OIDR services? No, it will not come under OIDR services, because when you took break, I also took break, where from students can watch the lecture, they cannot watch. So it will not come under OIDR services, but YouTube subscription will be coming under OIDR services. That YouTube premium is there now. If you don't want ads, you will be paying some premium. That YouTube premium will be coming under OIDR services. That YouTube subscription will come under OIDR. Then next, so individual unregistered person and importing for what purpose? Personal purpose. Charitable trust importing for charitable activities, and government importing service for other than business or commerce. Then non-taxable online recipient. Who is a non-taxable online recipient? Any person who is unregistered and importing for any purpose other than business or commerce. Then, so when GST is payable under RCM, they need to compulsorily get registered, correct or not? So which means whenever RCM is applicable here in these two places, whenever RCM is applicable in these two places, this place and this place, so definitely they need to register under RCM. That is a compulsory registration, unless otherwise 23 is applicable. If 23 is applicable, they are not required to register, exempted. If 23 is not applicable, only they need to register. That is one point. Then even the supplier is also compulsorily required to get registered in case of OIDR services if it is supplied to a non-taxable online recipient. These 2 points we covered in compulsory registration under section 24 I creations. In that I connected these 2 points. And then whatever IGST, in case of RCM we pay IGST, that IGST paid can be taken as credit. That point also already we discussed. This is with respect to import of services. Then what is the next one that we have exemptions? Renting of motor vehicles. For renting of motor vehicles also, for yes there is no exemption. For I there is exemption. What is the exemption for I? Import of services. Import of services for what purpose? Other than OIDR by non-taxable recipient is exempted. This is what you need to remember. Okay, when we discuss many things, finally the base you should not forget. What is exempted? Import of other than OIDR services by non-taxable recipient is exempted. Okay, and next, in case of R, renting of motor vehicles, we have 4 exemptions in case of renting of motor vehicles that we will see. So please take renting of motor vehicles point pa. Page number 75. Page number 75. Renting of motor vehicles. So 4 cases it is exempted. Number 1, I have a motor vehicle and that motor vehicle I can give on rent to a road transport corporation which has a capacity to transport more than 12 passengers. 12 passengers means excluding driver. So then it will be exempted. Okay. So I have a motor vehicle, I am giving on rent to a road transport corporation, I get the rent, that is exempted, but the motor vehicle should have a capacity to transport more than 12 passengers. Same way I have a motor vehicle that can carry goods, that I am giving on rent to a goods transport agency, that rent is also exempted. Number 3, I have an electric motor vehicle that can carry more than 12 passengers, that I am giving on rent to a local authority, then that rent collected is also exempted. And then next one, I have a motor vehicle that I am giving on rent to a person who provides transportation services to the education institution providing education up to 12th standard. There is a school, education institution providing education up to 12th standard. So that school, to that school, I am providing transportation service. I took the motor vehicle on rent from you. So that rent will be exempted. These are the 4 cases. These are the 4 cases where we have exemption with respect to renting of motor vehicle. And in any other case, renting of motor vehicle will be taxable. Okay. And when it will come under RCM, if the recipient is other than body corporate, supplier should be other than body corporate, recipient should be body corporate, and the rate of GST should be 5%. Sir, any other renting of movable property will be always taxable. For example, I have a computer, iMac, and that iMac I am giving on rent for 1000 rupees per day. For some people who want to do the editing or short film making, etc., I am giving my iMac on rent for 1000 rupees. Whether it will be taxable or exempted, taxable. We don't have any exemption with respect to that. Renting of movable property, only motor vehicles is exempted. That too, these 4 motor vehicles. All other renting of movable property will be taxable. But renting of immobile property, if you see, renting of immobile property, we don't have any RCM as such per se. Renting of immobile property, we don't have anything under RCM per se, except government giving the immobile property on rent to the business entities. But that is government services. Actually, normal renting of immobile property, we don't have RCM. Now, do we have any exemptions with respect to that? Yes. If it is a immobile property for residential purpose or immobile property for commercial purpose, we need to classify. If it is a immobile property for residential purpose, then again we need to see. When we will know that it is immobile property, residential property, suppose if at the time of registration or at the time of construction, if we are making application, approval, so at that time we will give what is the nature of property. Depending upon that, the property type will change. So therefore, residential property means at the time of registration, we would have given it as approval. For approval, residential, that is a residential property. Commercial property means at the time of approval, we would have given application for commercial, that is commercial property. Now, residential property given for residential purpose fully exempted, whereas residential property given for commercial purpose will be taxable. For example, a house given on rent to a doctor who is running a clinic, on that rent there will be GST for the property owner. A house which is given on rent to a chartered accountant to have an office, now the rent paid by the chartered accountant to the owner will be taxable because it's a residential property given for commercial purpose. But residential property given for residential purpose will always be exempted. For example, there is a property owner who gives his house to a company for running a guest house. So whether it will be taxable or exempted. There is a company which is having there is a person who is having a house. That house he gave it to a company for the purpose of a guest house, for running a guest house, okay, for their clients, etc. They needed a guest house. So for that I gave it on rent, and it is renting of residential property for commercial purpose or residential purpose, residential purpose, residential purpose, residential purpose. It's not commercial purpose because they are not going to use it for any commercial purpose. Their employees or their clients are only going to stay there. So therefore, it will not come under commercial purpose. It is residential purpose. It is exempted and it became taxable from July. Not applicable for your exam, it will be applicable for May 23 exam, okay. But right now for your exam it is exempted, so this can be tested because this will become taxable in future, so this point can be tested, okay. And next, suppose if it is a commercial property is for commercial purpose, no doubt taxable. Commercial property for residential purpose, definitely for a temporary stay. Permanent stay and all commercial property will not be given for residential purpose. Example, hotel is a commercial property. That hotel will be given for temporary stay, residential purpose. Now in that case, we need to check how much is the rent, that is per day. Per day we should see. If per day it is less than or equals to 1000, then it is exempted. Suppose if it is greater than 1000, entirely it will be taxable. So that is that point. So we completed renting, normally renting, and next page you see renting of the precincts of a religious place meant for general public. So we are taking, first we completed what are the services which are covered under RCM, and then we are connecting now one by one to the exemption, and the related exemption also we are covering, okay. So Therefore, renting of the precincts of a religious place meant for general public. So there is a religious place meant for general public and its surroundings are given on rent. For what purpose they will be giving it on rent? For the purpose of accommodation. Suppose if the charges that they are collecting per day that is less than 1000, does not exceed 1000, less than 1000, whereas in the above case it is less than or equals to 1000. Here it is less than or equals to 1000, whereas in this place it is less than 1000, then only it is exempted. And suppose if it is greater than or equal to 1000, entirely taxable, and the liability to pay GST is under FCM, not under RCM. So therefore, that particular temple or any religious place, so they only required to pay GST. And how they should be registered as? They should be registered as a trust. They should be registered as a trust. But in this case, the trust they have not given any section, which means it can be 1023C, 1023D trust also. It can be religious trust also, or it can be a charitable trust also. So they just use the word trust. So which means any trust, religious or charitable trust, and its precincts are given on rent. For what purpose, pa? Accommodation. So per day it is less than 1000, exempted. If it is greater than or equals to 1000 per day, entirely taxable. Then in case of hall, for marriage purpose or any social function, etc., they will be giving. If it is less than 10,000 rupees per day, marriage and all per day only, pa. So per day, and it will be exempted. Less than 10,000 per day, exempted. And if it is greater than or equals to 10,000 per day, entirely taxable. And then for what other purpose? Shops. Shops will be usually per day rent, per month rent, per month rent. So therefore, less than 10,000 per month, it is exempted. Greater than or equals to 10,000 per month, entirely taxable. Wherever it is entirely taxable, it will come under FCM, because this is also renting of immobile property per se, we don't have under RCM. So this is what we covered. So yes, no exemption. I, there is an exemption. What is the exemption in case of I? I, other than OIDR services to non-taxable recipient is exempted. In case of renting, what are the exemptions? 4. Hiring of a motor vehicle more than 12 passengers to a state road transport corporation, and hiring of motor vehicle to carry goods to a GTA, hiring of electric motor vehicle carrying more than 12 passengers to a local authority, and number 4, hiring of motor vehicle to a person to provide transportation service to educational institution up to 12th standard, like this. Okay, then next step, in case of C, yes, IR, sir, CG, C for copyright. In copyright, any exemption? No exemption. In G, government services, yes, lot of exemptions are there in government services and GTA services. Okay, so look into first GTA services. Look into GTA services. There are 5 exemptions in case of GTA services. Check page number 78. Check page number 78. In case of GTA services, there are exemptions. Specified goods transported by GTA is exempted. What are those specified goods transported by GTA? Total 6 goods, pa. Agricultural produce, food grains including flours, pulses, milk and salt, organic manure. Okay, then newspapers and magazines, relief material for natural or man-made disasters, defense equipment. These are the 6 notified goods. If transported by GTA, whatever may be the freight, that is exempted. Then second one, consignment transported in a single carriage where the freight does not exceed 1500 per carriage. So when we pay freight per carriage, if the goods belonging to one person is transported in that carriage, then the freight charge will be per carriage. So then it does not exceed 1500, exempted. What if it exceeds 1500? Entirely taxable. In all these cases, wherever in exemptions we have limits, if you cross that limit, it will be entirely taxable, except in one place, that is incubating services. Everywhere it will be, say for example 1500, if it crosses 1500, entirely taxable, and 1000 rupees that rent per day, if it exceeds 1000 rupees, entirely taxable. But only in one place, if it exceeds that limit, the excess amount only will be taxable, that is incubating services. But in all other places it will be, if it crosses that limit, entirely it will be taxable. Then So what is this single carriage means? The freight charged per carriage means entire goods belonging to one person transported in a carriage. The freight charge does not exceed 1500. It will be exempted. Same way, if the carriage is carrying goods belonging to multiple personnel, then for each consignee, how much they will be charging freight? If it does not exceed 750, then it is exempted. If it exceeds 750 entirely, it will be taxable. Then number 4, if the recipient is central government, state government, local authority or government agency registered only to deduct TDS, so then also that service is exempted. And number 5, if the recipient is other than notified recipient, who is that notified recipient? One big list is there. Then who is not notified recipient? That is other than notified recipient, we can remember that is exempted. That is individual, HUF and AJP not having a factory. Not having a factory, they should be unregistered and they should not be having factory, then it is exempted. That is GTA providing services to an individual, and that individual is an unregistered individual, and that unregistered individual will not be having a factory, then it is exempted. Now GTA provided service to Mr. A, who is a casual taxable person. So whether it will be taxable or exempted? It will be taxable, because casual taxable person, even though individual, but they are required to get compulsorily registered. So therefore, it will be coming under taxable. Okay. Then next one. So apart from this, in any other case, it will be taxable, and liability to pay GST either on GTA or on the recipient. Okay. And now, with respect to 3 cases here in GTA services, amount you don't have to check. Whatever may be the freight that is exempted, that is notified goods, and the recipient is government registered for deducting TDS, and the recipient is individual, HUF, AJP, unregistered, not having a factory. Whatever may be the freight, it is exempted. In other cases, we need to check the freight. Single carriage does not exceed 1500. Single consignee, freight per consignee does not exceed 750. Done pa. Then, so we have seen in GTA services what are the exemptions. The next one is government services. So please look into government services. Take page number 73. Page number 73. Services provided by government. So here there is one query. So whether LLP will come under body corporate? No, LLP is not a body corporate, it will come under firm only. For the purpose of GST, LLP is not a body corporate, it is part of firm. And next one, it is a marriage hall given for marriage 2 days against a single invoice of 15,000 rupees. So then in that case, so we need to see per day only. So usually they will not be giving for 2 days. They will not be giving for 2 days. None of the religious place meant for general public will be giving for 2 days. Suppose if they are giving it for 2 days, so here anyhow the exemption says per day. So how much it is per day we need to check. So therefore we need to do the average. So per day will be less than 10,000, 7,500 less than 10,000. Therefore it will be exempted, because the exemption says per day it is less than 10,000. Okay, so if it is for 2 days, we need to reduce it, like average it for 1 day. Then next one, services provided by government. So you can see here, whatever services that are provided by government, so divided into 2, specified activities and other activities. What are these specified activities? 4 specified activities: Department of Post, transportation of goods or passengers, services to aircraft or vessel. So inside or outside the precincts of a port or airport. So first one, Department of Post. Number 2, transportation services. Number 3, airport or port services. Number 4, services to business entities. These 4 activities are only covered under supply. All other activities of government are excluded from supply. In these 4 activities, Department of Post, only 4 activities are taxable. What are they? Speed post, express parcel post, life insurance and agency services. These 4 only taxable, provided it is to a person other than government. What if these 4 are provided to government? It will be exempted. So these 4 activities. What is life insurance? It can be rural life insurance or urban life insurance. Don't get confused. All life insurance will be taxable, provided by Department of Post. And then agency services means they are acting as a collection agent. So they will be collecting the EB bill, they will be collecting the telephone bill, etc., for which they get some charges. So that is taxable. But only when it is provided to a person other than government, it is taxable. What if these 4 services are provided by post to government? It is exempted. What about the other activities provided by Department of Post, like basic mail services, money order, saving scheme, etc., that will be exempted. Then transportation of goods or passengers, we will refer to that transportation services. Whatever transportation service which is exempted, whether government providing is also exempted, private person also exempted. For example, transportation of passengers by stage carriage is exempted, non-AC stage carriage. Whether that non-AC stage carriage means a bus which stops at every stage of its journey. So that is an example of non-AC stage carriage. Whether it is government non-AC stage carriage or private non-AC stage carriage, both are exempted. So the transportation will be generic between government as well as a private person, that we need to refer. And then airport or port service, always taxable, we don't have any exemption with respect to that. And wherever postal services is taxable, and wherever airport service is taxable, wherever transportation service is taxable, these 3 services, will it come under RCM? No, it will not come under RCM. Only services provided by government to business entity will come under RCM. But Department of Post will not be RCM. Airport or port is not RCM. Transportation service is not RCM. Only services provided by government to business entity is only RCM. The 4th one only RCM, clear or not? And in that services provided by government to business entity, we have specific exemptions, general exemptions, and in other cases only it will be taxable. And there also we have RCM generally, but in one case only FCM. What is that one case? That is renting of immobile property provided to an unregistered person, only FCM. In all other cases it will be RCM. What are the specific exemptions with respect to services provided by government? Total 15 specific exemptions are there. Municipality or Gram Panchayat services. For example, water facility provided by government to business entity, corporation or metro water, for which they collect the water charges, that will be exempted. That's a municipality or Gram Panchayat services. Then interdepartmental services. For the purpose of conducting the raid, income tax department take the support of police department. So police department providing service to income tax department will be coming under interdepartmental services. So even though it is services provided to business entity, sir, why income tax department will come under business entity? Because all government activities will come under business definition as per section 2 clause 17. So therefore government is also covered under business entity. So interdepartmental service, you remember, police department, income tax department, that example, it is exempted. Then number 2, that is number 3, right to use telecom spectrum. So government has telecom spectrum. That telecom spectrum is allocated before 1/4/2016. For the telecom spectrum, if any charges are received now, that can be one-time charges or annual royalty. One-time charges are given for allocation of the spectrum, and for usage of the spectrum, annual royalty is collected. Both are exempted. Whereas next point, assignment of right to use natural resources. So government is having some mineral reserves and they are giving the contract to extract the mineral reserves to one leaseholder. That leaseholder is extracting the mineral reserves and he is paying annual royalty, and he is extracting. To get the right to extract, he will pay one-time charges. Suppose if the contract is given before 1/4/2016, only one-time charges is exempted, but the annual royalty will be always taxable. Whether the contract is before 1/4/2016 or after 1/4/2016, exemption is not applicable for annual royalty. That is the difference between the 3rd point and the 4th point. In 3rd point, for spectrum allocation, both one-time charges and annual royalty is exempted, but with respect to the 4th point, only one-time charges is exempted. One-time charges is collected by the government for giving the right to extract, whereas annual royalty is depending upon the quantity extracted. And then number 5, assignment of right to use natural resources to an individual farmer. This can be assigned anytime. Entire amount collected by the government will be exempted. This is like agricultural land owned by the government will be given on lease to the farmers, and the farmers will be required to pay a share of the agricultural produce to the government against consideration. So this share of produce received by the government from the farmer will be exempted. First of all, why farmer will come under business entity? Farming is vocation. Vocation means a skill which is used for your living is known as vocation, and this skill has been obtained by way of experience, that is vocation. So vocation is part of business, because generally business definition means trade, commerce, manufacture, vocation, profession. So adventure, wager. these are all coming under business definition. So vocation is business, so farming is a vocation, therefore farmer is a business entity. Any person engaged in business is known as business entity. Then next, point number 6, merchant overtime charges. Merchant overtime charges means whenever customs department is working after office hours, so under the supervision of customs officer only the unloading will take place. For that purpose, some charges will be payable to the customs officer called as merchant overtime charges. That charges collected will be exempted. Then safety certificate charges will be given by a state government safety officer. This safety certificate charges needs to be obtained by a company or any business which is dealing with public at large. That charges collected by the safety officer is exempted. Consideration for tolerating an act. When you enter into contract with the government and you breach the contract and they are collecting damages from you, liquidated damages from you. Now in that case, whatever damages that you have paid to them, that is for tolerating the act of yours. So therefore that is coming under this exemption, consideration for tolerating an act. However, in this regard you need to note one point, that fines and penalties are not treated as consideration for tolerating an act. Fines and penalties collected by the government are for breach of law. So that will not be coming under consideration for tolerating an act. So consideration for tolerating an act will come into the picture only when there is a breach of contract, not breach of law. Violation of law, we need to pay fines and penalties. That will not be treated as consideration. So that's why that is not coming here. Then next, share of profit petroleum. Profit petroleum and cost petroleum are the two words that we need to understand now. So whenever a leaseholder is extracting the petroleum, crude or natural gas, please remember in November 2019 one question has been asked, 14 marks question. Sukhdev, a mining engineer, like that one 14 marks question is asked. So in that attempt, no one attempted that 14 marks compulsory question, because that question is terrible. At that time it was terrible, because at that time students did not learn that much about these provisions and all. So that was tested already in 2019 itself. So in 2022, why it should not be tested? November only, that also, this also November only, okay. So listen, that is profit petroleum and cost petroleum. Generally leaseholder will be extracting the petroleum, crude or natural gas. For extracting the petroleum, crude or natural gas, so many years government was collecting only the royalty, but government got a desire, that is, why should not we get the share of profit also? These mining companies are making huge profits, so why should not they pay profit also to us? So government has modified the contract now. They are telling against this right to extract the petroleum, crude or natural gas, the leaseholder should pay two types of consideration. One is royalty, second one is share of profit. So these two are consideration for assigning the right to extract petroleum, crude or natural gas. Now, so what happens is that first the petroleum, crude or natural gas is extracted, that will be sold, some revenue will come. From that revenue, so we need to take out the cost incurred by the leaseholder. So that recovery of cost by the leaseholder is known as cost petroleum. And whenever he incur the expenses and he do the recovery, so it will be in the nature of like reimbursable. So he is incurring expenses and he is recovering, so that is a supply, but it is exempted. So cost petroleum is exempted. Again I am repeating, leaseholder will be incurring the expenses to extract the petroleum, crude or natural gas. So whatever expenses he incur, he will be recovering that expenses. So on that he is not required to pay any GST. It is exempted. Whereas government will get royalty. Because of assigning the right to use, government will get royalty. That royalty always taxable. But sir, if it is assigned before 1/4/2016, then also it will be taxable. Please look into point number 4. Assignment of right to use natural resources before 1/4/2016, only one-time charges is exempted, but the annual royalty will be taxable. So therefore, this royalty collected by the government always taxable. Now, after taking out cost and annual royalty, after taking from the revenue, cost petroleum and annual royalty, the balance left over is known as profit petroleum. In that profit petroleum, a percentage will go to the leaseholder and a percentage will go to the government. That percentage going to the leaseholder is known as return on investment. He only invested and is getting, that is not a supply. Whereas the percentage which is taken by the government will be supply, because that is a consideration for assigning the right to use, but that is exempted here. So share of profit petroleum for assigning right to extract petroleum, crude or natural gas is exempted. Then number 10, registration charges under any law. So that is to RTO we pay registration charges for registering a motor vehicle in the name of business entity, and then for registrar of companies we pay registration charges for incorporating a company, or for sub-registrar we pay registration charges for registering a property in the name of the company. In all these cases registration charges collected by the government is exempted. Then fee for birth certificate or death certificate, driving license, visa or passport. These are generally provided to individuals. Why is it coming under services to business entities? Because these are provided to business entity on behalf of their individuals. So therefore this will be coming under exemption. Then only 5 certificates: birth certificate, death certificate, driving license, visa and passport. Guarantee commission. Whenever PSUs, public sector undertakings, are taking the unsecured loans, that unsecured loans will be guaranteed by government. For guaranteeing the loans taken by PSUs, government will be getting some guarantee commission that will be exempted. Then excess royalty collection contractor. ERCC is a person appointed by the government for the purpose of swapping fixed royalty with variable royalty. Generally, whenever government gives the contract to extract the petroleum, crude, natural gas or any mineral reserves or any natural resources, the royalty type that they will receive will be variable royalty. So depending upon the quantity extracted, they will receive variable royalty. But government want a fixed royalty, so they will appoint a excess royalty collection contractor, a intermediary. What this intermediary will do? They will collect variable royalty and they will be paying fixed royalty to the government. Now in this case, this excess royalty collection contractor is not required to pay any GST to the extent of variable royalty. For example, state government has appointed one person as ERCC and there is a leaseholder. And now the leaseholder will pay to ERCC variable royalty and the ERCC will pay to state government fixed royalty. Suppose if the variable royalty is 40 lakhs, and the fixed royalty is 50 lakhs, now to government who will pay GST? So on 40 lakhs, with respect to 40 lakhs, GST on 40 lakhs, leaseholder already will pay GST on 40 lakhs. Why? Because services provided by government to business entity is covered under RCM. All services are covered under RCM. So therefore it is a service provided by government to business entity. So who will pay GST? Leaseholder will pay GST. But leaseholder will pay GST on what? Leaseholder will pay GST on 40 lakhs. But how much state government is getting as consideration? 50 lakhs. Then on that 50 lakhs, who will pay GST? ERCC will pay GST. ERCC not required to pay GST on 50 lakhs because out of this 50 lakhs, on 40 lakhs already leaseholder has paid. So ERCC is required to pay GST on 10 lakhs. So therefore ERCC is exempted to the extent of variable royalty. He need to pay GST only on the difference. Suppose if state government has appointed ERCC and there is a leaseholder, and now what happens? Leaseholder is giving a variable royalty to ERCC. What is that variable royalty? Say that variable royalty is 65 lakhs. But ERCC is required to pay to the state government fixed royalty. What is that fixed royalty? 50 lakhs. Now what happens? So to the government, leaseholder already paid how much? To the government, leaseholder has already paid a GST of 65 lakhs. Okay, leaseholder has paid GST on 65 lakhs. Now whether ERCC is required to pay any GST? No. Why? Because the state government is getting a consideration only 50 lakhs. When state government gets a consideration only 50 lakhs, then in that case, why the ERCC is required to pay? Because state government's consideration is 50 lakhs. Already on 65 lakhs they paid. Perhaps on 15 lakhs credit should be given, but that and all they are not giving, but they are not collecting from the ERCC. Okay, so ERCC exempted for payment of GST to the extent of variable royalty. That is this. Then fee for FSSAI license from food business operators. Food business operators will be required to obtain FSSAI license from government, for which they need to pay some money. That charges collected by government is exempted. Then this is an amendment, but for May 22 itself it was an amendment. Fee for granting national permit or state permit for transportation through India or contiguous states, from one state to another state, in order to take a vehicle, lorry or any yellow board passenger vehicle, we need to take permit, and that permit charges collected by government is exempted. Same way, national permit charges collected by government exempted. These are the 15 specific cases. Irrespective of the consideration, it is exempted. Apart from these 15 exemptions, we need to see the remaining, and the remaining we may be covered under general exemptions. If it is not covered under general exemptions, then it will be taxable. For example, whether advertising services provided by government to business entity covered under the list of 15 exemptions? No. And whether renting of immovable property provided by government to business entity covered under the list of 15 exemptions? No. Whether security, police department providing security services to the business entity is covered under the list of 15 exemptions? No. Like that, whatever services which are provided by government to business entity not in this list will be covered under general exemptions. If it is not covered under general exemptions, then it will be taxable. What is the first general exemption? That is, services provided to business entity whose turnover during the previous year does not exceed threshold limit, then it will be exempted. What is that? Services provided to business entity excludes renting of immovable property. This first general exemption is not applicable for renting of immovable property. For example, advertising services provided by government to business entity, that business entity turnover during the previous year does not exceed threshold limit, then the service provided to them will be exempted. Then number 2, second general exemption. Second general exemption is applicable in case of all services, even renting of immovable property service also, but the first general exemption is not applicable other than, so services other than those covered under specific exemptions provided to a business entity whose turnover during previous year does not exceed threshold limit. However, this exemption is not applicable in case of services to, that is a service in relation to immovable property. Whereas second general exemption, if you see, the value of supply does not exceed 5,000. For example, there is a hotel, and on Saturday night and Sunday night, so lot of celebrities will be coming, so to drink divine water and go in that place. So for that purpose, so police department will be providing, so their police jeep outside that hotel, and therefore in this case, so police department is providing services to a business entity. How much police department will get? Above the table 2,000 rupees. Below the table I don't know, that we are not bothered also. So 2,000 rupees. Now services provided to business entity whose turnover during the previous year definitely exceed threshold limit. So divine water and all they are selling, so definitely it will exceed threshold limit. But first general exemption not applicable. Then what about the second general exemption? Yes, value of supply does not exceed 5,000, therefore it is exempted. Understood or not? That is with respect to these two general exemptions. And if a service is not covered under 15 specific exemptions, these two general exemptions, then it will be taxable. And liability to pay GST is on recipient. Exception, only one exception, that is renting of immovable property services provided to a business entity, renting of immovable property services provided to a unregistered person will be coming under FCM. Okay, pa? I am discussing, you need to remember this, okay? See, many times, even though rocket revision, I am connecting multiple points repeatedly. At least one time it will be registered, and in exam hall when you are writing, so you will remember this. That is the effort I am putting. So God only knows. Then next, so C, copyright service, we don't have any exemption. G, GTA we have seen. Another G, that is government service to business entities, we saw the exemption. And next, O, overseeing committee service to RBI. For RBI also we have some exemptions, pa. Have a look into that, services in relation to RBI. Page number 68. Page number 68. Services provided by RBI is fully exempted. Whatever services that RBI provides will be exempted. To whom RBI will provide services? Mainly to banks and financial institutions, NBFCs they provide. That services provided by RBI is fully exempted. But services provided to RBI, only one case it is exempted. That is import of services by RBI in relation to management of foreign exchange reserves. That alone is exempted. Again I am repeating, services provided by RBI fully exempted. Services provided to RBI, only one is exempted. Outside India in relation to management of foreign exchange reserves. Remaining and all will be taxable. If it is import of services, RBI will pay GST under RCM, and overseeing committee services to RBI also RCM. Otherwise it will be FCM. Got it? two exemptions. AR services provided by RBI to recipient is exempted. Services provided to RBI by way of management of foreign exchange reserves exempted. Remaining will be taxable. If it is import of services, it will be taxable under RCM. If it is overseeing committee service to RBI, also will be taxable under RCM. Otherwise, it will be taxable under FCM. Then, in case of GOT, T for TDR, FSI and long-term lease. For that, is there any exemption? Yes, there is exemption. So, you can see that in construction services. Construction services, where is it? Page number 80. Page number 80, you can see exemption with respect to that construction services. Government includes local authority also. Whenever I say government services to business entity, I am referring to government as central government, state government, union territory and local authority. Okay. Then, so look into page number 80. In case of TDR, FSI and long-term lease, there is an exemption. To what extent? That is, first there is a promoter or builder who is having a inward supply of TDR, FSI long-term lease from a landowner. On that, the promoter or builder is required to pay GST under RCM. Now, what the promoter or builder is going to do with the TDR, FSI long-term lease? He will do the construction. What type of construction? Residential or commercial? We need to check. If it is residential, to whatever extent the flats are booked before completion certificate, to that proportion he is exempted with respect to the inward supply. So, to understand this, I gave an example there itself. You can see value of inward supply is 10 lakhs and GST payable on inward supply is 1,80,000. And now, what is the floor area of the residential flats booked before completion certificate? 28,000 square feet. So, they are using this for construction of some residential flats. In that residential flats, whatever is the residential flats booked before completion certificate, because that will be chargeable to GST. As those flats are chargeable to GST, the proportionate inward supply they are giving exemption, because usually promoter or builder cannot take that much of ITC in case of residential flats. In case of commercial, they can take ITC. So, the exemption is not available with respect to commercial. In case of residential, sir, promoter or builders outward supply residential means 1.5%, 7.5%, which is not eligible for ITC, means they cannot take ITC on their inward supply. Then on their inward supply TDR, FSI long-term lease, if they pay GST, then unnecessarily they will have more burden. In case of commercial, this problem will not be there, because the commercial property sold by the promoter or builder will be taxable at the rate of 12% or 18% with ITC. They can take ITC. So whenever they have inward supply of TDR, FSI and long-term lease, on that whatever GST they paid, they can take ITC. There is no trouble for them. But for residential, there is a trouble. That's why exemption is given only for residential, in order to avoid this burden on GST burden on the inward supply. So to what extent it is exempted? So the exemption is with respect to inward supply into whatever GST rate into floor area, carpet area of the residential flats booked before completion certificate. Why only booked before completion certificate? If it is booked after completion certificate, anyhow no GST on that. At least on inward supply you pay GST. You understood or not? So therefore, booked before completion certificate divided by total carpet area, to that extent exemption is available. So therefore, 28,000 square feet. What is the total floor area of the project? 50,000 square feet, which means the exemption will be 1,80,000 into 28 divided by 50. That will be 1,800,000 will be exempted. So which means from 1,80,000, 1,800,000 will be exempted. So the remaining 79,200 they need to pay GST under RCM. Clear pa? So that is with respect to this exemption for TDR, FSI and long-term lease. This exemption is applicable to promoter or builder when he is paying GST under RCM. So sir, CG got. So what are all the exemptions we have seen? Then yes, salads. In that yes is sponsorship services. So please look into that sports related services. There we have that sponsorship service, page number 76. In sports related services, so sponsorship to a recognized sports body is exempted. So any sponsorship service, that is recognized sports body is providing, organizing an event, that is for which any amount collected will be exempted. So what is a recognized sports body? Recognized sports body means any sports body under a national sports federation, inter-university sports board. So they will be conducting universities, between university sports and games, inter-university sports board, Paralympic Committee for the physically challenged people, and then Indian Olympic Association, so which will be conducting national games, and Central Civil Services Cultural and Sports Board. For government employees, they will be conducting games and sports, and Panchayat Sports Board. These are the 6 recognized sports bodies: National Sports Federation, Inter-University Sports Board, Paralympic Committee, Indian Olympic Association, Central Civil Services Cultural and Sports Board, and Panchayat Sports Board. These 6 sports board, when they are collecting money by way of sponsorship, that is exempted. Whereas apart from this, any other sports body collects money will be definitely taxable. For example, BCCI is an example of recognized sports body. Whatever money that BCCI collect, so services, sponsorship service provided by BCCI to a body corporate or firm or to a sole proprietor, both are exempted. But IPL is not a recognized sports body. So whatever sponsorship money that they are collecting will be taxable. Suppose if they are collecting from Vivo, which is an example of body corporate or firm, it will be taxable under RCM, where Vivo will be paying GST under RCM. Suppose if they are collecting money from Duraply, suppose a sole proprietor, then in that case liability to pay GST is on IPL under FCM. Because in case of sponsorship services, if the recipient is body corporate or firm, it will come under RCM, otherwise it will be coming under FCM. That is with respect to the sponsorship services. Then related to sports services, one more exemption is also there, but it is not covered under RCM, it is FCM only. That is services provided by an individual as a referee, player, umpire, coach or team manager. These 5 positions: referee, that is player, referee, coach, umpire, team manager, to a recognized sport body, the money collected by these people will be exempted. Suppose if the money is collected by these 5 people from unrecognized sports body, definitely it will be taxable. And any person apart from these 5, any person collecting money from recognized sports body or unrecognized sports body will be always taxable. Who are the other person? For example, in cricket, commentators, selectors, pitch curators, technical expert, broadcasters, all these people are other than these 5. So they collect money from recognized sports body also taxable, unrecognized sports body also taxable. For example, you take umpires who are receiving money from Mumbai Indians team. Almost all umpires of IPL will be receiving money from Mumbai Indians team. So that money received by umpires will be taxable. Okay, why? Because it is not to a recognized sports body. Then next, that is with respect to sponsorship, sport service. In that sponsorship is there, and one point is actually missing here. You write that also. That is services provided by one recognized sports body to another recognized sports body is exempted. Write down note: services provided by one recognized sports body, to another recognized sports body, is exempted. Services provided by one recognized sports body to another recognized sports body is exempted. Okay, so this is in case of sponsorship services. Then agent services. For agent services, insurance agent, we have one point, that is business facilitator or business correspondent of an insurance company working in rural area is exempted. Okay, so insurance services, we have an exemption related to this. Where is insurance service? 67. Okay, so in that 67, 7th point you can see services. Generally insurance agent is covered under RCM, and in that case if the insurance agent is a business facilitator or business correspondent who is working for an insurance company in rural area, then the commission earned by them will be exempted. Then second agent, recovery agent, no exemptions. Direct selling agent, no exemptions. Business facilitator, yes, there is an exemption. Business facilitator working in rural area will be exempted. Same way business correspondent working in rural area is exempted. You can see in page number 69, point number 6. Point number 6. You need to remember 3 points, total 3 points you need to remember for BCBF. Business correspondent, business facilitator, 3 points you need to remember. First point, business facilitator, agent of business facilitator, business correspondent, agent of business correspondent, working in rural area, exempted. Got it. If they are getting commission for working in rural area branch, is exempted. Okay, pa. BC, BF, agent of BC, agent of BF, receiving commission with respect to rural area operations branch is exempted. Suppose if it is urban area, it will be taxable. Now, second point you need to remember, what is that? Business facilitator will never pay GST with respect to their outward supplies and inward supplies. Business facilitator outward supply, who will pay GST? Bank will pay GST. Business facilitator inward supply from an agent, who will pay? That agent will pay. Means business facilitator will never pay GST on their inward supply and outward supply. That's the second point. Next, third point. So business correspondent will always pay GST on their inward supplies and outward supplies. Say I am a business correspondent, I am providing services to a bank. On that, who will pay GST? I will pay GST under FCM. Same way, my agent is providing services to me, my inward supply. On that, I will only pay GST because agent of BC to BC is covered under RCM. That is this. So, the 3 points you need to remember, please register in your mind. Business facilitator, agent of business facilitator, business correspondent, agent of business correspondent with respect to rural branch, exempted. Business facilitator will never pay GST on their inward supply, outward supply. Business correspondent will always pay GST on their inward supply and outward supply. That is with respect to agent services. Yes, A, then L, that is advocates and arbitrator services. So please look into advocates and arbitrator services. So which is in page number 81. Page number 81. Books are exempted from GST. Where is it given? So it is not given in services, it is given in goods. Generally in goods it is exempted, but what are the exemptions with respect to goods are not there in syllabus. Okay. So but general knowledge it is, usually books, textbooks and all will be exempted. Then so still how many chapters pending, like that one student is asking, lot of chapters are pending. Okay. So lot of chapters are pending. So say this, really lot of chapters are pending. So because we are still in exemptions only, then taxable event is there, place of supply is there, e-way bill is there, invoice and time of supply is there. So lot of chapters are pending. Yesterday we could complete all small topics, so you felt like it went so fast. But today, because it is not that I am going slow, it is the same pace. The problem is like that much portion is there. You tell me at least water I am drinking here. So tape record, like tape record I am turning on and turning off. So therefore that much of points are there into our syllabus in 2 days, 3 days means it will take definitely. So individual advocate other than senior advocate or firm of advocates and senior advocate arbitrator, we have 2 set of exemptions. In 2 pages you can see 2 set of exemptions. So here you have services provided by individual advocate other than senior advocates. You remember normal advocate and firm of advocates. So what are the exemptions? 4 exemptions. If a normal advocate, when I say normal advocate other than senior advocate, normal advocate or firm of advocate, when they are providing services, 4 exemptions. If they provide it to an individual, that is other than business entity, it is exempted. Suppose if they provide services to another advocate or firm of advocates, here another advocate includes senior advocate also, then it is exempted. That is recipient advocate, recipient is firm of advocate, that recipient advocates include senior advocate also, but the supplier advocate will be other than senior advocate and the supplier advocate is firm of advocates, but the recipient advocate includes any advocate, senior advocate or non-senior advocate and firm of advocates, so that is exempted. So between advocates that point is exempted. And next number 3, suppose if the recipient is central government, state government, local authority or government agency, then also it will be exempted. And next 4th exemption, if their turnover during the previous year does not exceed threshold limit, then also it is exempted. So total 4 exemptions you can see there. First, other than business entity, exempted. Number 2, another individual advocate or firm of advocate, exempted. Number 3, central government, state government, local authority, union territory, government agency. GA refers to government agency. means whenever government is required to do certain activities, when they are not doing, they outsource it to an agency that is known as government agency. For example, so during COVID, government has outsourced the work of testing, COVID testing, to many laboratories. Those laboratories will be called as government agency. Then this solid waste management which government has to do, they will not be doing, but they will be outsourcing it to some companies like Urbaser. Right now Urbaser is a company which is doing the solid waste management, that household waste under they are collecting and taking to a dump yard and they are dumping it. So that will be called as government agencies. So then that is exempted. Then whether turnover during previous year does not exceed threshold limit, yes, then also it is exempted. In remaining cases it will be taxable. Wherever it is taxable, who will pay? Business entity will pay. 4 exemptions. Whereas if you see services provided by senior advocate or arbitrator, you have only 3 exemptions. So services provided by senior advocate, arbitrator, 3 exemptions. Which exemption is missing? Senior advocate providing service to another advocate or firm of advocate, not exempted. Arbitrator providing service to another advocate or firm of advocate, not exempted. So that we don't have an exemption. But the first point is there, that is individual other than business entity, exempted. Government, exempted. Turnover during previous year does not exceed threshold limit, exempted. In remaining cases it will be taxable. Now what about the services provided by senior advocate to another advocate or firm of advocate? In that case, we should not take another advocate or firm of advocate as the recipient, but we need to take the ultimate litigant or petitioner or applicant as the recipient. What if we don't have ultimate litigant, applicant or petitioner? Hypothetical situation that will never arise. Then why the hell senior advocate is providing services to individual advocate or firm of advocate? So therefore definitely then that is for personal purpose. Then that is for personal purpose of that advocates. So that will not come. So once it is to a business entity, another individual advocate or firm of advocate, on behalf of their clients only they are receiving the services, because senior advocate and all cannot represent. Senior advocate can never do representation services. At max, senior advocate can do only consulting services, that is opinion and litigation support. He can never do representation services. Okay, unless otherwise if it is like pills, etc., public interest litigations, etc. So therefore in this case, that senior advocate is providing services, so on behalf of the individual advocate or firm of advocate to their client, that client of that individual advocate or firm of advocate will be taken as the recipient. For example, if senior advocate is providing services to a firm of advocates, and that firm of advocates is providing services to say ABC Limited, and that ABC Limited's turnover during previous year does not exceed threshold limit, then in that case the services provided by senior advocate will be exempted. Here for senior advocate, who should be deemed as recipient? ABC Limited will be deemed as recipient, and therefore it is exempted. Why it is exempted? Because the business entity, see, whenever senior advocate providing service to another advocate or firm of advocate, we need to see the ultimate litigant, applicant or petitioner as the recipient, and if that recipient is individual, exempted. If that recipient is business entity whose turnover during previous year does not exceed threshold limit, exempted. If that recipient is government, exempted. 3 exemptions only we have for senior advocate. So if it is covered under, but who will become recipient? This firm of advocates will never be called as recipient to senior advocate. So this ABC Limited, that is their client, that is the ultimate litigant or petitioner or applicant only will be treated as recipient. That is this. So services provided by senior advocate to individual firm of advocates is not exempted. In such case, the ultimate litigant or applicant or petitioner shall be deemed to be recipient. Then suppose if there is an arbitrator, that arbitrator is providing services to another advocate or firm of advocate. Now what about the taxability of this? Concentrate, very important point. Advocate providing service to another advocate, we have exemption. Senior advocate providing service to another advocate, we saw their client will be taken as a recipient. Arbitrator providing services to another advocate or firm of advocate, how should we interpret? We don't have any exemption. Then if that advocate or firm of advocates turnover during previous year exceed threshold limit, it will be taxable under RCM. arbitrator, advocate turnover during previous year exceed threshold limit, then this service will be taxable. Advocate turnover during previous year does not exceed threshold limit, it is exempted. Suppose if advocate's turnover during previous year exceeds threshold limit, arbitrator service taxable under RCM. So therefore you need to pay GST or not? You don't have to pay GST because your outward supply will be either exempted or it will be covered under RCM, means you are covered under 23. 23 overrides 24. Therefore you don't have to pay GST under RCM. Okay, pa. An advocate, individual or firm and arbitrator is not required to get registered as they are exclusively engaged in supplies covered under RCM. So section 23 overrides 24. That you please remember in this place. Okay. So advocate and arbitrator service over. SALA over. Then D case we don't have any exemption because director services we don't have any exemptions with respect to director service. Then yes, security agency service also we don't have any exemptions. Now what we completed so far is liability to pay tax, list of services which are covered under RCM, when it will be covered under RCM, and what are the related exemptions to that. This is what we have completed so far. Okay. Now again we will come back to exemptions later, remaining exemptions, but whatever exemptions that we completed so far is related to RCM. Now we will complete 9 subsection 4. Go back to 9 subsection 4. 9.3 we have seen. 9 subsection 4, inward supplies of a promoter or builder. Whatever inward supplies of a promoter or builder, concentrate, inward supplies of a promoter or builder is divided into 2. That is inputs and input services, capital goods. And whenever promoter is making purchase of capital goods, we need to check whether the capital goods are purchased from a registered person or unregistered person. If the capital goods are purchased from a registered person, no need to pay any GST under RCM because already GST paid to that supplier, he would have paid it to the government. The logic behind this provision is that whenever promoter or builder is making purchases from unregistered person, GST is not paid by the promoter or builder under RCM. So then that is GST is not paid at all. So whenever GST is not paid at all, government will not get revenue. So whenever you are making purchase from an unregistered person, there is no GST, then the supplier will not pay na. So then it is loss of revenue to the government. That's why what they are telling. So they are asking the recipient to pay GST. Suppose if you buy from a registered person, already you are paying GST to that supplier. Supplier will pay it to government. You don't have to pay any GST under RCM. So that is the simple logic you need to know. So capital goods purchased from a registered person, no need to pay GST under RCM. Capital goods purchased from an unregistered person, that promoter or builder is required to pay GST under RCM at what rate? At the rate applicable to the capital goods, not the regular rate 18% etc. but at the rate applicable to capital goods. This is the first point that you need to know. Step number 1. Step number 1, we need to check capital goods purchased from RP. No need to pay GST under RCM 9.4. Capital goods purchased from URP. GST payable under RCM at the rate applicable to capital goods. Then step number 2, you see the remaining inputs and input services. In that inputs and input services, you take out few inputs and input services. What are they? What are non-taxable supplies under GST? Alcoholic liquor for human consumption, but that is no way connected to construction, promoter or builder. So therefore we will not take that, leave it. And then what is the other one? Crude oil. Crude oil definitely no way connected. We are not burning, we are constructing. So therefore that is not applicable. Then petrol and diesel, yes, for the purpose of running the generator. So therefore that will be purchased, but on that no GST, so don't take, exclude. So therefore inward and inward supplies minus petrol, diesel. Aviation turbine fuel, why in construction we use aviation turbine fuel? Not applicable. But natural gas, yes, for welding we use. So minus natural gas. Then electricity, why it is excluded? Because electricity is exempted. So that's why it is excluded. And thereafter we have TDR FSA long term lease. Why? Because TDR FSA long term lease anyhow under 9.3, then again if 9.4 is also there, then 2 times we will pay GST under RCM, because by default TDR FSA long term lease is from an unregistered person, because a landowner is not required to get registered. So therefore it is already covered under 9.3, so excluded. So what is step number 2? all inputs and input services minus, come on, electricity, high speed diesel, motor spirit, commonly known as petrol, then natural gas, TDR, FSI and long term lease. These 5 exclusions we will make. Now whatever is the remaining inputs and input services, okay, step 2, got it? Step 3, out of these inputs and input services, whether you have purchased 80% from a registered person, yes, we achieved. Then in the remaining 20%, whether it is cement, yes, then pay GST on cement under RCM. They are giving a relaxation of 20%. For capital goods, the relaxation is not there. For inputs and input service, there is a relaxation. 20% we can make purchase from an unregistered person, but in that we should ensure that we are purchasing cement always from a registered person. If you are buying cement from an unregistered person, we need to pay GST under RCM at the rate of 28%. So therefore, the third step is first check in that inputs and input service you have cement, yes. Purchase from unregistered person, yes. Pay GST at the rate of 28% on cement. Okay. Now as good as it is purchased from a registered person. Step number 1, capital goods, understood. Step number 2, total minus petrol, diesel, natural gas and electricity, TDR, FSA, that you understood. Step number 3, in the remaining inputs and input services, if cement is there, then that too if it is purchased from an unregistered person, you pay GST under RCM at 28%. Okay. Then you see the remaining inputs and input services. That remaining inputs and input service other than cement, because cement already you paid GST under RCM in step 3, now you are in step 4. And in step 4, other cases, so you need to see whether it is purchased from unregistered person, yes. To what extent it is purchased from unregistered person? To the extent of 20%, leave it. To the extent of 20%, so leave it. Suppose if it is more than 20%, then on the difference, you need to pay GST under RCM at what rate pa? 18%. So step number 1, capital goods. We need to analyze capital goods. So purchased from RP, so ignore. Purchased from URP, pay GST under RCM at applicable rates. Okay, step 1, okay. Step 2, what is step 2? Inputs and input services. Inputs and input services. This inputs and input services minus electricity, HSD, so then petrol, natural gas, then TDR, FSI or lease. Okay, this you take out and see what is its value. Say its value is, total value is say 150 lakhs, total value is 150 lakhs. Step number 3, in this 150 lakhs is there a cement, and cement purchased from RP, ignore. Purchased from URP, pay GST under RCM at what rates? At 28%. Say for example, in this 150 lakhs, 20 lakhs we have purchased from unregistered person. 20 lakhs into 28%, that will be, so 4 lakhs, 5 lakh 60,000. Then number 4, now remaining, you see, remaining purchases from unregistered person, remaining from URP, say we have 10 lakhs, remaining from URP, say we have 10 lakhs. What is the percentage? 10 divided by what? Total. What is the total? 150. 10 divided by 150, how much? 6.67. It does not exceed 20%. So no GST under RCM for 10 lakhs. No GST under RCM for 10 lakhs. Pa, are you understanding, pa? This much less I cannot tell, pa, less than this. So then, suppose if it is remaining from URP, suppose if remaining from URP is 20, remaining from URP, suppose if it is 40 lakhs, then what is the percentage? 40 by 50 into 100, 150 into 100, 26.67 percentage. What is that extra? What is that extra? 6.67 percentage. 150 into 6.67 percentage, whatever it is there, into what is the rate of GST? 18%. 150 lakhs into 6.67% into 18%. 1.8 lakhs we will pay GST under RCM. Clear or not? So these are the 4 steps that we need to follow. Step number 1. Step number 1, capital goods, purchase from RP, ignore, purchase from URP, pay GST under RCM at the applicable rate for capital goods. Then step number 2, inputs and input service minus electricity, high speed diesel, petrol, natural gas and TDR FSI long term lease. We need to see what is the total. The total will be 150 lakhs. In that cement purchased from RP or URP, cement purchased from registered person. If cement is purchased from registered person, ignore. If cement is purchased from unregistered person, pay GST under RCM at the rate of 28%. So 20 lakhs into 28%, 5 lakh 60,000. Suppose if it is remaining, that is after cement remaining, unregistered person, just 10 lakhs only, that percentage is hardly 6.67, it does not exceed 20%, so no need to pay GST under RCM. Suppose if it is 40 lakhs, it exceeds 20%, 20% is only allowed, so remaining is how much? 6.67%, on that you need to pay GST at what rate? 18%. Even though those goods are taxable at 5%, even though those goods are taxable at 12%, even though those goods are taxable at 18%, we will be following 18%. Sir, what if it is taxable at more than 18%? Only one product, that is cement. Already it is 28%. You understood or not? So government is careful in all those things then. So this is how the questions could be tested in exam on this. Okay. MCQ, mainly in MCQ I am expecting a question like this. Then look into this 9 subsection 5. Liability to pay GST on e-commerce operator in case of notified services. Already we saw what are those notified services: housekeeping service, accommodation service, transportation of passengers by any motor vehicle, and supply of food in a, that is eating food from a restaurant. Okay. And in this case, so see one note for E point, see one note. Suppose if there is a restaurant in a hotel and that hotel is charging a tariff of greater than 7,500 rupees per day. What kind of a hotel it is? Definitely it is a 4-star, 5-star hotel, correct? Because 7,500 in 3-star itself, maximum 5,000 only per day. But 7,500 or above 7,500 means, so definitely 4 or 5-star only. And in those hotels, there will be restaurants. Those restaurants will be supplying food through e-commerce operator. In that case, e-commerce operator will not pay, restaurant only will pay. No idiot will order food from those restaurants through e-commerce operator. Okay, practically that is not possible, because first of all, people who go there, unless otherwise it is a complimentary breakfast, no one will eat there. Okay, so therefore, so this and all ordering through e-commerce operator, wow, so too much. And then liability to pay GST is on restaurant only. So this 9.5 is not applicable. Then important points: when e-commerce operator is liable to pay GST on above services, they are not required to deduct TCS. So there is a concept of TCS, tax collected at source. Remember that TCS and 9.5 are mutually exclusive. Wherever TCS is applicable, 9.5 cases TCS not applicable. Means wherever TCS is applicable, 9.5 not applicable. Wherever 9.5 applicable, TCS is not applicable. These are mutually exclusive. Then only in case of notified services, these 4 notified services, liability to pay GST is on e-commerce operator. In case of other than these notified services, example, Book My Show. In case of Book My Show, supplier is cinema theatre, Book My Show is the e-commerce operator and the recipient is the person so who wanted to watch, audience. Now in this case, liability to pay GST is on cinema theatre only, not on Book My Show. But Book My Show will have liability to what extent? On the commission and convenience fee, whatever they are getting, on that they need to pay GST. But on the cinema ticket, who will pay GST? It is the theatre only. Because only in case of notified services, on the transaction itself, full transaction itself, liability to pay GST is on e-commerce operator. then every e-commerce operator who is liable to pay GST and liable to deduct TCS is compulsorily required to get registered. Already we discussed. What about supplier of goods through e-commerce operator? That also already we have discussed. Supplier of goods through e-commerce operator is compulsorily required to get registered. What about supplier of services through e-commerce operator? Supplier of services through e-commerce operator is required to get registered only when their aggregate turnover exceeds threshold limit, but not compulsory registration. And while computing their aggregate turnover, what will be taken? So we will be taking direct supplies, full value, and supply through e-commerce operator, the percentage of share received from the e-commerce operator will be taken. Suppose if there is a person who is supplying services only through e-commerce operator, he is not at all required to get registered. Why? Why he is not at all required to get registered? This is a wrong statement. This is a wrong statement. It's a wrong view. They are required to get registered because it is not called as RCM supplies. Because many people are of the opinion that supplies through e-commerce operator exclusively means 23 gets attracted. No, 23 will not get attracted. They need to register. When they will register, their share will come now. Only through e-commerce operator, their share will come. That share exceeds threshold limit, then they need to register. The moment they register, housekeeping service and accommodation service, it will not be 9.5, they only required to pay GST. You understood or not? So we don't have any exemption if it is supplies exclusively through e-commerce operator and all. Then, now we have an exception to section 9 subsection 3. What is that exception? In case of transportation of goods by vessel from where to where? Outside India to India. When both supplier and recipient are located outside India, supplier is who? The transportation service provider. Recipient is exporter of the goods. So now service provider is transportation service provider, shipping company outside India. They are providing services to the exporter outside India. What is that service? Transportation of goods from outside India to India. In that case, as both supplier and recipient are located outside India, but transportation of goods by vessel will always be taxable. Sir, transportation of goods by vessel, India to outside India exempted. But transportation of goods by vessel, outside India to India will be taxable. Okay. Now, in this case, always it is taxable, but who will pay GST? One person is there in the corner now. Who is that? Importer of goods. He will pay. Why? He is only in India. You can ask him only to pay GST. Because supplier of that service is outside India. Recipient of that service also outside India. So importer of that goods is in India, he will pay. Means, sir, there is a double taxation. Yes, there is a double taxation. Because on this ocean freight, already the importer is liable to pay GST under RCM, importer of goods. And this freight will also be included in CIF value for computation of customs duty. Along with customs duty, we also pay IGST. Then on the same freight, there is 2 times GST paid. Yes. And Supreme Court said that it is not correct and this should not be there, but even then government is levying. Okay. So this is an exception to section 9.3 where liability to pay GST is not on recipient but on a third person, that is importer of such goods. So we completed section 9.3, 9.4 and 9.5. Okay. And related to this 9.4, there are some 3 MCQs. Okay. So we will take a break later, little later. Let's complete those MCQs and take. So this is just like a testing for us. That's why. If you want to participate in these MCQs, you can also participate. Just take your mobile browser. So vvox.app. Just take your mobile and type vivox.app in the browser. And if you already have an app, okay, you can directly log in the app. Enter this ID 108929001. Okay. One second, pa. Hey, don't message me, pa. See this. X Limited, a real estate promoter, procured following for the financial year 2022-23. Compute GST payable under RCM under 94. Inputs other than cement from a registered person 800 lakhs and from unregistered, so 40 lakhs. Cement from a registered person 20 lakhs and from unregistered person 100 lakhs. Input services from a registered person 30 lakhs and from unregistered 10 lakhs. Now what is the GST payable under RCM 94? Your time starts now. Don't discuss and do answer. Try independently. One minute more. I'll stop. Okay. Yes. So 28 lakhs. Let's see. First, we need to check what is the total. 800 plus 40 plus 20 plus 100 plus 30 plus 10,000. And step 1 we don't have capital goods. So step 2 total we arrived. Step 3 cement purchased from unregistered person. Yes. Yes or no? Yes. To what extent? 100 lakhs. 100 lakhs into 28%. So 28 lakhs over. Then thereafter remaining purchase from unregistered person. How much remaining purchase from unregistered person? 40 plus 10, 50. Remaining other than cement from unregistered person, 40 plus 10, 50. 50 divided by 1000. How much? 5%. It does not exceed 20%. So no need to pay GST or RCM on the balance. So only on cement we need to pay. So 28 lakhs is the correct answer. Okay. Good. Now next question. So this is the question I give. One second here. Yes, answer this. Okay. I'll stop. But many is not answering, pa. Maybe you are just listening, looking at the screen, I think. Answered. Huh? No, no. In this. Only 35 students like that are only answering. Okay. So here, what is the total? 1000. And step 1 we don't have, capital goods we don't have. Step 2, that is total 1000. And cement is purchased from unregistered person? Yes. To what extent? 60 lakhs. So 60 lakhs into 28%, how much? 16.8 lakhs, that is one. And thereafter, so remaining from unregistered person, 210 plus 10, 220, 220 by 1000, 22%, excess 2%, 2% of 1000, 20 lakhs, correct or not? So 20 lakhs into 18%, 3.6, 16.8 plus 3.6, that is 20.4 is the answer. Understood? Last question, you answer this, we'll take a break. Okay, see the speed at which you are doing, good. So it is nil, correct answer, because the total is 1000. And here, so we don't have capital goods, and cement is fully purchased from registered person, and whatever is purchased from unregistered person is only 200, that is exactly 20%. So we don't have to pay any GST under RCM. So the answer is nil. Got the control of this 9.4? Like this only an MCQ could be asked on 9.4. Okay. So actually I wanted to do like this MCQ, marathon pa. So we will do, I will announce, and we will definitely do this, so that because if it is answer already there, you will not do. So like this, like a test environment means, so you will answer means you will refer, what is the answer, okay, like that. Okay, fine, thank you, and we will meet 2:15. Okay, 2:20, fine. Okay, welcome back. So there is one query in YouTube live, that is which places we use previous year, current year, confusion is there like that. There are many provisions related to that. Some places previous year, some places current year. But generally speaking, registration is current year. And then one more place, that is composition scheme, computation of GST payable will be current year. We take current year. But majority of the cases it will be previous year. Then for annual return and reconciliation statement, logically it is current year, but current year means a completed current year, okay. But in all other places it will be previous year only, okay. Previous year means the immediately preceding previous year which was completed. So that should be taken for determining, that is depends. You are in the month of April, May, June, July, to take the previous year. That is the logic, simple logic. Then next one is this exemptions. We completed few exemptions along with RCM. We will look into the remaining exemptions. So please look into page number 67. So what you need to do in this itself is that just you need to listen, nothing else. So because even one day before the exam also you need to revise it once and go for the exam. And in exam you see a transaction, and the transaction once you see itself, automatically you will be able to recollect that it is an exempted supply. So if you make an attempt to by heart it, or if you sit and try to recollect, you will not be able to do that. Impossible it is. So therefore when you see the question, the moment you read the question, it will strike in your mind that it is exempted. So for that what you need to do, there are two chapters in GST which you need to definitely revise one day before exam or at least on the day of exam, that is exemptions and place of supply. These two topics are something which we generally forget, so therefore we need to revise this one day before exam. So at must it is. No other chapter if you are reading also it's okay, it will be there in your mind, but these two definitely you have to just revise and go. The two in these exemptions you don't have to make any effort to remember also, just if you understand that okay this is exempted, that is enough. Now what are the exempted services? Agriculture and other related services, you can see page number 67, which says that any service in relation to agriculture or agricultural produce is exempted. That is, I am providing service in relation to agriculture, or I am providing service in relation to agricultural produce. Now I get some money, that is exempted. What is agriculture? That definition you need to remember, because in exam when you are writing that it is exempted, why it is exempted we need to write. That's where many students are not able to score marks there. So that is in notes when we are writing, we are just writing exempted, but why it is exempted? Suppose if it is agriculture, then agriculture meaning we need to know. Healthcare service means we need to know the meaning of healthcare service. So agriculture means any cultivation out of land, that is cultivation of crops, etc., cultivation of plants. But not only that, it also includes rearing of all life forms of animals other than horses. For what purpose? Food, fiber, fuel, raw material, or any other purpose. So food, that is poultry, fisheries will come, and raw material, honeybee farming will come, and fuel, so we have cattle rearing, and then so fiber, that is silkworm, sericulture. So these are all coming under agriculture. So the agriculture meaning is very important. So the first point is any service in relation to agriculture or agricultural produce is exempted. Agriculture means cultivation of plants and rearing of all life forms of animals except the rearing of horses. So rearing of horses will never be considered as agriculture, because even though horses is used for the purpose of fuel, but it is no way connected to the agriculture related fuel, because agriculture related fuel means cattle and all we will be using for the purpose of ploughing. So that's why cattle rearing, even though it is not giving milk, it will be coming under agriculture. But horses definitely we will not be using for ploughing, harvesting and all. So if you use horses, it will plough the entire road also, okay. So therefore we cannot use horses for agriculture, that's why it is excluded. What about other animals? Other animals are not allowed for rearing. Tiger, lion, elephant, etc. and all not allowed for rearing. So that is not covered. Whichever is allowed for rearing, in that horses is excluded. Then agricultural produce means the primary produce out of agriculture on which no processing is carried out, or some processing as is usually carried out by a cultivator, which does not alter its essential characteristics. So therefore the primary produce out of agriculture, tender coconut is an agricultural produce, but coconut will also become agricultural produce because that process do not alter its essential characteristics. And copra will also become agricultural produce, that is the dry coconut. And coconut oil will not become agricultural produce because completely there is a change in the process. Fruits and vegetables will also come under agricultural produce, but coffee and tea will not come under agricultural produce because its previous version, that is tea leaves and coffee berries, will only be treated as agricultural produce. And is paddy an agricultural produce? Yes, paddy is an agricultural produce, but rice is not an agricultural produce. Why? From paddy to rice, is there any change? No, there is no change. Its essential characteristics is same, but even then it will not come because so usually done by a cultivator or producer, then only it will be coming under agricultural produce. Suppose if it is not done by a cultivator or producer, it will not come. Usually done. So rice is not usually done by the cultivator or producer, it is by the rice mills. So due to that reason, it will not come under agricultural produce. As rice is not an agricultural produce, so none of the exemption is applicable for rice, because the first point says any service in relation to agriculture or agricultural produce is exempted inside the farm. That is, harvesting services, seed testing, soil testing, or preservation of the fruits and vegetables, that is agricultural produce, or transportation of fertilizers, pesticides, and then farmer education and training. All these will come under exemption, provided it is an agricultural or agricultural produce. As rice is not an agricultural produce, they have specifically given few exemptions with respect to rice. What are those exemptions with respect to rice? Come on. Loading, unloading, packing, storage. These 4 activities, only 4 activities, loading, unloading, packing and storage of rice is exempted. Then artificial insemination of livestock through artificial process. So this through injection there will be reproduction that will happen. So that is known as artificial insemination. So that is exempted. And services by way of storage and warehousing of some goods which are not agricultural produce. Generally storage and warehousing of agricultural produce is covered under the first point. What is that first point? Service in relation to agriculture or agricultural produce, there itself it is covered. But there are some goods which are not agricultural produce but its storage is exempted. What are those goods? That is cereals and pulses like dals, etc. and all. Then nuts and spices. Nuts and spices are processed, so that will also not come under agricultural produce, but its storage is exempted. Then jaggery, sugarcane is only agricultural produce, jaggery is not an agricultural produce, but storage of jaggery is exempted. Raw vegetable fibers such as cotton, flax, jute, so these are actually not agricultural produce because these are extracted, but even then its storage is exempted. Then unmanufactured tobacco, coffee and tea. Coffee and tea is also not agricultural produce. Just now I said that these are processed. So there are 6 goods that you can see here: cereals and pulses, nuts and spices, raw vegetable fibers such as cotton, flax, jute, unmanufactured tobacco, then jaggery, then coffee and tea. These are the 6 goods. Even though it is not agricultural produce, its storage is exempted. Like that, one more is also there, 7. Add one more point, that is minor forest produce. Minor forest produce is not agricultural produce, but its storage is exempted. Minor forest produce refers to bamboo, laths, honey, then this shikakai, Ayurvedic herbs, that and all will come under minor forest produce. Its storage is exempted. Then fumigation in a warehouse of agricultural produce is exempted. That is, there is a warehouse, and in that warehouse we are receiving pesticides and insecticide services. So these fumigation services means they will fill the warehouse with pesticides, then these gases, etc., so that small ants, germs will be killed. And this particular fumigation of a warehouse to keep agricultural produce is only exempted. Suppose that is a warehouse to keep, biscuits, chocolates or other eatable items. Whether fumigation service to that warehouse is exempted? No. Fumigation service to a warehouse, and that should be a warehouse to keep agricultural produce, then only it will be exempted. Then slaughtering of animals other than horses is exempted. Slaughtering of animals, slaughterhouses will kill the animals, will take the meat, pack it and sell it to various supermarkets. Supermarkets, they will be selling the packed meat. So these slaughterhouses will be receiving money, that is exempted. And in future it will become taxable. Actually this has become taxable. Last one has become taxable. So that point can be tested in exam. Okay. So now slaughtering of animals is taxable at present. For your exam, slaughtering of animals is exempted. So these are the 9 points that we need to remember in case of agriculture and its related services. Then insurance services. Insurance services, National Pension System Trust, NPS Trust. If they are collecting any amount towards insurance premium, that insurance premium will be exempted. NPS Trust. Towards life insurance, any premium collected. Same way, any premium collected by group insurance funds. So total, so we have Army, Navy, Coastal Guard, Air Force and Central Armed Police Forces. 5 group insurance funds are there. Under these group insurance funds, if any premium is collected, that premium is exempted. What are those 5 group insurance funds? Army, Navy, Air Force, Coastal Guard, Central Armed Police Forces. And then there is an insurance company. That insurance company can be any insurance company. They are providing general insurance services, but that general insurance services are notified by government. Then in that case, whatever premium collected by the insurance company with respect to those notified insurance schemes of government will be exempted. What are those notified schemes? There is a big list we have, but majorly these are related to agriculture and farmers, below poverty line, women and infants. So for that purpose, definitely in exam when they are giving, notified only they will be asking, non-notified they will not ask. But just apply this logic, whether it is for agriculture and farmers, below poverty line or women, yes, it will be exempted. For example, hut insurance, below poverty line, and scheme for insurance of tribals, below poverty line, and then coconut palm insurance, so that is for agriculture and farmers. Failed well insurance, failed borewell insurance, so that is again for agriculture and farmers. Like that, specified insurance schemes are there. Under that insurance scheme, if there is an insurance company which will provide the insurance services, for that whatever premium that will be collected, that premium collected will be exempted. So that is this. And another point is that Nirmaya health insurance is also exempted. This is the another point which you need to remember. Apart from this notified insurance, so generally, so this one extra point that is given is general Nirmaya health insurance, that is also exempted. Then same way, there is an insurance company which is providing life insurance services, but that life insurance service is under a scheme notified by government. So then the premium collected by the insurance company is exempted. How to remember the insurance scheme notified by government? Usually it ends with the word Yojana. Okay, so Pradhana Mantri Jeevan Jyoti Bima Yojana. So then Pradhana Mantri Vayavandhan Yojana, Fasal Yojana, like that, different yojanas are there. Under that Yojana, if it is given, then it is exempted. Or micro life insurance. Micro life insurance is also exempted. First, it should be a micro life insurance where the sum assured should not exceed 2 lakhs. So maximum is 2 lakhs, not minimum is 2 lakhs. Maximum should be 2 lakhs. So regular insurance where the sum assured is 2 lakhs, whether the premium will be chargeable to GST? Yes. So don't just get carried away by 2 lakhs. First it should be a micro insurance, and that micro life insurance, the sum assured should not be more than 2 lakhs. Then only the premium collected will be exempted. And micro life insurance is not for all. That is only for this daily wage earners, laborers, etc. For them only that micro life insurance is created. Then insurance services provided to government. So generally government also will be required to take insurance with respect to the property and life of its employees, etc. So there is an insurance company which is providing insurance service to government, for which government will pay the premium. That premium collected from government will be exempted. So these are the 5 insurance services which are exempted. Now, as these 5 insurance services are exempted, its reinsurance is also exempted. For example, if government is taking insurance on an airport for 500 crores, that insurance company is having a risk exposure of 500 crores. That insurance company will take reinsurance from another insurance company. As the main insurance is exempted, that reinsurance is also exempted. So this is not only for the 4th point, for all the 5 cases, For all the five cases, the sixth point will be applicable. So any insurance service which is exempted, its reinsurance is also exempted. Then point number 7 already we discussed, business facilitator or business correspondent working in rural area for insurance company and getting commission from the insurance company is exempted. Then third one, banking and other financial services. In this banking and other financial services, RBI related services already we completed. Services provided by RBI is exempted. Services received by RBI, in that management of foreign exchange reserves exempted. Others will be taxable, in that overseeing committee service to RBI RCM and import of service by RBI RCM. Any other case will be FCM. And then look into the second one, transaction in money. So transaction in money for a separate consideration or without consideration. If transaction in money is without consideration, it is neither goods nor services. For example, I will give you 1 lakh and I am taking back 1 lakh. So it is neither goods nor services because there is no consideration. But if there is a transaction in money for a separate consideration, then that separate consideration will be treated as supply of service, and that consideration is represented by way of interest or discount, it is exempted. So interest or discount on loans, advances, deposits is exempted. So May 22 attempt they asked discounting of bill of exchange, whether it will be taxable or exempted. So interest or discount is exempted. So that's the reason why, little bit concentration also we need. So because every time I will be telling this, interest or discount is exempted. Interest, at the time of discount you will turn off your mind, so it will not go. And many students are asking me, sir, why sir discount is exempted? So how many times I should tell? Interest or discount. Not only interest, discount is also exempted. Discount refers to the interest only, but it will be collected at the upfront itself. So therefore that is exempted on loans, advances, deposits. However, interest on credit card is not exempted. Interest on credit card is taxable. Concentrate. Interest on credit card is taxable. So therefore generally interest on any loans, advances, deposits exempted, but the interest involved in credit card will be taxable, and any other consideration on transaction money is also taxable, like NEFT, RTGS charges or debit card, credit card charges. Any charges collected by the bank will be taxable. Then third point, services by a banking company to basic savings deposit account holders under Pradhan Mantri Jan Dhan Yojana. So under PMJDY scheme, many bank accounts were opened for the purpose of that LPG subsidy transfer, and this particular bank accounts holders are called as savings bank account holders under Pradhan Mantri Jan Dhan Yojana. Suppose if any service is provided to them, then the money collected from them, the charges collected from them will be exempted. Interest anyhow exempted, but any other charges also exempted. What about services provided to other savings account holders and charges collected from them? That will be taxable. Suppose from these people, any charges collected, that will be exempted. Then next, foreign exchange transactions. If there is any foreign exchange transactions or money changing services from one currency to another currency, if the transaction takes place between the banks, exempted, and between the forex dealers, exempted, between bank and forex dealer, exempted, then when it will be taxable? Only between bank or forex dealer and the customer. So then only it will be taxable, and it will be taxable. We don't have RCM. So now whatever we are going to discuss, everywhere the taxable will be FCM, because we completed what are all covered under RCM. Then number 5, services by an acquiring bank, that is processing fees. Usually on card payment there will be processing fees. On that processing fees GST will be applicable. But if that processing fees is on transaction up to 2000 rupees, transaction amount, not value, value plus GST, the transaction amount or the swipe amount is up to 2000 rupees, then also there will be processing fees collected by the gateway provider, but on that processing fees there won't be any GST. Suppose if the amount exceeds 2000, for example 5000, on 5000 2% is the processing fee, for example, then processing fee will be there. Processing fee will be there always, even for 2000 rupees also processing fee will be there, 3000, 4000, 5000 also processing fee will be there. But GST on processing fee will not be there if it is up to 2000, and GST on processing fee will be there if it is beyond 2000. Now, generally this e-commerce websites, so there will be payment gateway integration. For example, Razor Pay, Paytm, etc. So these people also will be collecting processing fees which ranges between 3% to 5%. So that much they will be collecting as processing fee. In that case, on that processing fee, will there be any GST? Yes, even though the amount does not exceed 2000. For example, I will be selling a book. That book will be 300 rupees. That's it, book 300 rupees. And a student will be paying 300 rupees through payment gateway. I will not receive 300 rupees. I will be receiving 3000 rupees, 300 rupees minus that 3% will be deducted by Razor Pay. 3% they will take. On the 3%, there is GST. Why? The transaction amount is not exceeding 2000. Why there is GST here? Because this is applicable only for card payments. This is applicable only for card payments. Please keep this in mind. For payment gateway and all, it is not applicable. Only for card payments, processing fees, 2000 rupees, processing fee will be there. But on that processing fee, GST will not be there. So through credit card, debit card, charge card, or any payment card service, so they will be giving. So Razor Pay collecting payment gateway charges for making purchases through a e-commerce website. So amount is 2000, less than 2000. Taxable or exempted? Taxable. It is not exempted. Then point number 6 already we discussed, that business facilitator, business correspondent. Then 7th one, services by an intermediary of financial services. Intermediary of financial services generally located at multi-service SEZ in India. Only one multi-service SEZ is there in India, that is GIFT. Okay, Gujarat International FinTech City. So that GIFT city, so one multi-service SEZ is there, that is multi-service SEZ, and in that there is an intermediary, financial services intermediary. They are providing services to their customers outside India, and that too in relation to currencies other than foreign currency. Then their commission or their service charges received will be exempted. It will never qualify for export of service. Why it will not qualify for export of service? In order to become export of service, there are 5 conditions that should be satisfied. The supplier should be located in India. Supplier should be located in India or outside India. India. For export of service, supplier should be in India. Then where the recipient should be? The recipient should be outside India. The recipient should be outside India. Number 3, the place of supply should be outside India. The place of supply should be outside India. Number 4, how the consideration should be? The consideration should be in convertible forex, foreign exchange. But in case of Nepal or Bhutan, it can be in Indian rupees. Can be Indian rupees. Then number 5, supplier and recipient are not two establishments of same person. Supplier and recipient are not two establishments of same person. So then only it will be treated as export of service. Why this service will not become export of service? In case of intermediary services, when supplier is in India, recipient is outside India, section 13 will be applicable. 13 of IGST Act will be applicable. As per section 13 of IGST Act, for intermediary services, we need to take place of supply as the location of supplier. So as the supplier in India, recipient in India, place of supply is not outside India, because as per section 13 of IGST, the place of supply in case of intermediary service is the location of supplier, that is India. That's why it will not qualify as export of service. So they have given the exemption separately with respect to that. So intermediary of financial service located in multi-service SEZ, and for international financial service in currencies other than Indian rupees. And their services do not fall under export of service, as place of supply is the location of supplier. Then next one, healthcare services. Healthcare services, we have few exemptions with respect to this, but here we need to remember the meaning of healthcare, very, very important part. So first point, if you see, healthcare services provided by a clinical establishment, authorized medical practitioner, paramedics, including ambulance service is exempted. This is the exemption. Now, what is a healthcare service? Healthcare service means diagnosis, treatment, care. Diagnosis will happen before treatment. X-ray, scanning, MRI, CT, everything will come under diagnosis. Treatment. So then care. In where? That is, in these 3 should be for what purpose? For any illness, injury, or for pregnancy or any disease. Okay, and in which system of medicine? Any recognized system of medicine in India. So what are the recognized system of medicines in India? A lot of recognized medicines are there. Allopathy, naturopathy, Siddha, Unani, Ayurvedic, and even yoga is also considered as a recognized system of medicine. What are not considered as unrecognized system, not considered as recognized system of medicine? Pranic healing, Reiki healing, and this Baba Swamijis who do magic will not be coming under recognized system of medicine. Okay. So diagnosis, care, treatment, care for any disease, illness, injury, pregnancy, including transportation in an ambulance, but does not include. So cosmetic, plastic and hair transplantation. This is too much healthcare. If it is not done, people will not die and all. So then I should have died long back. Other than for restoring body parts affected due to congenital defects, developmental abnormalities, injury or trauma. So generally these three, which three? Cosmetic, plastic and hair transplantation will not come under healthcare, but these three will come under healthcare when? If these are to carried out to restore the anatomy of the body parts affected due to congenital defects. Congenital defect means by birth. For example, a baby born with cleft lip. So in that case, a plastic surgery done. It will be covered under healthcare services. A person met with an accident, fire accident, and plastic surgery or cosmetic surgery done. It will be coming under healthcare services. So any injury or trauma, developmental abnormalities, congenital defects means by birth, developmental abnormalities means during the growth, and injury or trauma. In that case, if these three are carried out, this will be coming under healthcare services. Then clinical establishment, because healthcare services provided by a clinical establishment or authorized medical practitioner or paramedics is exempted. What is a clinical establishment? Any place where the healthcare service is provided is known as a clinical establishment. Even a clinic, nursing home, everything will be coming under clinical establishment. Authorized medical practitioner means they should be having minimum qualification and should be registered with the medical council. And paramedics means those who assist the authorized medical practitioner, nurse, compounder, and then lab technician, physiotherapist, they will be coming under paramedics. And including ambulance service. Ambulance service is already given under healthcare service. Even separately it is also given, which means that ambulance service, whether part of healthcare or not part of healthcare, it will be coming under exempted. But ambulance should be used only for transportation of the patient. Suppose if the ambulance is going and drop the patient and return, they have to return empty. So 4-5 people they took and they collected from 50 rupees from each person. Whether that will be taxable? Yes, that will be taxable, because they are not transporting the patient. That is one MCQ given by ICI, you understood. And in ICI MCQ booklet, this MCQ is there. So yes, it will be taxable. Only transportation of a patient in ambulance is exempted. Then ambulance given on rent to a construction company. So construction company will be keeping that ambulance always next to the construction site. So they will be paying some charges for that ambulance. Ambulance rent, is it for transportation of patient in ambulance? No. So then it will be coming under taxable. So renting of ambulance will be taxable. That is this healthcare service by a clinical establishment. Then we have cord blood banks. Cord blood banks will be preserving the stem cells. For preserving the stem cells, they will be collecting some charges, that is exempted. Then healthcare service in relation to animals or birds, veterinary clinics exempted. Service of common biomedical waste treatment operators who collect the medical waste from various hospitals, process or recycles that medical waste, for that whatever charges collected is exempted. Then renting of rooms to inpatients in a hospital. So for inpatients, all the services provided by the hospital is exempted. That could be renting, that could be renting of rooms or food, providing food or any other services provided to them is exempted. Suppose for the outpatients, if a hospital is selling food, will it be taxable? Yes. So, but only to inpatients the exemption is available. To the outpatients, visitors or staff of the hospital, if they sell food in the canteen, that will be taxable. Then services provided by consulting doctors to hospitals is also exempted. And this renting of rooms to inpatients, so this will be getting taxed. So 5,000 rupees, if it exceeds, it is getting taxed. So this is the last attempt where whatever may be the amount, it is exempted. So there is a chance that it could be tested. Whatever may be the amount, sir, 10,000 rupees per day exempted, 25,000 rupees per day exempted. Yes, Paul, it is there. One MGM hospital like that, it is there. MGM healthcare like that. One 5-star hospital. Then here also one hospital is there. That is no, yaar. In that Nungambakam main road, one big hospital is there. Westminster Hospital. So that is also, you will get confused, it is hospital or 5-star hotel. That confusion will be there. There in that MGM hospital and all, I have seen inside the hospital, that is patient bed. So bathroom, I opened bathtub and all is there. So this we can pay 25,000 rupees, we can pay, no problem. And that will be taxable or exempted? Exempted. Fully it is exempted. Services provided by consulting doctors to hospitals is also exempted. So that is, consulting doctor will not be working with one particular hospital, they will be working with multiple hospitals. Then in that case, so hospital collecting the money from the outpatient, exempted. So doctor collecting the money from the hospital, exempted. So even though doctor not directly collecting money from the patient, but doctor collecting money from the hospital, that is also exempted. What if the doctor is an employee of the hospital? That is anyhow excluded from supply. Then services by rehabilitation professionals. Rehabilitation professionals are psychology experts who will be providing care and counseling. If they are working in medical establishments for the purpose of providing care or counseling to the patients who are admitted there, or in the education institutions for the purpose of providing care or counseling to the students who are studying, and whenever students are getting depressed and all, so they will be counseling them that don't worry, don't fail and all, you will definitely able to clear. I like that they will be counseling. Sometimes they will give examples of CCS students, so they will not be worried and all. So like that. Then rehabilitation centers established by central or state government, union territory or entity registered under 12A or 12AB of Income Tax Act. That is, when it is medical establishments, let it be government or private, the remuneration received by them is exempted. When it is educational institutions, let it be government or private or a trust, whatever money that they are receiving is exempted. But when it comes to rehab centers means, so people who are drug addicts, alcohol addicts, etc. and other addicts, so will be sent to the rehab centers. So these rehab centers, if it is private rehab centers, then it will be taxable. If it is government or trust owned rehab centers, then only it will be exempted. What is exempted? That rehabilitation professional getting money, that is exempted. That is this point. Dentist. So dental will come under cosmetic. Dental will come under cosmetic unless otherwise it's a root canal treatment. Root canal treatment will be coming under healthcare services. That's a treatment. Whereas, so once they take the teeth and they will put one cap, that is cosmetic. So that will be taxable. Okay. And when change is not there also, extra tooth also they will take. You didn't get? One comedy scene is there. So that one. So then, so treatment only exempted, but cosmetic procedures and all will be taxable. Then entry tickets. Following entry tickets are exempted. These entry tickets, irrespective of the ticket price, it is exempted. What is that irrespective of ticket price? Related to animals. 3. That is zoo, wildlife sanctuary, national park. No, tiger reserve, not national park. So related to animals, 3 only. Zoo, wildlife sanctuary, tiger reserve. Okay. Then related to place. So place, what is that place? National park, museum and protected monuments. Okay. So entry to protected monuments, that one. And then 2 events, 2 sporting events. FIFA Under 17 Women's World Cup 2020. So India got banned. So from conducting, again they lift the ban. So they are allowing so that we can play and all. Okay, we are only hosting that, and for that entry ticket will be fully exempted, whatever may be the amount. And AFC Women's Asia Cup also India is only hosting. For that, whatever entry ticket that is there, that is fully exempted. So these are the entry tickets, irrespective of the ticket price, that is exempted. So total you need to remember 6. 8. So first 3 related to animals. Tiger reserve, zoo, wildlife sanctuary. Related to place, museum, national park, protected monuments. Then 2 sporting events. Okay, FIFA Under 17, AFC Women's Asia Cup. Then when it comes to other tickets, if the ticket price does not exceed 500, then it is exempted. In that 4 events, 4 events. That is, number 1, award function. Then sporting event, let it be any sporting event. So it can be, recognized sporting event or unrecognized sporting event, any sporting event. Then pageant. Pageant refers to beauty shows. Okay, so pageant, and then we have this circus. So circus, award function, then pageant and sporting event. These are the 4 events. Entry ticket is exempted if the ticket price does not exceed 500. Whereas there are 4 performance related entry tickets. There also ticket price will be exempted if the ticket price does not exceed 500. Performance related, that is dance, music, concert and theatrical performance. Sir, stand-up comedy, where it will come? Theatrical performance. Stage shows, all kind of stage shows will come under theatrical performance. For that the money collected will be exempted if the ticket price does not exceed 500. So 4 events related and 4 performance related, and total 8. 1 extra, that is planetarium. So this planetarium entry ticket will be exempted if the ticket price does not exceed 500. So there are 8 entry tickets exempted irrespective of ticket price, 9 entry tickets exempted if the ticket price does not exceed 500. Apart from these 8 and 9, any other entry ticket will be taxable. Entry to cinema theatre, even if it does not exceed 500, taxable. Entry to any theme park, if the ticket price does not exceed 500, then also it will be taxable. Entry to any gaming alley or gaming event, bowling events, etc., for that also it will be taxable if the ticket price does not exceed 500, because that is not covered in this list. Then pension services. There are 2 pension services which are exempted. Nowadays pension services are provided by many people. Like monthly you can contribute some amount, it will be accumulated. SIP plus SWP, systematic investment plan plus systematic withdrawal plan. But this particular pension services provided by any person is not exempted. It will be taxable. Monthly they will be collecting some contribution, that will be taxable. But only 2 pensions are exempted. Atal Pension Yojana of central government and any state government pension scheme. These 2 pension schemes, whatever monthly contribution collected, that will be exempted. Then services by some specified organizations. So these are the specified organizations. So whatever money that they are collecting, that will be exempted. SEBI will be collecting money from the listed companies, and ESIC, Employee State Insurance Corporation, will be collecting from factories for the purpose of providing insurance to the health insurance to the workers. And EPFO, Employee Provident Fund Organization, so that normal employer PF, employee PF, that contribution collected. IRDA will be regulating insurance companies in India, for which they will be collecting some money. NCCCD refers to National Center for Cold Chain Development. Whatever money that they are collecting will be exempted. Then foreign diplomatic mission located in India. Foreign diplomatic mission located in India means embassies, consulates or UN organizations. Money collected by them is exempted. While discussing UIN holder, I told you their outward supply is exempted, but on their inward supply, whatever GST they paid, they can get it as a refund, that one. Then CMPFO refers to Coal Mine Provident Fund Organization. Money collected by them is exempted. And NPS trust already we covered above. So NPS trust is covered, so that is exempted. Coal Mine Provident Fund is just like EPFO, but this is for workers who are working in the coal mines. Then charitable and religious service. Services by an entity registered under 12AA or 12AB of Income Tax Act, by way of, there are only specified charitable activities. Only 4 activities are covered under charitable activities. What are they? Public health. Public health includes even awareness, creating awareness. So that is also part of public health. Anyhow, healthcare service is exempted. So this, even if provided by a charitable trust, is also exempted. And advancement of religion, spirituality and yoga. For that, whatever money that they are collecting, that is exempted. So then all these Swamijis, Babas, etc. and all exempted. Then educational programs to physically or mentally traumatized persons. Physically, mentally traumatized persons, prisoners and persons over 65 years residing in rural area, not urban area, residing in rural area. So for them, whatever educational programs that are provided by the trust will be exempted. Then environmental preservation. So the 4 charitable activities are public health, advancement of religion, spirituality, yoga, and educational programs to physically or mentally traumatized persons, prisoners, persons over 65 years residing in rural area. Even it also includes orphans also, orphanages also. And then environmental protection. These are the 4 charitable activities. Apart from this, any other charitable activity, if not covered under the below exemptions, will be taxable. Now second exemption you can see, there is a old age home. That old age home is run by a trust or by a government. In that old age home, so they are giving accommodation to the people over 60 years of age. Over 60 years, 60 years or more. 60 years or more. and if they are collecting monthly up to 25,000 rupees per month per member, then it is exempted. Suppose if it is beyond 25,000 entirely, it will be taxable, but usually it will not go beyond 25,000 and all, so it is exempted. And this is all inclusive for boarding, lodging, food, etc. Then services by any person by way of conduct of religious ceremony, so that is purohit, priest, etc. whatever money that they are cutting for conducting the religious ceremony, marriage functions, etc. for that money they receive will be exempted. Then services by special organizations for religious pilgrimage, only two are considered as religious pilgrimage, Kailash Manasarovar Yatra and Haj Yatra, these two are only considered. That too, this should be provided only by a special organization, then only it will be exempted. Then next one, education services. Education services, services provided by an educational institution to its students, faculty and staff is exempted. So what are those educational institutions? You can see the fifth point. Any service provided by educational institution, whatever they can provide. So that can be, extracurricular activities, co-curricular activities, library fees, book fees, uniform fees, or late coming fees, not wearing tie fees, not wearing shoe fees, not wearing belt fees, wearing dress fees, everything. Okay. So everything they will be collecting. All this money collected by the educational institution will be exempted. And so this educational institution, category 1 up to 12th standard. Okay. Starting point anywhere, sir. Please, preschool, daycare, anywhere, starting point and all, nothing like that. Even next day, today born, next day also they can put in school. Everything will be covered under exemption up to 12th standard. And after 12th standard, what's next? Some qualification. So for the purpose of qualification, any education will be exempted, provided that qualification is recognized by law in India. However, in this category 1 and category 2, if there are any tuition centers, the tuition centers will be chargeable to GST. They need to pay GST. Then category 3, approved vocational education, that is skill based. So approved vocational education means ITI, Industrial Training Institute or Industrial Training Center. So affiliated to NCVT or SCVT, National Council for Vocational Training, State Council for Vocational Training, or providing modular employable skill course. So you just write down that. What is the meaning of approved vocational education? Approved vocational education refers to ITI, Industrial Training Institute or Industrial Training Center, affiliated to NCVT, National Council for Vocational Training. It is a central board for vocational training. Then SCVT, State Council for Vocational Training, it is a state board. Or modular employable skill course, modular employable skill course under government, modular employable skill course under government. So this will be treated as vocational, approved vocational education. ITI means Industrial Training Institute, ITC means Industrial Training Center, NCVT means National Council for Vocational Training, SCVT means State Council for Vocational Training. Then so these are the services provided by educational institution to students, faculty and staff is exempted. So not only to the students, even to the faculty and staff is also exempted. Then suppose if it is services provided to educational institution, this is services provided by educational institution, services provided to educational institution. This is already tested in May 22 exams. Services provided to educational institution. So transportation service, catering service, security and housekeeping services. These 4 services, transportation services, catering service, security and housekeeping service, these 4 services provided to category 1 educational institution, then only it is exempted. If it is provided to category 2 and category 3 educational institution, it will be taxable. Whereas admission to or conduct of examination, admission to institution, bringing admissions to that institution or conducting examination of that institution, setting question paper or printing question papers or evaluation, invigilation, etc., or renting of hall for conducting exam, all these are exempted in all 3 categories. So category 1 or category 2 or 3. This is not services provided by educational institution, this is service provided to educational institution, means educational institution is recipient. Then online periodicals and journals. Online periodicals and journals only in case of category 2 institute it will be exempted, whereas category 1 and 3 institution it will be taxable. So this is with respect to service provided by and to educational institution. Then look into the first point, that is if there is any educational institution which is collecting the entrance exam fee, that entrance exam fee collected by the educational institution will be exempted provided they are giving seat to all the students or not. That entrance exam fee is always exempted. So whether this is to be collected by educational institution or a coaching center, educational institution, then only the entrance exam fee will be exempted. What if there is a educational institution, so that is not providing the admissions to all the students who wrote the entrance exam there, even then it is exempted. Suppose if there is an examination board, that examination board will conduct only the exams, they will not do anything else, only conducting exam and giving the score. Based on the score, for example NEET, IIT, JEE, based on score the colleges will be doing the counseling, and depending upon their rank they can go and join the colleges. In this case, whether that examination board will be called as an educational institution, because if it is called as educational institution, then the entrance exam fee collected by them is exempted. If it is not, then it is not exempted. Yes, they will be called as an educational institution. We have a CBIC circular related to that, which says that central and state examination boards, you can see that in the next page, central and state educational boards are treated as educational institution for the limited purpose of conducting examination. So yes, they will come under education institution, and therefore whatever fees that they are collecting from the students will be exempted. Whether Anganwadi schools, that is daycare schools, so will be covered under education institution, yes, category 1. And suppose if they receive catering services, because in Anganwadi schools they will be providing this egg etc. and all for the kids, and for which they will be receiving catering services. Whether the catering service provided to Anganwadi schools will be exempted, yes, because Anganwadi schools will come under preschool education, so it is under category 1. It is also exempted because catering services provided to category 1 institution is exempted now. What is category 1? Up to 12th standard. So Anganwadi will come under up to 12th standard. This is another CBIC circular, that is Anganwadi schools are treated as educational institution, therefore food supplied to them will be exempted, whether that funding may be from government grants or corporate donations, whatever it may be, it is exempted. Reason being, the person from whom we receive the money is irrelevant, so we need not receive money from the recipient, so consideration need not be received from recipient. Presence of consideration is only relevant, receipt of consideration is not relevant. So based on that point, they are telling that even though money is received from any other person, but the service provided to Anganwadi schools will be exempted. Then next point, look into second point. Sir, one more point in this regard, whether IIMs will be treated as educational institutions. Whether IIMs are treated as educational institutions, yes, IIMs are treated as educational institutions with effect from 2017. Until 2017, IIMs were not recognized. Means whatever qualification that was given called as PGDA, PGDM, so that was not called as a degree, it was called as a diploma only, and 2017 onwards only that was called as a degree, and that's how they made law. We can't do anything with respect to that. They started IIMs long back, but the law came only in 2017, okay, and therefore this IIMs, whatever money that they are collecting will be coming under education institution, but IIM will be providing executive certification or executive degree and all, so that will be like 1 year, short term courses, 6 months, 1 year, like that. That is not called as qualification, so that is only certification. In that case the money collected by IIM will be taxable, okay. Then number 2, amount paid to training providers under Deen Dayal Upadhyaya Gramina Kausalya Yojana DDUGKY scheme. There will be some training providers who go to the rural places and they will be providing training in various skills. Whatever money that they are getting for providing training to this rural youth will be exempted. Then any service provided by National Skill Development Corporation set up by central government or sector skill council or any assessment agent or training partner, any skill course, that could be computer education or animation, VFX, etc., or computer repairing, mobile repairing, whatever skills that are taught to the students, so for which money collected will be exempted by 4 people: National Skill Development Corporation, sector skill council, assessment agent or training partner. Then next one, point number 7, training in recreational activities relating to arts and culture. So training in recreational activities relating to arts and culture fully exempted, and that need not be registered as a trust. But if it is training in recreational activities relating to sports, it is exempted only when they are registered as a trust. Suppose if there is a cricket academy, that cricket academy is registered as a trust, then whatever fees they are collecting from the students is exempted. If the cricket academy not registered as a trust, whatever money that they are collecting from the students for training in cricket will be taxable because it is not registered as a trust. Whereas suppose if there is a dance school, that dance school is not a trust. So fees collected, exempted. If it is a trust, fees collected, exempted. So dance school, that is arts and culture, everything will be exempted. There is no condition there. Culture refers to languages. Even language centers also will come under culture only. Okay. Then services by assessment bodies under skill development initiative. Under skill development initiative scheme, people from the industry will come and form an assessment body and they will review the curriculum. For reviewing the curriculum, so that money will be paid to them by the government, because based on their review of curriculum, so the updated curriculum will be taught to the students, so these students will get employment in the industry. So for that, the people from the industry who do the review of curriculum will get some money from the government. That money received from the government is exempted under this skill development initiative scheme. Then next, services provided by government. So this already we have completed fully, but look into services provided to government. In this there is one amendment also, that is government is required to provide some services under Constitution Article 243G or 243W, and government includes local authority also. And for example, solid waste management. Solid waste management means so cleaning of garbage. So this is the work of the government as per Article 243G or 243W of Constitution, but they will not do that. They will outsource it to some other person. That some other person will be providing services to the government. For that, whatever money that they are receiving will be exempted if it is a pure service. If it is a composite supply of goods and service, then also it is exempted if the value of goods does not exceed 25% of the total. And for example, construction of road. In construction of road, definitely the value of goods will be more than 25% of the total. Therefore, that service will be taxable. Suppose if it is sanitization of streets, in that sanitization of streets, the goods element is only chemicals, so its value does not exceed 25% of the total. Therefore, it will be exempted. Then, in case of supply of wheat flour that is to public distribution system, ration shops. So in that case, services provided to government. But here what service? They are buying the wheat, they are converting it into wheat flour and they are giving. So what is the goods element? Definitely more than 25%. So therefore that will be taxable. There is one circular related to that. Composite supply of service by way of milling of wheat into wheat flour along with fortification by any person to state government for distribution of such wheat flour under public distribution system is not eligible for exemption as the value of goods involved is greater than 25%. Then next, this amendment here is that previously this services provided to government authority or government entity was there as exemption. Now they removed government authority and government entity, which means if services are provided only to government, it will be exempted. Okay. In this case, services provided only to government is exempted. Then other points is any training program for which greater than 75%, greater than or equals to 75% of the expenditure is borne by government. For example, say for below poverty line students or for minority students, NEET coaching is provided by a coaching center, but that is partly funded by government and partly collected from the students. Say 40% collected from the students, 60% funded by the government. Now in this case, whether that coaching fees will be taxable or exempted? Taxable. Why? Because how much they should fund? 75% or more. Suppose if they have funded 80% and the student has paid 20%, now in this case what is exempted? Money received from government is only exempted or the total money is exempted? Total money is exempted because the exemption here is respect to the training program. Then services provided by institutions or NGOs under central scheme of scholarship for students with disabilities. So there is an NGO which is providing training for the students so with disabilities, where total expenditure is borne by the government, then that money collected by those NGOs will be exempted. So previously for everything it was exempted if the entire expenditure was borne by government, but now they have divided that into two. What is that? For students with disabilities, entire amount borne by the government, so then that service is exempted. Whereas other cases, if at least 75% of the expenditure borne by government, the training program is fully exempted. That is this. Then renting we have completed, sports service also we have completed. So look into the next area, page number 77. services by an unincorporated body or a non-profit entity to its members. Following are exempted. Suppose if it is a trade union, if it is a trade union, so trade union means association of traders collecting money from its members. So then that membership fees collected by the trade union is exempted irrespective of the amount. Then there is an association, an unincorporated association which is providing services to its members. That service itself is exempted. Say for example 10 doctors formed together and they have started one hospital as an association. Now that hospital is providing services, care services to one of the doctor who is a member. Now in that case, even though that is services provided by unincorporated association to its members, but that service itself is exempted. Healthcare services are exempted. If they provide to outsiders also exempted, if they provide to members also exempted. That is this. Then suppose if there is a resident welfare association, resident welfare association will be collecting money as maintenance charges from the flat owners. Suppose if the maintenance charges per month per member does not exceed 7,500, then it is exempted. Suppose if per month per member, if it exceeds 7,500, entirely it will be taxable. Even though a Madras High Court case is there which says that only excess is taxable, but that High Court case, Supreme Court cases and all not applicable for your exam. So therefore, for your exam, it will be taxable entirely if it crosses 7,500. Suppose if there is an agricultural labor association or industrial labor union. So these labor unions will be there. These labor unions will be collecting membership fees from the union, that is members. So all workers, industrial workers will form a labor union. So they will be collecting membership charges. So that will be exempted whatever may be the amount. Apart from these four, if there is any other association, the fees collected, membership fee collected will be exempted if it is less than or equals to 1,000 rupees per annum. 1,000 rupees per annum, 1,000 rupees per member per annum, then it will be exempted as an entity for promotion of trade, commerce or industry. Okay, but ICI and all will not come into this category because actually it is not an unincorporated body, it is an incorporated body due to that reason. Okay, if there is any other club or association etc., if they are collecting up to 1,000 rupees per annum, not per month, it is per annum, whereas here it is per month. It is per month. Then in case of resident welfare association, if it exceeds 7,500, then entire amount will be taxable. Then transportation of passenger service. In case of transportation of passenger service, following are exempted. Transportation of passengers by railways. So railways, only two exemptions we have. Now whatever I am going to discuss is only the exemptions in case of transportation that you need to remember. Okay. So balancing figure will be taxable. Okay. So transportation of passengers by railways, only two exemptions we have. What is the two exemptions? So we don't have two exemptions, two cases only taxable. So all other cases it is exempted. So therefore what are those taxable? So except AC and first class it is exempted. Means what are taxable? Any AC and any first class will be taxable. Except AC and first class is exempted. Okay. So other than first class AC, first class or any AC is exempted. Then AC or first class will be taxable. So AC can be any class. So first class, second class, 3-car, chair car exempted or taxable. Then next, what about first class? First class can be AC or non-AC. So non-AC first class we see in local trains. So that will be taxable. Okay. Apart from these two, everything else is exempted. Then metro, mono and tramway. In case of metro, mono, tramway, don't see whether it is AC, non-AC, first class, etc. Metro train, monorail and tramway completely exempted. Then airways. In case of airways, so two exemptions are there. If the passenger is starting point or ending point, either starting point or ending point is in northeastern states or Bagdogra in West Bengal, then it will be exempted. What are the northeastern states for this purpose? For the purpose of the exemption, MMTN, ASAM, MMTN, ASAM. So what is the northeastern states for this purpose? MMTN is what? Manipur, Mizoram, Tripura, Nagaland. A is Assam, Sikkim, Arunachal Pradesh, Meghalaya. somewhere the states already we have come across MMT and USAM for composition scheme. Here in the place of Uttarakhand we have Assam. So these states are the northeastern states for the purpose of exemption if the starting point or ending point of the journey is in. Same way Bagdogra in West Bengal. Then second exemption, suppose if there is a airline which is receiving consideration under viability gap funding from government for regional connectivity scheme. So whenever they are operating in some airports, they will be subsidizing the rates. As they are subsidizing the rates, why they are reducing the rates? Because part consideration will be received from passenger and remaining consideration will be received from government. That consideration received from the government will be exempted for a period of 3 years. Beyond 3 years also they may continue to be in the regional connectivity airport scheme, but that amount received will be taxable. That is this consideration as viability gap funding. Then waterways, in case of waterways, inland waterways is completely exempted, whereas coastal waters means seaways, but it is within India, coastal waters within India. So two exemptions in case of waterways. Number one, inland waterways fully exempted. Coastal waters between places in India, domestic coastal waters, okay. And for other than tourism purpose, so that will also be exempted. So transportation of passengers in coastal waters means one place in India to another place in India, say Andaman and Nicobar Islands to India. So transportation is there in waters, coastal waters, but between places in India. For what purpose? Other than tourism purpose, public transportation. Therefore, it will be exempted. Suppose for tourism purpose, if there is any coastal waters transportation, so that will be coming under taxable. Then roadways, in case of transportation of passengers by roadways, so we have 3 exemptions. Non-AC stage carriage is exempted. Non-AC stage carriage. So stage carriage which stops at every stage of his journey, share autos, then small bus, big bus. So stage carriage, local buses will be coming under this, but it should be non-AC. If it is a AC bus, definitely that will be taxable. Then non-AC contract carriage. Contract carriage means point to point travel. It does not stop at every stage of the journey. So starting in one point and ending in another point, in between they will stop. In one forest where only one restaurant will be there only they will stop. Okay, so that will be called as point to point travel. Usually this non-AC contract carriages and all will be coming under AC. Non-AC contract carriages rarely we will see, because by default contract carriages means point to point bus and all. So definitely it will be AC only. Suppose if it is a non-AC contract carriage other than for hire or tourism, then it is exempted. Suppose if it is a non-AC contract carriage taken on hire, so then it will be taxable. Non-AC contract carriage for tourism purpose, say package tour to one trip, okay. So then also it will be taxable. Other than this means what? For public transportation, then only it will be exempted. Then metered cab or auto rickshaws. Metered cab or auto rickshaws are also exempted. So metered cabs means that meter which will be fixed onto the car, not the radio taxi, the taxi, regular taxis, that will be coming under metered cabs or auto rickshaws. Now there is one amendment in this place. That amendment is, so these 3 are actually exempted, but if these 3 are through an e-commerce operator, it will become taxable, and liability to pay GST is on e-commerce operator. General auto, no GST, exempted. Auto through Ola, Uber, taxable. GST payable by Ola or Uber. Got it? Like that, this stage carriage, non-AC stage carriage, non-AC contract carriage for public transportation, metered cab or auto rickshaw, if these are through an e-commerce operator, then it will be taxable. Exemption is not available. That is the amendment. Then transportation of goods. So far what we have seen is transportation of passengers. Now transportation of goods. So here we have again the 4 modes. If it is transportation of goods through railways, specified goods will be exempted. What are specified goods? The same 6 specified goods that is there for GTA plus extra one, that is railway equipments we have. That is agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, relief material for natural and man-made disasters, defense and military equipment, railway equipment. So these are the 7 goods, specified goods for transportation by railways, which is exempted. Then airways. In case of airways, domestic is always taxable. So only international they have given exemption. India to outside India exempted, outside India to India is exempted. Up to this, India to outside India is exempted up to 39/2022. Previously it was up to 39/2021. They extended up to 39/2022. So therefore for your exam it is exempted only, and both ways it is exempted, India to outside India to India. But if you see waterways, inland waterways exempted. Anyhow, transportation of passengers by inland waterways also exempted. So goods transportation by inland waterways also exempted. That is national waterways, river. And suppose if it is international, that is India to outside India to India, you can see there India to outside India is only exempted. Outside India to India is not exempted, which means it will become taxable. Why? Because they wanted to restrict the smuggling that happens. Usually smuggling happens easily in case of waterways, not in case of airways. Because some people, what they will do, they will go to the sea and one ship will be coming using this Sivakasi crackers, rockets and all. They will blast the vessel. So therefore in the vessel people will jump and run away. In that vessel lot of laptops will be there. So he will take those laptops and he will sell off those laptops and construct small houses for the poor people. Like that and all smuggling will be done. Okay. So there's this. So like that in aeroplane and all it cannot happen. So we cannot stop the aircraft. We cannot say to the pilot, if you are not stopping, I will kill you. Then the aeroplane, they will stop and we will open the door. We cannot take the goods and all. So that is practically not possible. Maybe in the next set of movies, either 67 or 68, 69 movies. So they will be doing it. Okay. So that is there. And that is with respect to this. Coastal waters from India to outside India will be exempted up to 39/2022, and coastal waters within India, okay, within India, so specified goods. You didn't get 68, 69, 60, you don't, huh? Oh, okay. Otherwise, after class you ask me, I'll explain. Inland waterways. One person took one Rafale jet to bring one terrorist. Okay. About that person I am talking. Okay. So, coastal waters within India, specified goods will be exempted. Okay, come back. Transportation of goods by coastal waters, but within India, only specified goods. What are these specified goods? This specified goods as well as this specified goods is same. So whatever is the specified goods for railways, the same is the specified goods even for waterways. But which waterways? Coastal waters between India. For example, Gujarat to Mumbai or Visakhapatnam to Chennai. So that will be coming under coastal waters within India. Then coastal waters, India to outside India exempted. Then roadways, other than GTR courier, everything is exempted. And transportation of passengers by cable car, taxable or exempted? Taxable, because transportation of passengers, this is only given as exemption. Balancing figure taxable. Cable car, ropeway, horse cart, bullock cart, everything will be taxable. Sir, horse cart, bullock cart also taxable, manual rickshaw also taxable, but only they need to cross 20 lakhs, then only they will register and pay GST. If they can cross that 20 lakhs and all, better today itself I will also quit, you also quit, so we can do that business. Okay. Then transportation of goods, balancing figure is actually exempted. That is, only GTA or courier agency will be taxable. Any other case it will be exempted. So transportation of goods by roadways means there will be some normal transport providers, lorry service providers. So they will be exempted. Only if they are GTA or courier, then only it will be taxable. All other lorry transporters will be coming under exemption. Then transportation of goods by waterways from outside India to India is taxable, that already we have seen. So what are specified goods? Specified goods points we get across in 3 places. Okay, I'll tell you this. Transportation of agricultural produce by airways, taxable or exempted? Taxable, because the specified goods point is not there for airways. So the specified goods comes only in 3 places, that is waterways, coastal waters within India, railways and GTA. Only these 3 places we have the specified goods. That too in GTA, railway equipment is not specified goods, only 6. But the other 2 places, 7 specified goods are there. So this railway equipment materials not applicable for GTA, but applicable in case of vessel and railways. So that is about transportation services. Then others, that is void import of service also we completed. Look into construction services. This construction services exemption is not applicable in case of works contract services. In that, the first exemption is, so there is an individual house and I am construction service provider, I am constructing an individual house. That individual house can be, so 10 floors or 20 floors also, irrelevant, but it should be occupied by a single family. It should be an individual house, then only it will be exempted. So what is called as an individual house? House occupied by a single family, and the logic there is kitchen. So single kitchen it is there, then it will be called as an individual house, irrespective of the square feet, irrespective of the number of floors, whatever the case may be. So that family can be 100 people, 200 people also, irrelevant of that. If they are all one family, then it will be exempted, okay. So irrespective of the floor area or cost. Whereas in the second case, there is a project, that project is covered under Housing for All Mission or Pradhan Mantri Awas Yojana. For this project, if you provide construction service or repair service, and it is exempted. The difference between first point and second point is that in the first case only construction is exempted. Construction of individual house is only exempted, because in exam one point has been asked that repair of individual house. So repair of individual house exempted, like that they wrote, but actually repair of individual house is taxable. So only construction of individual house will be exempted, whereas construction or repair of that project covered under Pradhan Mantri Awas Yojana or Urban Awas Yojana and Housing for All Mission will be exempted. Then number 3, third exemption, in case of sale of flat. Generally, whenever we pay the price for the flat, we are not only paying the price for the flat, but also for the UDS below that flat. So in case of that UDS, undivided share of land, what will be taken as the exclusion? 1/3 of the gross only will be excluded, because for example 75 lakhs is the value of the flat and value of flat is 75 lakhs, and then in that case, so this 75 lakhs includes even the land UDS. So but land is excluded from supply, so they are giving 1/3 reduction. 1/3 reduction from the gross means 25 lakhs will be reduced. So then the balance will be 50 lakhs. 50 lakhs will be taken as a value for payment of GST. Suppose if we have the construction cost and land cost separately, construction of flat is say 60 lakhs. Construction of flat say 30 lakhs, and then land value UDS value say 50 lakhs. Okay, so now what we need to do in this case, then also we need to follow the same procedure. What is that procedure? First take 80 lakhs, and from this 80 lakhs minus 1/3. So how much? 33 lakh 33,333. Yeah. So 26 lakh 66,667. 66,667. Now this will be reduced. So the balance, so 53 lakh 33,333 will be taken as the value. Sir, but the land value is 50 lakhs, but we will reduce only to the extent of 1/3 of the gross. Even though the land value is more than 1/3, the reduction is possible only to the extent of 1/3. 1/3 of the gross value of flat is exempted towards land or undivided share of land when the gross value of land, that is the gross value of flat includes value of land. This is with respect to a construction, and then one circular is there, you can see, that is generally toll charges is exempted. Why toll charges is exempted? Toll charges even by way of annuity is also exempted. That is, generally government has to construct the road, but they don't have money to construct the road because all that money has been spent on construction of something else. So then in that case what they will do? So they will be giving that to the builders. So these builders will lay down the road. They have invested, and how they will recover that investment? So by way of toll charges they will recover. As toll charges is nothing but recovery of investment, it is exempted. Even toll charges payable by way of annuity. Toll charges payable by way of annuity means rather than paying toll charges every time when we travel, suppose if there is a person who is into travel business, per annum they will be paying the toll charges. That is known as toll charges payable by way of annuity. This is the exemption. Now the question came up that government is asking a builder to lay down the road and government is paying in installments. So can the builder say that this is annuity from government, therefore it is exempted? No, this is your consideration you are receiving in installments. That will not be called as toll charges in annuity. That is the circular. GST is applicable on annuities paid for construction of road where certain portion of the consideration is received upfront, while remaining payment is made through deferred payment spread over the years. Only toll charges by way of annuity is only exempted. Okay, only toll charges by way of annuity is exempted. Only toll charges by way of annuity is exempted. Then advocate services, arbitrator services we completed. Look into the other exemptions. With this it is over. Exemptions under IGST Act. This already we have seen. When both supplier of service and recipient of service located outside India, that service is exempted. However, this exemption is not applicable in case of transportation of goods by vessel from outside India to India. In that case, liability to pay GST is on importer of such goods. Number 2, there is a tour operator. The tour operator is located in India. He is providing tour operator services to a foreign national in relation to a tour completely held outside India. For example, a person who is coming from US and he wanted to visit China. So when he wanted to visit China, so he is asking a tour operator in India. So therefore, the tour operator in India is providing services in relation to tour in China with respect to a foreign national. Now whatever money that they are collecting will be exempted. Why it will not come under export of service? Again the same reason. In case of tour operator service is an intermediary. Intermediary services, location of supplier is the place of supply. So therefore it will never qualify for export of service, because to become export of service the place of supply should be outside India. But in case of tour operator is in India, so it will not qualify for export of service, but it will lead to realization in forex. That's why they have given it as an exemption. Then number 3, services provided by an intermediary where both location of supplier and recipient of goods is outside India. There is a seller of goods outside India, buyer of goods outside India. Goods are completely going outside India only. But these two sellers, that seller and buyer is connected through a broker or an agent or an intermediary in India. That person will receive the commission. As the goods never entered into India, is completely going outside India. He is mere intermediary getting a commission. That will be exempted. Okay, logically speaking, it is not again export of service. Why? For intermediary services, what will be the place of supply? Location of supplier is the place of supply. That's why separately they have given this exemption. Okay, so 3 exemptions under IGST Act. Then look into miscellaneous exempted services. Transfer of a going concern as a whole or independent part thereof is exempted. That is transfer of business as such, lock, stock, barrel, slump sale, that will be exempted. And then supply of services associated with transit cargo to Nepal and Bhutan. Nepal and Bhutan are landlocked countries. As they are landlocked countries, they have a MOU with India. Goods are originally imported to a port in India. From that port in India through Nepal and Bhutan through land route it will go. That is known as transit cargo. If you provide any service in relation to the transit cargo, loading, unloading, transportation, handling, warehousing, whatever services, that is exempted. Then services by way of collecting or providing news by independent journalists. So independent journalists, Press Trust of India, United News of India, whatever money that they are collecting will be exempted. Then public libraries, that is lending libraries, they will be collecting lending fee. So for books publications they will collect lending fee, that lending fee is exempted. Then there is an organizer, business organizer, exhibition organizer who is located in India and their recipient is also located in India, but where the exhibition is held outside India. Because of keeping that business exhibition outside India, it will indirectly promote exports. Due to that reason they have given this exemption. Supplier in India, recipient also in India, but the exhibition alone is taking place outside India. Suppose if the exhibition take place in India, then it will be taxable. If the exhibition is taking place outside India, then only it is exempted. Then services by way of public conveniences such as provision of facilities of bathroom, washroom, laboratories, urinal, toilet. So that 1 rupee, 22 rupees, whatever they are collecting, that is exempted. I don't know what happened. This also they made taxable now. Okay. So this exemption is now made as a taxable, but of course they will not be registering. So only when they register they need to pay. So they will not cross 20 lakhs and all. Impossible. 20 lakhs. No way. Okay. If that be the case, we will start one joint venture. Whatever money you put, I will also put. Entire earnings of mine I will put. We will start. When you can become crore-patis easily. So 4 or 5 areas if you open 20 lakhs into 1. So what is the turnover? Amazing turnover it is. and no cost also that much, okay. So very less overheads, super business, no, they will not cross. So but this point may be tested for exam because this exemption is withdrawn, that is provision of facilities of bathroom, washroom, lavatories, urinal, toilet, that is exempted. Services by way of access to a road or bridge on payment of toll charges. So this is what I have discussed, even annuity for toll charges. One more point is also there, overloading charges. Overloading charges means whenever in the toll, if you are carrying heavy goods vehicle and all, so in that case you need to pay extra amount. Sir, why should I pay? That road he constructed, whatever rule he puts you need to pay, okay. So overloading charges is exempted. Then services by a performance artist in folk or classical art form of music, dance or theatre. He is a performance artist. Performance artist means one who performs before the audience, not before the camera. So this exemption is not applicable for actors, actress, serial actors, etc. and all. So in what art form? Folk, that is in what genre? Classical or folk. In what art form? Music, dance or theatre. But how much consideration should be? Consideration for a performance means per performance it should not exceed 1,50,000. If the consideration per performance exceeds 1,50,000, entirely it will be taxable. Then this exemption is not applicable if such artist is acting as a brand ambassador. Suppose if they are performing as a brand to promote a particular brand and all, if they are performing, then whatever money that they are collecting will be taxable. Then services by training or coaching in recreation activities, this is a repeated point, already we have covered under above, charitable activities. Then satellite launch services. Satellite launch services is provided by only 3 people in India, that is ISRO, Antrix Corporation, New Space India Limited. Everything is exempted. Previously only ISRO was there, but now ISRO, Antrix Corporation, New Space India Limited, because Antrix Corporation and New Space India Limited are subsidiaries of ISRO only. So whatever money that they are collecting for satellite launch, it is exempted. Now that incubate or incubatee, anywhere it is there, it is missing, I think. You just write down in the last. So incubator, incubate means, so this is a laboratory, this is a laboratory, and incubator means owner of laboratory, owner of laboratory. So if this incubator is recognized by Government of India, recognized or not recognized, recognized or not recognized. If they are recognized, then exempted, whatever money that they are earning will be exempted. If they are not recognized, then it will be taxable. Then incubatee. Who is incubatee? So that is, so working for incubator. Who will be working for incubator? Working for incubator. Usually these people who will be working for incubator are not employees of incubator. So they will be working on a contractual basis. So now how much will be exempted? So up to 50 lakhs per annum for a period of 3 years from signing contract. From signing contract, it will be exempted. Okay, up to 50 lakhs per annum for a period of 3 years from signing contract. What if it exceeds 50 lakhs? Then entirely it will be taxable. If it exceeds 50 lakhs, entirely taxable, or only the excess is taxable? Excess is taxable. That also you write down. If receipts exceeds 50 lakhs, then excess amount is taxable. Then excess amount is taxable. So this is with respect to incubate, incubator and incubatee services, and with this we completed all the exemptions. Sir, does public library also includes library run by private institutions? So here they have given only public library. So because it is not applicable to any private libraries, public libraries only. What is a public library? Open for all. Open for all is only called as public library. Open only for some people who is having membership with that library is not called as a public library. Okay. Then second question, if supplier is paying under forward charge for service under RCM, then whether recipient is eligible to claim ITC. First of all, that is wrong. Suppose if the transaction is covered under RCM, recipient only should pay GST. Supplier pays GST, recipient is not exonerated from the liability. Recipient should definitely pay, and the recipient cannot take that as ITC and all. Okay, fine. So, so this is about exemptions, and now look into taxable event under GST. See that. This and all intermediate syllabus, you will be pro in this. So therefore, I don't have to explain that much, but I'll explain. So, supply is covered under section 7. So look into page number 13. The taxable event in case of GST is supply. Supply is covered under section 7. 7 subsection 1 deals with inclusions. 7 subsection 2 deals with exclusions. 7 subsection 1 capital A is classification of supply into goods or services. In that 7 subsection 3 is there. That is, once we classify supply of goods or supply of services, central government is empowered to reclassify supply of goods or as supply of service and vice versa. But under 7.3, they have not given any such notification. So practically 7.3 is irrelevant. Okay. So we have only 7 subsection 1, 7 subsection 2 and 7 subsection 1 capital A. 7 subsection 1 is inclusions. 7 subsection 2 is exclusions. 7 subsection 1 capital A is classification of supply into goods or services. Now look into the inclusions. What are all included in the meaning of supply? So 7.1a, now a new clause got added, 7.1aa, 7.1b, 7.1c. 7.1a says any activity. So that is like sale, barter, exchange, license, lease, transfer, etc. But it is not just these activities. Any activity will come under supply 7.1a, provided it is for a consideration in the course or furtherance of business. Whereas 7.1aa is newly added, that is any transaction involving goods or services between an unincorporated association or any person other than individual. It is not necessarily an unincorporated association. It can be HUF, partnership firm, company, body corporate, or any person other than individual and its members. So between them, if there is any transaction, that will be treated as supply under 7.1aa. So what is this between here? For example, there is an association, the Resident Welfare Association, which is purchasing the crackers, and to their members, or a cooperative society is there purchasing the crackers. To their members, they are selling those crackers. It will be coming under supply 7.1aa. Yes, it will come. There is a partnership firm. That partnership firm provides some services to the partners and collects some money from the partners. Will it come under 7.1aa? Yes. And next, there is a company. To the shareholders, they will be providing some services like share transfer services, for which they will be collecting some money. Will that come under 7.1aa? Yes. So that 7.1aa is any activity between a person other than individual. Here person other than individual is one, supplier or recipient, and its constituents means members. Okay, it can be between them. So not necessary that firm to partners. Partners to firm also will be coming under supply 7.1aa. For example, there is a partner. Apart from receiving remuneration for being a partner, they are providing some services to the partnership firm, some technical services, professional services, for which they collected some money from the partnership firm. So that will be coming under 7.1aa, even though firm and partners are one and the same. Okay. So, but this they have created. Previously also it was there, but there was some dispute, like in the sense whether it will come or not, clarity was not there. Now specifically they have given, and your study material has given that it is a retrospective amendment, but actually it is not a retrospective amendment. So Finance Act, even though it made it as retrospective, but thereafter they gave a notification, because many people said that we have to pay taxes from the past and we need to pay a lot of interest, penalty and all. Due to that reason they made it prospective only. So this will be applicable from 1/1/2022 only. Then 7.1b, import of services for a consideration. In 7.1aa also consideration is required, 7.1a also consideration is required, 7.1b also consideration is required. So only place where there is no consideration is 7.1c. So that C is only there, but no C, no consideration. You understood or not? And then 71A, 71AA, 71B, there is consideration. And 71B is what? Import of services from a person, any person, but it should be in the course or furtherance of business. No, it may or may not be in the course or furtherance of business, but it should be for a consideration. So then it will be coming under 71B. How 71B is different from 71A and AA? 71B is always to be interpreted from the recipient point of view, but 71A and AA will be interpreted from the supplier point of view. But 71B is from recipient, that is the one who imports the services. From that person point of view we need to interpret. Then 71C is there. 71C is without consideration. Only 4 activities will be coming under 71C. D, R, I, P. D for disposal of business asset on which ITC is availed. R for related party transactions including transaction between distinct persons. Then I for import of services from a related person or another establishment located outside India, but it should be in the course or furtherance of business. For import of services, which comes in 2 places, there is a difference. In 71B import of service, it can be from any person, but 71C import of service should be from a related person. 71B import of service for consideration, 71C import of service without consideration, 71B import of service in the course or furtherance of business, but 7 are not. But 71C should be in the course or furtherance of business. So this is the difference. And D point, whether or not in the course or furtherance of business the disposal is, it will still become 71C supply. Disposal of business asset, it should be a business asset on which the ITC should be availed, then it will come under 71C disposal. Related party transactions also should be in the course or furtherance of business. So the disposal alone may or may not be in the course or furtherance of business. When I have an asset, I am disposing that asset to an orphanage, definitely it may not be under CSR, but even then it will be coming under supply. So the disposal of asset is only given. But in case of related party transaction or transaction between distinct persons, it will be coming under supply, provided if it is in the course or furtherance of business. Also, in case of disposal of business asset, the coverage is only goods, business asset. But in case of related party transaction, it can be either goods or services. But in case of import of services, the coverage is only services. Import of goods is not given here because import of goods is covered under customs. So it is not covered under the taxable event under GST. And then D, R, I, P. P for principal agent transactions, but provided agent is acting on behalf of principal. And here, in case of principal agent transactions, only for goods only it will be applicable. For services, we don't have principal agent transactions. Any transaction between principal to the agent or agent to the principal will be coming under supply 71C, but it should be only goods and that agent should be acting on behalf of principal. When an agent will be acting on behalf of principal, if the invoice is raised by the agent to the buyer, then agent is acting on behalf of principal. If agent is not raising invoice but principal is only raising invoice to the buyer, then principal is only there but agent is a mere agent, so agent is not acting on behalf of principal. That is with respect to this. Then, so when an activity will be coming under supply, first that activity should not be in 7 subsection 2. Whenever you read any activity, first check whether it is in 7.2. If it is in 7.2 exclusion from supply, then it is not a supply. If it is not in 7.2, then check will it come under 7.1. If it is not coming in 7.1 also, it is not a supply. 2 things you need to see. First you need to check the activity in 7.2. If the activity is in 7.2, we call that activity is neither supply of goods nor supply of services. If that activity is not in 7 subsection 2, then check whether it is in 7.1. If it is in 7.1, it is supply. Suppose if it is not in 7.1, it is not a supply. We should not write it there as neither supply of goods nor supply of services. When it is excluded from supply, there only we should write it as neither supply of goods nor supply of services. So that point got also tested in May 22 exam. That's why I am stressing that. Then, so 7 subsection 2 excludes, read with schedule 3. So what will be excluded from the meaning of supply? Sovereign function, spalled slope, spalled slope. So we have 3 schedules in GST. So CGST Act has 3 schedules. Schedule 1 is for 71C. That is, there are some activities under schedule 1, DRIP. Even though it is without consideration, that will become supply. That is schedule 1 71C. And schedule 2 is there. That is for the purpose of classification of supply into goods or services. 7 subsection 1 capital A, and then schedule 3 is there. That schedule 3 is applicable in case of 7 subsection 2. that is exclusions from supply. These are these three schedules. So whenever you are referring to this 7.1c or 7.1a or 7 subsection 2, you need to give reference to these schedules. So in that 7 subsection 2, what are excluded from supply? Spalled slow. Yes, for sovereign functions of government. Sovereign functions of government means what? All activities of government other than 4, because remaining activities are excluded already we saw, that is Department of Post, Airport or Port, transportation of goods or passengers, and services to business entities. Apart from those 4, all other activities are excluded from supply. Then P, post, that is government post, constitutional post, nominated post. Government post refers to, that is MLAs, MPs, etc. Constitutional post refers to governor, president, etc. And then nominated post refers to RBI governor, SEBI chairman, then CBI director. So there are some bodies under government for which the director or chairman of that body is appointed by government, that will be called as nominated post. These 3 also excluded from supply, that is post. Then SPA, A for actionable claims other than lottery, betting, gambling. What is called as an actionable claim? So any instrument that satisfies 4 conditions is called as an actionable claim. So first, there should be a right to receive a benefit or recover a debt, and that should be transferable to another person, and that is legally chargeable, that enforceable. And last, the holder of that instrument is entitled to receive the benefit or recover the debt. Bill of exchange, lottery ticket, etc. will be coming under actionable claims, but all actionable claims are excluded from supply except 3, that is lottery, betting, gambling. That's why for these 3 only we have discussed rule 31A. For other actionable claims we don't have. And then legal fees collected by court or tribunal. Court fees or tribunal fees will be not covered under supply. So for example, we have GST 80 will be collecting a appeal fee. What is the appeal fee? 1000 rupees for every 1 lakh or part thereof, subject to maximum 25,000. In appeals chapter we discussed. So that appeal fee will be chargeable to GST again? No, that is not at all a supply, it is excluded, that is this. Then L refers to land sale including sale of building, where entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. So completion certificate or first occupation, whichever is earlier. First occupation is usually, so whenever in that flat, so one occupation already happened, one person has already started living, so then it is first occupation. Even though completion certificate not obtained for that project, it is deemed that for that project completion certificate is obtained, and thereafter all flats sold will be excluded from supply. And if part consideration before, part consideration after, entirely it will be covered under supply. When it is excluded from supply, only when entire consideration is received after obtaining completion certificate, it is excluded from supply. Then employee to employer in the course of employment. There is an employee who is providing services to the employer, but it is in the course of employment, then whatever money that is received by the employee will be excluded from supply. If it is not in the course of employment, then it will be covered under supply. Then death related, funeral, burial, crematorium, mortuary, including transportation of deceased, is excluded from supply. Then slow, yes for, that is sale before import, high seas, sale before import. So the goods are in transit. Now I am the original importer. I will transfer the document of title to you. Now I collect some money. On that I will not be required to pay any GST. It is excluded from supply. Why? Because you are the subsequent importer. So you will anyhow pay the customs duty along with GST. So I am excluded from supply. Then same way, liquor license granted by state government. So state government will be granting liquor license, for which they will be collecting some amount, that will be excluded from supply, because on liquor state government don't want to share 1 rupee also with central government. So for that reason only it is excluded from supply. Suppose if one person is having a liquor license and he transfers to another person, or he gives it on rent to another person, now he gets some money, whether that will be covered under supply? Yes. Only liquor license granted by state government is excluded from supply. Outside the country, movement of goods. So goods are originating outside India, terminating outside India. Even though seller and buyer are there in India, it will not be covered. For example, seller in India having a branch outside India, buyer is in India having a branch outside India. From seller's branch outside India to buyer's branch outside India, goods are moving, but that will not be coming under supply. Then warehoused goods under customs sold, that is whenever we imported the goods, that imported goods will be deposited in a warehouse without payment of customs duty. At the moment when we deposit the goods in the warehouse without payment of customs duty, we get a warehouse receipt. So that warehouse receipt we will transfer to some other person, just like transfer of documents of title in case of high sea sale. When we transfer this warehouse receipt, then we get some money. We are not required to pay any GST. Why? Because to whom we transfer the warehouse receipt, that person will clear the goods from the warehouse and he will pay custom duty along with GST. So therefore, whatever money that we have collected will be excluded from supply. This is about that SPALD law, exclusions from supply. Apart from this, there is an employee who gets gift from the employer. Employer are treated as related. Employer giving gift to the employee beyond 50,000 rupees per annum per employee will be covered under supply. Up to 50,000 per annum per employee not covered under supply. If it exceeds 50,000, entire value of gift will be treated as supply under 7.1c, not the amount exceeding 50,000. So this is the summary of 7.1. In 7.1a, it can be any activity for a consideration in the course or furtherance of business from the point of view of supplier, goods or services. 7.1aa, any activity between a person other than individual and its members. So it is also for a consideration in the course or furtherance of business, supplier, goods or services. This table I have given for comparison purposes. And then 7.1b, import of services for a consideration. It may or may not be in the course or furtherance of business, and it should be seen from the recipient point of view, and the coverage is only services. In case of 7.1c, read with schedule 1, disposal of business asset, all these four not for consideration. And in case of disposal of business asset, again it may or may not be in the course or furtherance of business. Supplier point of view, coverage is only goods. In case of related party transaction, it can be for goods or services, but it should be in the course or furtherance of business from supplier point of view. Import of service from a related person or another establishment located outside India, that should also be without consideration, but in the course or furtherance of business. From recipient point of view, coverage is only services. Principal agent transactions without consideration, but very important, it should be only with respect to the goods, and it should be in the course or furtherance of business from supplier point of view. So at any point when you get a doubt whether it is covered under supply or not, just close your eyes and go through this table in your mind. Just apply the situation in the table. If it is covered under anywhere, so then you will be coming to know, because you need to understand the transaction. You need to split into the parts and you need to see, because not every transaction is that much easy going transaction. Some complex transactions will be given, but first of all you need to check, always check in the exam whether it is supply or not a supply, because that is the hidden agenda of ICI. So many times they will be giving some transactions, compute the value of taxable supply. In that compute the value of taxable supply, they will give few transactions. In that few transactions, one or two transactions will be not a supply at all. So then what student will write? Exempted, like that they will write, or they will be writing it as taxable. But first of all, when it is not a supply, then why it will be coming? Because there is one question. So one person has given gift to their clients. Okay, to their clients they have given some gift of goods. So this gift of goods, whatever they have manufactured, when they give it to the clients as gifts, and the open market value of that and all they have given in the question. First of all, giving gift to the client, manufactured goods, where it will come? Disposal of business asset on which IT is available. No, they are manufacturing. Only on purchased goods there will be ITC. Why on manufactured goods there will be ITC available? What they purchased is not what they dispose of. Disposal of business asset on which ITC available. So whatever they purchase on which ITC available, that should be disposed. What they buy is raw material. What they dispose of is the finished goods. How it will become supply? First of all, that activity is not a supply. You understood or not, pa? Then important definitions or points in this regard. What is to be taken as meaning of goods and meaning of services? So can I give break at 4:30? What, pa? Okay now. Fine, I will give at 4:15. So wait for some 8 minutes. Wait. So meaning of goods or services, we will complete this. Goods refers to, goods means goods includes and goods excludes. Goods are defined under section 2 clause 52. Services under 2 clause 1 or 2. Try to write along with the clause. It will be very good to see the answer sheet, because hardly you need to remember these definitions only, but these definitions must definitely you will be writing somewhere that it is goods, it is services, consideration, etc. Wherever it is coming, the said activity services as per section 2 clause 1 or 2, like that when you are writing it will be good. Okay, so these only these sections, but when he see multiple places these two clause and all, he will think that you are a pro and he will be willing to give 80 plus marks and all that we need. Okay, life is about cheating only here. So section 2 class 52 meaning of goods, section 2 class 102 services, section 2 class 13 business, sorry 2 class 17 is business, 2 class 17 is business, and 2 class 31 consideration, 2 class 84 is the person definition. So these are the sections that we need to remember. Okay, and in that goods 2 class 52, services 2 class 102. Goods means what? Any kind of movable property, and goods includes what? So that is actionable claims, growing crops or things attached to a farming part of land agreed to be served under a contract of supply. And goods excludes what? Money and securities. Money and securities will not be treated as goods. Even service definition also excludes money and securities. And services means what? Anything other than goods. So for example, is land services? Yes, land is services. Building services. Transfer of business services. Because anything other than goods is services. So land is goods? No. Immovable property. Goods means any kind of movable property. So land is not a movable property. So land will be coming under service. Lifts and escalators installed in a building, service. Building, service. Because all these are immovable, that will become service. However, it is excluded from supply. Okay, but goods or services, it is service. Disposal of business, transfer of business as such, will it be coming under goods or service? Service. Why? Anything other than goods will be service. However, it is exempted. So disposal of business, transfer of business as such as a going concern is exempted. You understood or not here? So they could not create the definition for what is service. So they just said anything other than goods is services. And then it includes what? Transaction in money. Money is excluded from the meaning of goods and services. But transaction in money for a separate consideration will be treated as service. Same way, securities are excluded from the meaning of goods and services, but facilitating or arranging transaction in securities means stockbroker service, depository service, etc. that will be treated as service. So this is the meaning of goods and services. Then actionable claims, already it is given here. Even though actionable claims are goods, but we don't have to bother about it because all actionable claims are excluded from supply except lottery, betting and gambling. But actionable claims may be coming under money definition also. Because money means any instrument recognized by RBI will be called as money. Then bill of exchange, promissory note also will be coming under money definition. So then in that case, how we need to interpret? So actionable claims covered under money definition will be neither goods or services. Other actionable claims only goods. But in that also lottery, betting, gambling covered under supply. Others are not a supply. So what is the meaning of money? Money means Indian currency, foreign currency. It includes any instrument recognized by RBI. Whether bitcoins, cryptocurrencies will be coming under money definition? No, it will not be coming under money definition. Why it will not come under money definition? Because it is not recognized by RBI. However, government is levying the tax. That's a different story. Government levying tax is different from recognized by RBI. So not recognized by RBI. So therefore, it will not be coming under money. Then sale of bitcoins or sale of cryptocurrency. Suppose if the transaction is through an exchange, crypto exchange, will that be chargeable to GST? Yes, it will be chargeable to GST because it will not be coming under money. Money excludes cryptocurrency. Okay, sir, won't it come under securities? No. In securities definition as per Securities Contract Regulation Act, we don't have cryptocurrency. So due to that reason, cryptocurrency will not be coming under securities also. So sale of cryptocurrency will be treated as supply of goods and chargeable to GST, and we are currently paying 18% GST. Okay. Then next, sale of old coins. Sale of old coins also will not be coming under money because money means any Indian currency or foreign currency which is in Indian legal tender, but currency held for numismatic value will not be coming under money. So sale of old coins also is not money, but it will be coming under goods. Money is excluded from goods then something excluded from money, minus into minus plus. So therefore that will be treated as goods. Understood or not? Then meaning of consideration. Consideration means either monetary consideration or non-monetary consideration. And that monetary consideration includes money received or receivable. Non-monetary can be in the form of goods or services. But consideration excludes subsidy from central government, state government that already we saw in valuation, and refundable security deposits also not treated as consideration. What if it is a non-refundable security deposit? That will be treated as consideration, and consideration can be received from recipient or any other person. So there is no condition that from recipient only we need to receive consideration. Presence of consideration will be sufficient, and then consideration should be in respect of. In respect of means I am announcing how much is the consideration that I need for the goods or services, that is in respect of. In response to, so I will be getting some money in response to providing the goods and services, even though it is not agreed upon between the parties at the time of contract. Any extra amounts received or any extra consideration received also will come under in response to. For the inducement of, some extra amount is given for the purpose of making the supplier to provide the service, so that will also come. This inducement and response is usually seen in movie industry. In movie industry, what will happen? So there will be some grandfather age actor, so he want to become a hero, and then what will happen? None of the heroine will agree to sign and act in his movie. So then this person will say, okay, I will give you, I have lot of shops, one shop I will be giving to you. Then only that heroine will accept, okay, I will act. This shop is also consideration. Under which category shop is consideration? Inducement of. Thereafter, for signing the movie, some remuneration is received, that is in respect of. Then thereafter, so one other hero, for after 10 years he will get one hit, so for that he might give one car to the director. So the director, whatever money that he is getting, or one actor, one hero, because of that hero only that movie would have become hit, but the hero might be acting only for 10 minutes. For that one Rolex watch might have been given. That will also be treated as consideration in response to. Okay. Then next, activity without consideration or consideration without activity is not a supply under 7(1)(a). That is, I am doing something and I am not getting any benefit, no consideration, then it will not be treated as supply under 7(1)(a). Suppose I am getting consideration but I am not doing any activity. So I am doing a activity without consideration. For example, YouTube live, no consideration I am getting. Of course, from you I received, and thanks for that. Not for me, AC, electricity and all. How much you are paying? As if some 6,000 you are paying, you are telling. So AC, any issue in AC, tell me. No, you are properly sitting comfortably. For that only, this is okay. And so YouTube is live. I am not getting any consideration, and of course, so they will say that we are giving our love and affection and all. That is irrelevant. Okay, so that will not be treated as consideration, because consideration means something tangible. You understood or not? Intangible and all will not be treated as consideration, and that and all we can speak in cinema dialogues only, but reality it will not work, because what is consideration? Something in return. Okay, so then it will not become supply under 7(1)(a). But because of that, so the students get benefited and they will get 70s and 80s and all. They will tell to their juniors, and you go and join his classes, so then I will get some money, but there is no certainty in that. That's why it will not be treated as consideration. That student may join or may not join, there is no certainty. So when the consideration is remote, you should not be treating it as consideration. Okay, so which means that when it is an activity, for that activity no amount is collected, then it is not consideration. Consideration without activity is donations. So donations will not be treated as supply. However, only unconditional donations. Suppose if I am receiving a donation and that donation I have some obligation to do something, then it will be treated as conditional donation. Conditional donations are treated as consideration and it will become supply under 7(1)(a). Unconditional donation not treated as consideration, therefore it is not a supply. Suppose if a donor name is asked to be displayed by the donor, conditional or unconditional? Conditional. No doubt it is supply. Suppose donor is telling you don't have to put my name, but as a gratitude, so the one who collected the money is displaying the name of the donor. Conditional or unconditional? Unconditional. But even then it will be deemed to be conditional if the display of name gives some business advantage to the donor. So whenever we put some name and that name gives a business advantage, for example, donated by Mr. Rajnikant, no business advantage. Donated by Mr. Rajnikant, actor, there is a business advantage, because so that Rajnikant could be any Rajnikant, but only when it is as an actor, means we are specifying some business advantage is flowing to that person, then only it will be coming. Same way when we display a company name, mere display of a company name, no one will know that company name, but if the company name and the brand name is same, then definitely there will be business advantage. Donated by Seat Limited, brand name, Seat Limited, company name and brand name both are same. Donated by this Fangs Technologies Private Limited. No one knows what is Fangs Technologies Private Limited. So, but it is Vivo. Vivo is the brand name owned by Fangs Technologies Private Limited. So, the company name is different from the brand name, but I am not mentioning the brand name. Then in that case, there is no business advantage. So, it is a subject matter. So, depending upon the question, we need to interpret and we need to write that. So, if individual name is displayed, not a supply, if display of name gives a business advantage to the donor, then it will be coming under supply 71A. Up to this, I will stop. We will take a break and thereafter we will continue with the remaining portion. Okay. Okay. Listen, pa. A long break you took. Yes, pa. 20 minutes, pa. Say this, meaning of person. Person under GST is nothing but person under Income Tax Act plus central government and state government is treated as person under GST, means even central government, state government is also liable to pay tax, but we have certain exclusions from supply and exemptions. In remaining cases, they will pay GST. Then meaning of business under 2(7), so trade, commerce, manufacture, so any trade, so sale of goods, and commerce, that is service sector, and conversion of raw material into FG, that is manufacture. Then profession, occasion, adventure. Profession, occasion, adventure, all these three requires skill, and profession is by way of qualification, occasion is by way of experience, and adventure is by way of passion. Then wager refers to betting transactions. So these activities are the general meaning of business, and its incidental or ancillary is also covered under business. So then, for example, there is a chartered accountant, so that is his profession, and the chartered accountant, apart from practice, is also authoring book and gets a royalty, that comes under incidental. And suppose if the chartered accountant is taking classes, so that will also coming under incidental. And suppose the chartered accountant has purchased the laptop, and that laptop he is selling, so for profession purpose he is purchased and he is selling, that will be coming under ancillary. So incidental or ancillary is also covered, irrespective of the volume, frequency. So that is, for example, only one time the business activity is done, then also it is business. For example, I started a restaurant, I became a chef, I am asking all of you to come and eat, you ate, next day diarrhea, vomiting, so I have shut down my business, but for one day I made sales, on that I need to pay GST. So irrespective of the volume or frequency, whether or not for a pecuniary benefit means profit motive, whether profit motive is present or not, it will be coming under business. For example, sale of diaries, calendars, etc. by a temple. So this temple is selling it not for profit motive, but even then it will be coming under business. Then there are some specific activities. These specific activities, even though not covered under the general meaning of business, but it will be treated as business. What is that? Entry tickets. For example, entry to any cinema theater or entry to temple, etc. will be coming under business. So entry tickets of temple will be taxable or exempted. First of all, it is covered under business, it is supply. Okay, entry tickets collected by temple for providing access to the temple, so will be coming under business, it is supply. However, it is not exempted under entry tickets, but this will be exempted under charitable activities, advancement of religion, spirituality and yoga. Okay, so any temple that is collecting, but provided the temple should be registered as a trust. Mostly all temples will be registered as a trust, so therefore under the category of advancement of spirituality, so they will be getting exemption, but it is business. Then holding an office accepted in the course or furtherance of trade, occasion or profession. So for example, there is a chartered accountant who contested in elections in ICI and he became president of ICI. For that they will be receiving some money as an office bearer. So that money received by them will be coming under business. Holding an office accepted by him in the course or furtherance of trade, occasion, profession. And then supply of goods or service in connection with commencement or closure of business. So at the time of commencement of business or closure of business, if we are doing any activity, even though that activity is no way connected to our business, but under the name of business only if we are doing, that will be coming. For example, we are purchasing some 10 ACs, 3 ACs used in business, remaining 7 ACs we are selling, even though sale of AC is not our business, but it will be coming under business. Provision of facilities or benefits to members by a club, society or association, this already we discussed, it is now specifically covered under 7(1) AA. So this activity is business by any club, association to its members against facility, against consideration. Then any activity of a race club, including betting transactions. Betting transactions are anyhow covered under wager, it will be covered under business. Apart from that, any other activity of the race club, including sale of merchandise, sale of food, sale of beverages, entry tickets, everything will come, and all activities of government is also covered under business. So this is the specific meaning of business. Now why we need to know this? Whenever you are writing the said activity is business, under which point it will be covered under business, we need to write. That's why we need to know this definition. Then meaning of related. Who will be considered as related? So total 9 points we have. Number 1, such persons are officers or directors of one another's business. So Mr. X and Mr. Y are there. In Mr. X business, Y is appointed as officer or director. In return, so in Y's business, X is appointed as officer or director. So because of that, X and Y will be treated as related. Such persons are officers or directors of one another's business. In my business, I am appointing you as director or officer. In return, in your business, you are appointing me as officer or director. So which means that, so we both will be treated as related. That is first point. Then second point, they are legally recognized partners of a firm. So that is, partners of a firm are only related, but firm and partners are not related. Only partners of a firm are treated as related, and in this case they are legally recognized partners of a firm, means that legally recognized refers to that partnership firm should be registered. Then number 3, such persons are employer and employee. Already we saw employer and employer related, but however employee to employer in the course of employment will be excluded from supply. Now there is an employer who is collecting some money from the employee for the purpose of providing food or any other facility, transportation facility, house facility or food facility. Will that be coming under supply 71A? Yes, it will be coming under 71A only. So please don't put it under employee welfare and all and say that it is not a supply. It is supply. If it is employee welfare, then they should not be charging any amount. If they are charging any amount, that will become supply. If they are not charging 1 rupee also, then it will be coming under perquisite and it is part of CTC and it will not be a supply. Understood or not? So employer to employee divided into 2. Employer to employee divided into 2. What is that? That is for consideration or without consideration. For consideration or without consideration. Suppose if it is for consideration means always it will be supply under section 71A. So don't see anything else. It will be supply under 71A. Suppose if it is without consideration, then again we need to check, is it covered under CTC as a part of employment contract? So part of CTC. If it is part of CTC, not a supply. Why it is not a supply? Because it is specifically given in a circular that anything that is part of CTC, that is perquisite, which is part of employment contract, will not be coming under supply. Suppose if it is gift, not part of CTC, means it is a gift, not covered under employment contract, then again that gift we need to divide into 2. What is that? Suppose if it is less than or equals to 50,000 per annum, then also it is not a supply. Suppose if it exceeds 50,000 rupees per annum per employee, greater than 50,000 per annum, then it will become supply under which section? Supply under section 71C. Supply under section 71C. So this is the clarity that you need to have. Employer to employee for consideration or without consideration. For consideration it will be supply under 71A. Without consideration, if it is part of CTC, then it is not a supply. If it is gift, not part of CTC, then if it does not exceed 50,000 per annum, not a supply. If it exceeds 50,000, entirely it will become supply under 71C. Because in exam it has been tested once. For I think Jan 21 attempt it has been tested. They have given that employer provided food facility to the employee. The value of that food is 5 lakhs, but they collected only 10%, that is 50,000 is collected. Now what will be taken as the value in this case? So many students wrote that it is not a supply. Actually it is supply. It is supply. And therefore the value should be taken as per rule 28, because employer and employee are treated as related parties. As per rule 28, open market value should be taken. The open market value will be 5 lakhs. So that 5 lakhs will be taken as a value in this case. Then number 4. So first 3 points, such persons or officers or directors in one other's business, they are legally recognized partners of a firm, they are employer and employee. And number 4 is that there is a common shareholder between 2 companies holding 25% or more. So these 2 companies will be treated as related. And number 5, one of them directly or indirectly controls the other. Control means either investment more than 50% or controlling the composition of board of directors, means majority common board of directors, or controlling the operations. These three are treated as control, and both of them are directly or indirectly controlled by a third person. That is two companies having the same parent. When two people having the same parent, we call them as related, now like that. So therefore two companies having the same parent, where they are treated as related, and then together they are directly and indirectly controlling a third person. That is, individually the investment is less than 50, but cumulatively two people are having more than 50%. Now these two people are treated as related. So shareholder number 1 holding 35%, shareholder number 2 holding 25%. So 35 plus 25, 60% they are holding. Okay, so therefore they both will be treated as related, because together they both will control the company. So these two people have the common interest in the company. So due to that reason, they both will be treated as related. They are member of the same family. Family means spouse and children, whether or not dependent on that person, whereas brothers, sisters, parents, grandparents, if they are wholly and mainly dependent on that person. In-laws are not considered as parents. In-laws are not considered as family. Okay. In-laws are not considered as family. Okay, so on flow it came. So next, number 9, sole agent or sole distributor or sole concessionaire, howsoever described of the other, shall be deemed to be related. So sole selling agent. Sole selling agent means we have only one agent and all the supplies are made through that agent only. Then they are not treated as related, or they are treated as related, or treated as related. We have one agent, partly we are making supplies to them and partly we are directly supplying. Will this person be called as a sole agent? No. Sole agent means there should be one agent and all the supplies are made through that agent. Then only he will be called as a sole agent, and sole agent is deemed to be related. That is this. Then for a grandfather, whether a grandson is related? No, because whatever definition of family, if you see, only children are given. So, but we don't have grandchildren. You see that grandchildren is not there in the family definition. So, which means that for a grandfather, grandchildren will not be treated as related. But for the grandchildren, whether grandfather is treated as related? Yes, because we have parents as well as grandparents. Both are covered under the meaning of family. Then meaning of various supplies. Taxable supply means goods or services which are leviable to tax is taxable supply. Exempted supply means which attracts nil rate of GST or notified as exempted or non-taxable will be treated as exempted. These three: notified, exempted, nil rated, non-taxable. What is non-taxable supply? Alcoholic liquor for human consumption and petroleum products are treated as non-taxable supplies, and then that is not leviable to GST. Zero rated supplies. So two are treated as zero rated supplies, that is export of goods or services and supply of goods or services to SEZ. And whether taxable supply includes exempted supplies? No, because exempted supply includes non-taxable supply. Due to that reason, taxable supply do not include exempted supplies. So what are considered as non-taxable supplies? Alcoholic liquor for human consumption and 5 petroleum products: crude oil, petrol, diesel, ATF and natural gas. So therefore, here this chart I have given, that is generally what will not be treated as taxable. So taxable means only which are chargeable to GST but not chargeable to GST, either not leviable to GST but nil rated or notified as exempted will be treated as exempted. So that's the reason why taxable supplies do not include exempted supplies. And in aggregate turnover, all the 4 will be taken. Taxable supplies will be taken, exempted supplies will be taken, non-taxable will be taken, zero rated also will be taken, and aggregate turnover is computed on all India basis and it excludes only 2. This is the general meaning of aggregate turnover, but this aggregate turnover meaning gets changed in case of composition scheme. Then GST on sale of flats: part consideration received before, remaining after, covered under supply. Entirely received after completion certificate, then only it is not a supply. If money is received before completion certificate, it will be covered under supply. Then what is considered as works contract? Also I discussed already, that is a contract involving both goods and services in relation to immobile property. Definitely that should be in relation to immobile property, then only it will be called as a works contract. Then job work: whether job work will be treated as supply of goods or supply of services. Usually job work will be treated as supply of services only, and in this case, so job work means carrying out process on the goods belonging to other person, that is only called as supply of service. So job work means carrying out process on the goods belonging to other registered person, and the word job worker should be construed accordingly. As they use the word other registered person, means should that recipient be registered? For the job worker, who is the recipient? Principal is the recipient. Should the principal be registered? Yes. Then only the work will be called as job work. What if the recipient is not registered? Then it is not called as job work, it is called as supply of some other services. So what, sir? There is a difference in rate for that purpose. Should we remember the rates for exam? No. Unless otherwise there are some rates which are given in the act itself, but tariff you don't have to remember, tariff rates you don't have to remember, composition it is given in the law itself, that rates and all you need to remember, but which product, which service, what is the rate, that we don't have to remember. Then distinct persons, who are treated as distinct persons? So generally one registration to the other registration is known as distinct persons. So in multiple states, when I have different registrations, or within the state when I have separate registrations, one registration to another registration is known as distinct person. For example, if I have multiple business in different states, I need to get separate registration with respect to each state, mandatory. When I have multiple businesses in the same state but in different place of business, it is optional for them to go for either single registration or they can go for separate registration. Multiple businesses, same state, same place of business, cannot obtain separate registration. So one registration to the other registration is known as distinct person. Not only that, one registration to another establishment in another state, even though not registered, that is also distinct person. Sir, another establishment in another state, why the hell they will not be registered? In every state they need to get a separate registration now. No, section 23 comes into the picture. For example, I am making supplies in 3 states, Tamil Nadu, Andhra Pradesh and Karnataka. And in Tamil Nadu, exempted and taxable both are there. In Tamil Nadu, exempted is 2 lakhs and taxable 8 lakhs, and in Andhra Pradesh 4 lakhs exempted. In Karnataka, so 5 lakhs is exempted, and whereas taxable 20 lakhs in Andhra Pradesh. Now in this case, if you see what is the aggregate turnover, the aggregate turnover will be, so 2 lakhs, 4 lakhs and 5 lakhs, 8 lakhs and 20 lakhs. So 20 plus 8, 28 plus 2, 30. So 39 lakhs. 39 lakhs is the aggregate turnover. Say the applicable threshold limit is 20 lakhs. So it is greater than 20 lakhs, which means that that person is required to get registered. But where they need to register? They need to register in Tamil Nadu and Andhra Pradesh only, but not in Karnataka, because in Karnataka they are making only exempted supplies. Karnataka turnover is going to influence registration, but they are not required to get registered in Karnataka because they are making only exempted supplies in Karnataka. Now, between Tamil Nadu to Karnataka, Andhra Pradesh to Karnataka, if there is any supply, that will also be called as transaction between distinct person. Another establishment in another state, whether registered or not, treated as distinct persons. Then, meaning of recipient. Who is considered as recipient? If consideration is involved in the transaction, the one who is liable to pay the consideration, not the one who pays consideration, one who is liable to pay consideration. For example, holding company entered into contract with me to provide the services to the subsidiary company, and in that case, even though I provided services to the subsidiary company, but my recipient is not subsidiary company, my recipient is holding company, because the one who is liable to pay consideration will be treated as my recipient if consideration is involved in the transaction. If consideration is not involved in the transaction, and if it is goods, then the one who is received, to whom I am giving the goods, that person will be called as recipient. And in case of services, the person to whom I am rendering services, that person will be called as recipient. But when consideration is there, not the one who receive goods, not the one who receives services, but the one who is liable to pay consideration will be recipient. Now, classification of supply into goods or services. So once an activity becomes supply, then we need to classify it into goods or services as per 7 subsection 1 capital A. Suppose if it is in relation to movable property, check whether there is transfer of title or a transfer of right to use. If there is a transfer of title, then it will be coming under supply of goods. If there is a transfer of right to use, means renting or leasing, then it will be coming under supply of service. The transfer of title may be at present or may be at a future date. For example, I am selling a car, transfer of title at present. I am giving a car on hire purchase, so the title will be transferred at a future date. So even then it will be called as transfer of title only, supply of goods only. So title may be transferred at present or it may be transferred at future. But if there is a transfer of right to use that car, means renting of car, leasing of car, that will be coming under supply of service. Immovable property will never come under supply of goods. So if there is any transfer of title, that is excluded from supply. But when immobile property will come under supply of service, if I am bringing the immobile property into existence, or if I am giving the right to use immobile property, renting, leasing, etc., then it will be coming under supply of service, this one. And then intellectual property rights, any intellectual property rights, permanent transfer will be coming under supply of goods, and temporary transfer will be coming under supply of services. So therefore, generally when you see copyright services or any other services in exam, so that will be usually temporary transfer only, permanent transfer will not be there. Only when it is specifically given as permanent transfer, you treat it as supply of goods. Otherwise it is temporary transfer only, and it will be chargeable to GST, okay, under supply of services, and that too whether it is RCM or FCM we need to check. And then carrying out process on the goods belonging to another person, that is, whenever as per the contract the recipient should supply the goods, on that I need to process and give, then it will be called as supply of service. As per contract, I should only buy the material, I am buying the material, I am processing on the material, and I am giving you, that will be called as supply of goods. So as per contract, I should buy a material, I am the supplier, I am buying the material, I am only processing, I am giving it to you, that will be called as supply of goods. As per the contract, you should give me the material, on that material I should do the process, then it will be called as supply of service. Now suppose as per contract, I need to buy the material, I need to process and give, but some material you supplied, still it will be supply of goods? Yes, because a major material which is required, I am only purchasing it, some material you supply, it will not become job work or supply of service, okay. Example, so there is a person who is having a garment shop, so you go there, you select the cloth and he do the stitching and he is giving, so then it will be coming under supply of goods only. Suppose if you buy the cloth, you go to a tailor, you give that cloth, he stitches and gives, that will be coming under supply of service. That is a simple logic there. Then supply of goods along with services. Suppose if it is notified transactions, means in a transaction there will be both supply of goods and supply of services. Two things will be there in a single transaction. Now we need to check, is it notified transactions? Yes. What are notified transactions? Works contract, information technology software, and supply of food. In these cases, it will always be treated as supply of service, even though it involves both goods and services. If it is any other supply, means we need to interpret based on composite supply or mixed supply. Suppose if it is any other transaction involving both goods and services, for example AC and installation, will be composite supply. As the principal supply is AC, which is goods, entire transaction will be treated as goods. Same way, coaching plus books. So coaching plus books, actually if that books are taxable books, so books are usually exempted if there is a ISBN number or published books. Otherwise, if self-publishing books are there, so that will not be coming under exempted, okay, that will be taxable. So don't look at that book is taxable only, okay. So this is taxable only, and therefore there is no ISBN and all, so which means it is taxable and chargeable to GST. So coaching plus books is also composite supply, but here what is the principal supply? The principal supply is coaching, so therefore it will be coming under supply of services. Even though books are there as a part of coaching, but as a principal supply is coaching, so entirely it will be treated as supply of service. And then mixed supply. So suppose TV plus optional warranty. TV plus optional warranty is a mixed supply, not naturally bundled. And here the highest rate is TV, so entirely it will be treated as goods. Suppose if the highest rate is service, entirely it will be treated as service. For example, video lectures plus pen drive. So why it is mixed supply, not naturally bundled? So the highest rate is say video lectures, then entirely it will be taxable as supply of service. So therefore, if there involves both goods and services, notified transactions, supply of food and information technology software and works contract, always supply of service. Any other case, you interpret based on composite supply, mixed supply. If principal supply is goods, entirely it is goods. If principal supply is service, entirely it is service. If highest rate is goods, entirely it is goods in case of mixed supply. If highest rate is service, entirely it is service. Apart from this, any other transaction will be coming under supply of service. It will not come under supply of goods. Supply of service, the two are doing an act, not doing an act, or tolerating an act, that will be coming. then supply of goods by unincorporated association or body to its members is treated as supply of goods, like that it is given. So any goods given by unincorporated association to its members will be treated as supply of goods, like that. One point is given in 7.1a. Now it is omitted. Why they have omitted? So now it may become even supply of goods or supply of services. Depends upon what is being shared by the unincorporated association to its members. So because of that reason, okay. With this we completed so taxable event under GST, that is supply. Now look into composite supply versus mixed supply. Composite supply versus mixed supply, we need to understand first when it will become composite supply. In order to become composite supply, there should be two or more supplies in a single transaction. So first this section 8 will come into the picture only when there are two or more transactions in a single transaction, that is two or more supplies in a single transaction. Suppose if there is only one supply, so this section 8 will not be applicable at all. This composite supply mixed supply concept is given in section 8. So section 8 will come into the picture only when there are two or more supplies in a single transaction. Now what we need to check? Three conditions you need to check. If these three conditions are satisfied, it will become composite supply. What are those three conditions? So all the given supplies must be taxable supplies, and it should be naturally bundled in the ordinary course of business, and one of the supplies should be a principal supply. If these three conditions are satisfied, it will be coming under composite supply. Okay, again I am repeating, all the supplies should be taxable, naturally bundled in the ordinary course of business, one of which should be a principal supply. If all these three are satisfied, it is composite supply. Is there a condition that there should be single price or separate price? There is no such condition. So it can be single price or it can be separate price. It will be treated as composite supply only. Okay, whereas if it is not satisfying any of these three conditions, say it is naturally bundled but principal supply not identifiable, then in that case, for example, there is a hair oil and a shampoo always given as a combo, but we don't know what is the principal supply, then it is not a composite supply. Then it is taxable, all are taxable but not naturally bundled. Inverter plus battery, inverter also taxable, battery is also taxable, sold as a combo, but it is not naturally bundled. Why not naturally bundled? Naturally bundled means one should be supplied without the other, one cannot be supplied without the other, then it will be called as a naturally bundled. One can be supplied even without the other, will be not called as composite supply, naturally bundled. Got it? So in naturally bundled, there are two supplies, one should be supplied with the other only, so it will be always together. One cannot be supplied without the other, then only it will be called as composite supply, naturally bundled. But naturally bundled should always be seen in the ordinary course of business. So AC and installation is naturally bundled, because if you buy the AC, installation also you need to receive, naturally bundled. Okay, whereas in case of inverter and battery, you don't see from the recipient point of view, see from the supplier point of view. Even though battery, without battery inverter will not work, but that is usage. I am talking about the sales. So sales, can the inverter be sold separately also? Yes. Can the battery be sold separately also? Yes. So therefore, even though both are taxable, not naturally bundled, it is not a composite supply. Suppose one taxable and one exempted. So one taxable and one exempted will never be coming under composite supply. So three conditions, all are taxable, naturally bundled in the ordinary course of business. So again this confusion will come in exam, that is, sir, is it naturally bundled or not? So if you know that, actually answer will be correct. Okay, if you can understand that what is naturally bundled or not in the given question, if you can identify properly whether it is naturally bundled or not, then the answer that you are arriving will be correct. But for that, little bit of common sense is definitely required here. But exceptions will definitely be there. Exceptions will be there. For example, they will be giving a question, laptop and laptop bag. What we will think, laptop can be purchased without the laptop bag also. So therefore, it is not naturally bundled. But you will find the exceptions, because by manufacturing defect you have that, okay, that you always find the exceptions. But no, you have to see the majority. Generally, laptop and laptop bag is naturally bundled. Generally, AC and installation is naturally bundled. So these exceptions we should not be seeing. Got it? Are you understanding this? Okay. So that is what you need to apply in the exam, and you need to arrive. Then one more example also, renting of chairs along with transportation. renting of chairs and coolers along with transportation. What you will think? Okay, renting of chairs can be separate, transportation also separate. No, usually renting of chairs along with transportation, they only do the transportation. So therefore it will be coming under naturally bundled. Then suppose if these three conditions are not satisfied, it will be coming under not naturally bundled, not a composite supply, any three. Okay, not a composite supply. When it is not a composite supply, then we need to directly don't apply mixed supply. Check whether there is a single price or not. If there is a single price, it will become mixed supply. If there is separate prices, it will become individual supplies taxable accordingly. If it is a composite supply, we need to take the rate of principal supply. If it is mixed supply, we need to take the highest rate. If it is individual supply, we will take respective rate for payment of GST on respective value. Got it? On respective supply. So two or more supplies naturally bundled, here not naturally bundled, here taxable, here any combination. Here single price or separate price, for mixed supply single price. Principal supply, yes, it should be there, here not required. Here the rate of GST is principal supply, here the rate of highest rate will be taken. And examples, AC and installation naturally bundled, and transportation plus transit insurance. If transportation is not there, why there will be transit insurance? So naturally bundled. Replacement of parts during servicing of vehicles plus labor charges, again naturally bundled. So because a service center will not do only replacement of parts, so they will, that is whenever they replace the parts, usually the parts rate and all will be high. You can say, I will go outside market, I will buy and give that part. Will you replace and give? No, they will not do that. You have to buy the part there only, then only they will do the labor also. Otherwise, they will not be doing, which means that both are naturally bundled in the ordinary course of business. Then inverter and battery, we can buy the inverter separately. They can sell the inverter separately, battery separately. And renting of building plus renting of furniture, they can be giving separately. Popcorn plus Coke in a theater, again not naturally bundled, because only popcorn also they will be selling, only Coke also they will be selling, as a combo also they will be selling. So therefore it will not be coming under naturally bundled. Then if there are two or more supplies which is not a composite supply and also not involving single price, then it will be coming under individual supplies and taxable accordingly. Then so this first topic, so we will complete it soon. We don't have that much in that, because for place of supply it will help. So look into page number 10, basic concepts of GST. So first, GST is implemented in India with effect from 1/7/2017, and all indirect taxes levied by central government except customs duty got subsumed into GST. But in that customs duty, there were additional customs duties called as CVD and SAD that also got subsumed into GST, countervailing duty and special additional duty. So that is the first point. Is customs duty into the ambit of GST? No, it is outside the ambit of GST. But along with customs duty, we will be paying IGST. That IGST is not levied under GST. That IGST is levied under customs. Then, so that is this. Additional customs duties to counterbalance excise duty and special additional duty to counterbalance sales tax is subsumed in GST. What about indirect taxes levied by state government? 6 indirect taxes levied by state government, that is value added tax, entry tax, that is purchase tax or entry tax, luxury tax, advertisement tax, betting and gambling tax, and then so this entertainment tax. So value added tax, luxury tax, entertainment tax, betting tax, purchase tax. So these are the taxes that got subsumed into GST. Okay. However, entertainment tax levied by local authorities, so that not got subsumed into GST. Not only this, other any local body tax. So for example, professional tax or even property taxes, etc., which are levied by local authorities or any corporation also not got subsumed into GST. It is still outside the ambit of GST. What about the other taxes other than this list levied by state government? Whether it got subsumed into GST? No. Only these indirect taxes: value added tax, luxury tax, entertainment tax, betting tax, purchase tax. Actually, one more tax is also there, that is advertisement tax. So 6, actually 6. Advertisement tax. Advertisement tax. Okay. So these 6 taxes levied by state government got subsumed into GST. In one MCQ they gave so which of the following taxes not got subsumed into GST? In that list, professional tax is there. So professional tax, yes, not got subsumed into GST, that is the answer. Okay. Then GST Council, before that you have one point, you see. So for the purpose of implementation of GST, there was a constitution amendment required. So in that, the constitution amendment bill was presented in 2014, but it became act in 2016. And you need to remember 2016, not 2017. In MCQ they will twist and they will give 2017, but no, it is 2016. Constitution amendment is 2016 and 101st constitution amendment. And India adopted GST model, dual GST model or single GST model? Dual GST model, where central government and state government is having power to make law. So in GST, and we adopted that model from Brazil and Canada. And GST Council is the common body for the decision making purposes, and this GST Council is constituted by President of India under Article 279A of the Constitution, and Union Finance Minister is its chairman, and it is a decision making body of GST. And how many members will be there? Total 33 members. How? For 31 states. How 31 states? 28 states plus 3 union territories, that is Delhi, Jammu and Kashmir and Puducherry, Pondicherry. These 3 are considered as union territories with state legislature, treated like states. For the 28 states plus these 3 union territories with state legislature, for 31 states, we have 31 state MLAs who are treated as finance ministers. So those finance ministers, 31 finance ministers for 5 union territories. What are the 5 union territories? That is Andaman and Nicobar, Lakshadweep, Chandigarh, then Daman, Diu, Dadra, Nagar Haveli. So that is considered as now one union territory. Daman, Diu, Dadra, Nagar Haveli is considered as one union territory. And then Ladakh. Ladakh is also now one union territory, but without state legislature. For these 5 union territories put together, one union MP is appointed to look after the revenue. So that person is one. So one union finance minister and 31 state finance ministers and one union MP in charge for the union territories. So these are the 33 members, and quorum 50% means 17 members if there are, so then it will be called as a valid meeting. But in that 17, definitely chairman should be either union finance minister or union MP. Suppose if only 17 state finance ministers constitutes a GST council meeting and decide that GST is abolished from today like that, it will never be applicable. Okay, then central government vote will be 1/3 weight and state government vote will be 2/3 weight. So which means we need to take the weighted votes only. So whatever is the number of members present, so depending upon that the weighted vote will be calculated. For example, in a meeting, one union finance minister is present, so therefore 1/3 is the weighted vote. One union MP is located in the meeting, so then into 1/3, and 17 state finance ministers are there. So which means into 2/3, so that is 1/3 plus 1/3, so 17 into 2/3, so that is 34 divided by 3. So total, if you see, 36 divided by 3, so that equals to 12. 12 will be taken as the total weighted votes. In this, how many are voting in favor? So that also we need to do the same way in weighted votes. So how many voted in favor divided by, so what is the total weighted votes? So then we need to get a 3/4 majority. Then only a decision is considered to be taken. For example, they wanted to take a decision regarding reducing the GST rate on some transactions. So union MP did not vote and union finance minister also did not vote. In the 17 state finance ministers, so 12 state finance ministers voted in favor. So 12 state finance ministers into 2/3. So will be what? So 24 divided by 3, how much? So then 8 divided by 12, what is the percentage? 8 divided by 12, 70, exactly 75, correct? Then whether the decision will be taken? No, decision will not be taken. Why? Because we need a majority. Majority means it should be greater than 75. Then only the decision is considered to be taken. So we need a majority 3/4, means it should be greater than 75%. So while taking, we need to take completely weighted votes only for the basis. Okay. Then next, State finance ministers and MP of state affairs in charge of revenue or its members. Types of GST, we have in total 4 GSTs, 5 GSTs actually. So CGST in case of intrastate supply levied by central government, SGST in case of intrastate supply levied by state government, UTGST in case of intrastate supplies levied by central government, union territories only, but it will be levied by central government because they are under the control of central government only. And then we have IGST levied by central government, and we have GST compensation cess. GST compensation cess is for the purpose of giving compensation to the states on account of implementation of GST if there is any loss to the states, and this GST compensation cess will be applicable for a period of 5 years from the date of implementation of GST, and it can be extended for a further period as the GST council can decide, and accordingly it is extended up to 31st March 2026, but that is not applicable for your exam. So you just remember, for a period of 5 years it is there, and it can be extended for a further period as decided by GST council. And in case of what is intrastate supply and interstate supply, intrastate supply means location of supplier and the place of supply. If location of supplier and the place of supply is in the same state or same union territory, it is intrastate supply. If it is in the same state, the applicable taxes will be CGST plus SGST. If it is in the same union territory, CGST plus UTGST. What is interstate supply? Location of supplier and place of supply, 2 different states, 2 different union territories, or a state and a union territory, then it is interstate supply. In case of interstate supply, the type of GST that is applicable is IGST. In that IGST, 50% will go to the consuming state based on place of supply. So that's the reason why GST is called as destination based consumption tax. That is this. Then important area from now on, what is the meaning of export of goods and export of services? Export of goods means taking goods from India to a place outside India is known as export of goods. Anywhere in export of goods, Forex is a condition. No, Forex is not a condition for export of goods. So it will become export of goods, and it will become zero rated supply even though it is not in Forex. However, if you are claiming refund, you should ensure that the consideration is realized in Forex within the time prescribed under FEMA. But because to claim refund, no need to have Forex. But in case of services, to claim refund, we need to have realized the consideration in Forex. Whereas in case of goods, to claim the refund, there is no condition that we need to realize the consideration in Forex. But whenever we wanted to get the refund, we can get the refund without getting consideration in Forex. But we need to ensure that the consideration is realized in Forex within the time prescribed under FEMA. What will happen if I am not realizing the money within the time prescribed under FEMA? Then whatever refund that I have already got at the time of export, that will be taken back from me along with interest. Hope you got the clarity. But in case of export of services, only when you get the Forex, you can make an application, because one of the supporting document for claiming refund in case of export of services is FIRC. So which means that only when you are getting that foreign inward remittance certificate, then only you can go for refund. Because in export of service also you can see that condition is there that the consideration should be realized in convertible foreign exchange. Okay. So this FEMA time limit and all is applicable only in case of goods, not in case of services. Because first of all, in case of services, you go for the refund only when you get the foreign exchange. But in case of goods, you will go for the refund even though you are not getting the convertible foreign exchange. So what is the meaning of export of goods? Taking goods outside India. So that is known as export of goods, and in brackets write down. So consideration in Forex is not a condition. Consideration in Forex is not a condition. Then what will be treated as export of services? So this already we have seen: location of supplier in India, location of recipient outside India, place of supply outside India. Consideration should be in convertible foreign exchange, but in case of services to Nepal and Bhutan, the consideration can be Indian rupees or in foreign exchange. And supplier and recipient are not two establishments of the same person. For example, there is a company incorporated in India. That company has also incorporated outside India. A offshore unit is there outside India. It is incorporated separately under that country law. So for example, usually these lot of audit firms are now opening up their branches in Middle East. So in Middle East, offshore units they are opening. Suppose if they are registered, because lot of business they are getting from Middle East. Middle East, Singapore, Malaysia and all, from these countries, they are getting lot of businesses, lot of outsourcing. India is now the biggest, multi-trillion dollar outsourcing business we have getting. So that many contracts. So now amongst all the developing countries we have, so therefore naturally, so lot of companies will be opening up there. But this point number 5 gets subtracted, which says that if you are having an establishment outside India, when you are rendering service from India to outside India, that will not be treated as export of service. That's the reason why they have given this clarification. Supply from a company incorporated in India to its establishment outside India, which are incorporated under the laws of the country outside India. That country, even though same company only, same branch only, same division only, but only thing, if they are already incorporated under the law of that country, it will be treated as different person only. It will not be treated as two establishments of the same person. Would qualify as export of service subject to fulfillment of other conditions. Then there are some transactions which are always deemed to be interstate supplies, even though the location of supplier and place of supply is in the same state. What are those transactions? Number 1, supply to SEZ and supply by SEZ. When any supplies to SEZ and by SEZ, even though SEZ is within the state, it will always be deemed to be interstate, chargeable to IGST. Then import of goods and import of services, always deemed interstate. Same way export of goods and export of services, deemed interstate. Location of supplier in India and place of supply is outside India, then also it is deemed interstate as per section 7 subsection 5 clause A. So that is location of supplier in India and place of supply is outside India, then it will be deemed interstate. And location of that is supply of goods to a tourist, at present it is not effective, but supply to a tourist is also treated as deemed interstate. Supply of goods or service beyond territorial waters, up to territorial waters, either it will be intrastate or interstate. How to determine whenever the supply takes place in the territorial waters? We need to take the nearest coastal state or the nearest union territory as the place of supply and determine whether it is intra or inter. For example, location of supplier in Tamil Nadu and place of supply is in territorial waters. Now, we need to see what is the nearest state. Suppose Tamil Nadu is the nearest state, it will be intrastate. If Andhra Pradesh is the nearest state, it will be interstate. And then in case of beyond territorial waters, how to treat? Beyond territorial waters and up to 200 nautical miles is called as supply in India only, because India definition for the purpose of customs is 12 nautical miles, but India definition for the purpose of GST is up to 200 nautical miles. For customs meaning of India is up to 12 nautical miles. For the purpose of meaning of India under GST, it is 200 nautical miles. So beyond 12 nautical miles and up to 200 nautical miles, that is exclusive economic zone of India, what will be it treated as? It will be treated as, interstate supply beyond territorial waters and up to exclusive economic zone. And suppose if location of supplier in India and place of supply is in India, but the place of supply is determined under section 13. This is the place where lot of students are making mistake nowadays. That is, place of supply Tamil Nadu, location of supplier also Tamil Nadu, but this place of supply is determined under section 13. So how place of supply will be determined under section 13 and it is in India? For example, you take this service in relation to immovable property. Listen, service in relation to immovable property. In case of service in relation to immovable property, so section 13, when section 13 is applicable, say for example, architect is in India, architect is in Tamil Nadu, and the owner of the property is located in Australia. Owner of the property is located in Australia. Now in that case, actually in this section 13 will be applicable. Why section 13 is applicable? If supplier in India and recipient outside India, the place of supply will be determined under section 13 of IGST Act. What will be taken as the place of supply? The place of supply will be location of property. What is the location of property? Say the property is in India, say Tamil Nadu, the property is in Tamil Nadu, and this place of supply is determined under section 13 of IGST Act. So then it will be treated as what? As the location of supplier Tamil Nadu, place of supply also Tamil Nadu, it should become intrastate. No, once the place of supply is determined under section 13 and if it is in India, it will always be treated as deemed interstate supply. Don't forget this. Already this has been tested in exam, already this has been given in a suggested answer. There is no further debate and all here. So as per ICI, it is definitely interstate. So if you want, so you ask me, I will show you the proof also. So don't debate with me. It is real, trust me. It is given in suggested answer, RTP, MTP, everywhere it is given. It is deemed interstate supply. Once the place of supply is determined under section 13 and if it is in India, it is in the same state. Location of supplier also same state, location place of supply also same state. Then it will be treated as deemed interstate supply. That is this. Very, very important one. And then next 8th point, security lending. So we have discussed the security lending under section 9 subsection 3. Security lending will be coming under deemed interstate supply because the security lending will happen through a stock exchange. That's why it is always treated as deemed interstate supply. Then trading in PSLC, priority sector lending certificates, will be given by one bank to another bank in order to fulfill the priority sector loans. This trading in PSLC will be through e-Kuber portal of Government of India. So this will be always deemed interstate supply. So it will not be intrastate. Apart from this, the 10th point is, if the supply cannot be categorized as intra or inter, always it will be treated as deemed interstate supply. So that is with respect to this. Understood? Then zero rated supplies. We know what is zero rated supplies. Export of goods or services or supply of goods or services to an SEZ is known as deemed interstate supply. So whether we can take ITC when our outward supply is zero rated supplies. Yes, we can take ITC on our inward supply when our outward supply is zero rated. Exports is zero rated. Supply to SEZ is zero rated. And both are deemed interstate. Correct or not? And therefore, what is the GST that is payable? IGST. Can we take ITC on our inward supplies? Yes, we can take ITC on our inward supply because for the purpose of input tax credit, the meaning of exempted supply do not include zero rated, but zero rated were classified under taxable. So we can take ITC. What about the outward supply? Should we pay GST or not? Two options are available. Option number 1, pay IGST. Pay IGST on outward supply by utilizing the ITC and get refund of the IGST. Whether we get the refund of IGST, gross refund of IGST or net refund of IGST, gross. For example, see this. So exports value is 10 lakhs. Exports value is 10 lakhs excluding GST at 18% and ITC on inward supplies. ITC on inward supplies that we have is 85,000. 85,000 is the ITC on inward supplies. Now, what will be taken? Two options are there. Option number 1. Under option number 1, what we will do? Simple pa. So 10 lakhs into 18%, we will pay 1,80,000 minus already ITC we have 85,000. So therefore 95,000 we will be paying as GST. But how much refund we will get? How much refund we will get? 1,80,000 or 95,000? 1,80,000 we will get as refund. What is the logic behind this? Simple. So at the time of purchase we paid 85. That also we will get as refund. At the time of sale we are paying 95. That also we will get as refund. So the incidence will become 0. So that's why refund will be 1,80,000. Whereas option 2 is there. What is that option 2? In case of option 2, so that is 1,80,000 will not be there. We will not be paying anything. So then how much refund we will be getting? So refund will be ITC. What is the ITC? 85,000. But here we will not get full 85,000. We will get ITC refund only with respect to inputs and input services, not with respect to capital goods. But those details, those microscopic details I am not going, that we will be studying in refunds chapter. But here what we need to understand is that this 85,000 rupees we will be getting. So here also to make the tax incidence 0. But how much ITC we will get in case of refund of ITC is that how much refund of ITC only to the extent of inputs and input services. But in case of option 1, we will get the refund even with respect to capital goods. So that is these two options. Then supply in territorial waters. Whenever supply takes place in territorial waters, just now we have seen, we need to determine based on the nearest coastal state or union territory. Then this state of Jammu and Kashmir divided into 2 union territories that we discussed, and Dadra Nagar Haveli merged into a single union territory. Then section 146 talks about GST network. GST network will be providing shared information technology between government and taxpayers, and it facilitates registration, payment of tax, furnishing of returns, settlement of IGST, e-way bill, etc. So these are the functions of GST network, and GST network is a 100% government owned entity. In that 50% is owned by central government and remaining 50% is owned by all state governments put together. So with this we completed that also. Now look into place of supply. Sorry pa, I could not increase the speed. Am I going slow? But I could not increase the speed, I could not complete the portion. So reason being, throat pain started already, okay. And moreover, lot of points are there, pa. I don't know what to eliminate, what to discuss, because if I proceed, skip, no, at the time if this point is asked, what will happen? So like that. So due to that reason only, I don't know how to cut that, because my conscience is not accepting. So that's why I am telling everything, okay. Because if at all this point comes, and if you are tested in that point, and if you feel like, this point you did not discuss, because nowadays students are depending only on this rocket revision. After feeling that, I have little fear I got. So then they will scold my 10 generations before also. So for that reason only, pa. So say this. Segment 4, place of supply. Look into page number 40. But after this place of supply, so remaining and all small topics only we can quickly complete. Invoice and time of supply is pending. Then e-way bill is pending. Then circulars are pending. So refunds. So this only, but it will not take that much time. We will complete, don't worry. So look, listen. Place of supply. So place of supply, we have total 4 sections. Section 11 is place of supply in case of goods import or export. Section 10, place of supply in case of goods domestic. Section 12, place of supply if both supplier and recipient are located in India. And section 13, place of supply if either one in India and the other outside India. So place of supply is relevant for what purpose? In order to determine whether a transaction is intrastate supply or interstate supply. What if both are outside India? Place of supply cannot be determined, and those transactions are exempted except transportation of goods by vessel from outside India to India. And what should be taken as place of supply in case of goods? So in case of goods, section 10 is applicable. All these section 10, 11, 12, 13 is for IGST Act. Section 10 is applicable in case of domestic transactions. So in case of domestic transactions, 10(1)(a), supply involves movement of goods. We need to take ending point. What is supply involves movement of goods? Under the contract of supply, goods are moving from one location to another location. That is supply involving movement of goods. We need to take ending point, the location where the goods are delivered. So that should be taken, ending point of the goods should be taken as a place of supply. Suppose if it is 10(1)(c), supply does not involve movement of goods, which means the goods will be in that location only, but the transfer has taken place. In that case, we need to take location of goods at the time of transfer. That should be taken, location of goods. For example, there is a ship which is located in Mumbai and the seller is in Tamil Nadu, buyer is in Kerala. So seller is transferring the documents of title to the ship to the buyer in Kerala, but the ship is located in Mumbai. Supply does not involve movement of goods. Location of goods at the time of transfer means Mumbai will be taken as the place of supply. Then, so bill to ship to transactions. Bill to ship to means, so that is under the directions of my recipient, I am delivering the goods to a third person. In that case, even though I am delivering the goods to the third person, that should not be taken as a place of supply. My billing address only should be taken as the place of supply. Now, for you, there will be another supply. So, between billing address and the shipping address, there will be another supply. between the original supplier and the billing address supply number 1. For this we need to determine place of supply as per 10(1)(b), and as per 10(1)(b) the billing address will be taken as the place of supply, whereas between the billing address and the shipping address to whom I delivered on your behalf, there is another supply. In the case of that another supply, because you need to raise invoice to him, in that case a place of supply will be determined as per 10(1)(a). Supply involves movement of goods, ending point will be taken as the place of supply. Then next, in case of 10(1)(d), goods assembled or installed at site. So we need to take location where the goods are assembled or installed. And in case of supply of goods on board a conveyance, so during the journey if there is any sale that has taken place, then in that case we need to take the starting point of the goods, not starting point of the conveyance. We need to take starting point of the goods. And in this context one point might be tested also, that is food items which are sold on board a conveyance will be treated like supply of goods only. It will not be treated as supply of service, packed food items. Whereas if cooked food items are supplied in a conveyance, then it will be called as supply of service. For example, if there is a pantry car in a train and there they are cooking dosa, vada, sambar, etc. and all they make and they are giving, so that will be coming under supply of service. If packed items, so biryani, chapati, parota and all, they are packing, loading it into the train, and that if they are selling in the train, that will be coming under supply of goods. So in case of supply of goods, we need to take starting point of the goods as the place of supply. Then next, in case of import, what should be taken as the place of supply? Location of importer. In case of export, what should be taken? Location outside India. Why we need to know? Anyhow import is deemed interstate supply. Why we need to know the place of supply? Because if the location of importer is Tamil Nadu, then IGST 50% will go to Tamil Nadu due to that reason. So therefore in case of import, location of importer will be taken as place of supply. In case of export of goods, location outside India will be taken as place of supply. So just this 7 points. Then one more important point is that between 10(1)(d) and 10(1)(e) versus 10(1)(a), 10(1)(b), 10(1)(c), which will prevail? 10(1)(d) and 10(1)(e) only will prevail, because they are specific provisions. We need to prefer specific over general. Then in case of conflict between 10(1)(a), b, c over 10(1)(d), 10(1)(e), so we shall prefer specific over general. So 10(1)(d) or 10(1)(e) shall prevail. Then in case of services, if location of supplier and recipient are in India, section 12. In case of either supplier or recipient in India and the other outside India, then it will be section 13. And this point already I told you. Suppose if the place of supply is determined under section 13, in case of services it will always be deemed interstate supply. Now, so this is the concise version of place of supply. This much only, and less than this we cannot make. Less than this 1 point only. All cases place of supply take location of recipient and rate. That is only easy. Okay. Maybe 60% probability that the answer is correct. Because 60% of the cases location of recipient is the place of supply. So 60% probability that the answer will be correct. You take that and write. Okay. But you are taking a chance of that 40%. No sir. Then you have to read at least these 2 pages. Okay. So what should be taken as the place of supply? So now we are taking the situation and we are checking section 12 and section 13. General provisions. Suppose if it is B to B, location of recipient. If it is B to C, location of recipient in the records of the supplier. Suppose if that is not available, location of supplier will be taken. This is the general provisions for section 12. In case of section 13, so location of recipient in the records of the supplier, if that is not available, then location of supplier will be taken. That is whatever portion that here we have for B to C, the same portion that is there in case of section 13. So this is the general provisions. And when we need to apply general provisions, in the absence of specific provisions, we need to apply general provisions. For example, there is a person who is providing emergency road assistance services, and therefore you are going in a vehicle and that vehicle got breakdown in one highway and you have made a call to that person. So that person comes to that highway and he provides the emergency road assistance, some repair services he provided, and he is raising a bill to you and he don't know what is your location and he know that you are an unregistered person because you did not share your GSTIN, section 12 or section 13, section 12, because location of supplier and location of recipient both in India. So section 12, and we don't have any specific provision in this case, so general provisions are applicable. So B to B or B to C, you did not share GSTIN, so B to C, and he don't know your address. So because you are just, he will first do a repair, he will ask your address, he will do repair, he will not ask your address and all, he don't know your address. So what will be taken as the place of supply? Location of supplier will be taken as the place of supply, like that. Understood or not? Whereas in case of section 13, simple, location of recipient in the records of supplier, otherwise it will be location of supplier. Then suppose if it is any service in relation to immobile property, what will be any service in relation to immobile property, including accommodation services, that is renting of immobile property service, accommodation services, or repairs and maintenance in relation to immobile property, or real estate transactions, everything will be coming under service in relation to immobile property. In that case, what is to be taken? Suppose if it is 12, if immobile property is in India, property in India, location of property. Property is outside India, then location of recipient. Simple. For 12, only 2 points. Property in India, location of property. Property outside India, location of recipient. Whereas in case of section 13, location of property. That's it, pa. Okay. Any service in relation to immobile property, including accommodation in a houseboat or vessel, we should apply this. Including accommodation in a houseboat or vessel. Houseboat or vessel is not immobile, but even then we need to apply this. So we need to take location of immobile property or houseboat or vessel if it is in India, otherwise location of recipient. In case of section 13, location of immobile property, houseboat or vessel. And then we have next situation, performance based service in relation to individuals. In relation to individuals, if it is section 12, we need to check whether it is food and beauty related. Yes, location where service are actually performed. If it is training and performance appraisal, B2B, location of recipient. B2C, location where service are actually performed. All other services, general provisions. So food related services, location where it is actually performed, and training and performance appraisal, B2B, location of recipient. B2C, location where service are actually performed. Any other service, general provisions. Whereas in case of section 13, whether physical presence of the recipient required, yes, then in that case location where service are actually performed. Whether physical presence of the recipient required, no, then general provisions. For example, cosmetic surgery, plastic surgery, hair transplantation, etc., that will be taxable supplies. Performance based service in relation to individual, physical presence of the recipient definitely required. How we can do that surgery without the recipient? So therefore it will be coming under location where service are actually performed. Suppose if it is online yoga and all is there, becoming very famous. Here itself they will do, and people will learn from there. Online classes are there, but for that fees and all will be charged. Now in that case it will be coming under performance based service in relation to individual, where physical presence of the recipient is not required. So therefore we will take general provisions. I am talking in the context of 13. Okay. In case of 12, so that is normal, that is food and beauty, performance, location, training and performance appraisal, B2B, location of recipient, B2C, performance, all other service, general provisions. Now the next one, performance based service in relation to goods. So then we need to check in 12, we don't have any specific provision, which means general provisions will be applicable. Whereas in case of section 13, physical presence of the goods required, that is repairs, etc. to goods, physical presence of the goods required, yes. Then location where service are actually performed. Physical presence of the goods not required, means technical inspection, online inspection, etc. Then in that case we will take location of goods at the time of providing service should be taken. And then there is an exception for this first point, whether physical presence of the goods required. Yes, for that we have some exceptions. 4 exceptions are there. If goods are temporarily imported, generally when physical presence of the goods required, location where service are actually performed. But in these 4 exceptional cases, location of recipient will be taken as a place of supply, but not location where service are actually performed. That is, if goods are temporarily imported for carrying out repairs or any other process, after completing that repairs or any other process, it is exported back. So we need to take location of recipient as the place of supply. Number 2, suppose if there is any clinical trials or research carried out by a laboratory on the drugs, in that case also location of recipient will be taken as the place of supply. If other conditions for export of service is satisfied, then maintenance service with respect to repairs, maintenance or any other service in relation to aircrafts, then whether that aircraft is used for business purpose, yes, then location of recipient will be taken. Repair, maintenance or any other service in relation to vessels, ship, in that case whether it is the ship used for business purpose, yes, then location of recipient. These are the 4 exceptions that we have. So goods temporarily imported and exported after repairs or any other process, R&D or testing in pharmaceuticals, but here export of service is satisfied. The difference between A point and B point is that in case of A point, the goods should be exported after repairs or any other process, but in case of B point, the testing, after testing we don't have to export back the drugs, so the drugs will be destroyed during the testing process. It's okay. Then C and D, the only difference between C and D is here it is aircraft, whereas it is related to vessel or parts, but remaining point is same. These are the 4 exceptions. In case of these 4 exceptions, liability to pay GST will be arising either intra or inter or export or not, depends upon the location of supplier and the place of supply. But what should be taken as a place of supply? Location of recipient. But majority of the cases it will become export of service in this case. Then, so we discussed first one, immobile property related, performance based in relation to individual, performance based in relation to goods, and then in case of event related under section 12, admission. So admission we should take always location where the event is held. In case of organizing an event, for organizing an event we need to take location of event. Suppose if the event is held outside India, then location of recipient, but if it is B2B, location of recipient will be taken. For admission always event location. For organizing, B2B location of recipient, B2C event location. If it is outside India, then location of recipient. But in case of section 13, let it be admission to the event or organizing the event. In all these cases, we will take location where the event is held. Then transportation of goods. Transportation of goods, B2B location of recipient, B2C starting point of the goods. So this is in case of section 12. But here you need to remember one point, there is an exception. If it is transportation of goods from India to outside India, let it be B2B or B2C, always it will be ending point of the goods only. Okay, so this is very, very important. In case of India to outside India, it is ending point of the goods for both B2B and B2C. So what is it? First we need to check, is it from India to outside India? Before checking B2B, B2C, check whether it is India to outside India. Yes, then we will be taking, so look, ending point, let it be B2B or B2C, it will be ending point. Suppose if it is not India to outside India, other cases within India or outside India to India like that, then we need to check B2B, B2C, B2B location of recipient, B2C starting point of the goods. Don't get worried about, sir, many places there are B2B, B2C. No, only in 4 places we have B2B, B2C, only in 4 places. If you want to check, training and performance appraisal we have B2B, B2C. Yeah. Next, organizing an event we have a transportation sector, we will be having transportation of goods, transportation of passengers. Okay, and then any other place? No, only 3, not even 4 places, 3 places you can see that. So transportation we can merge into 1, that's why it will become 3. Okay, transportation of goods is 1, transportation of passengers is another, that we will merge into 1. Transportation, only 3 places. So then why you get confused between B2B, B2C? See there, B2B, B2C only in 3 places, that is training and performance appraisal, organizing an event, transportation of goods or service. That too only in 12 we have that. And in all these 3 cases, B2B means location of recipient, B2C means depends. Still, that's what, training and performance appraisal, location where service are actually performed, organizing an event, location of event, if the event is outside India, location of recipient, transportation of goods, B2B, location of recipient, B2C, starting point of the goods. But to apply B2B, B2C in transportation of goods, it should be other than India to outside India. Then in case of transportation of goods, in section 13 you see, in case of 13, other than mail or courier, ending point of goods, mail or courier, we need to apply general provisions. Then in case of transportation of passengers, B2B, location of recipient, and in case of B2C, it is starting point of passenger. Easily you can remember, for goods also starting point of goods, for passengers also starting point of the passenger. Okay, then in case of 13, it is opposite, that is ending point of goods and here starting point of passengers. Okay, so in case of transportation of goods, in case of 12, B2B always location of recipient, B2C starting point of goods. In case of transportation of passengers, B2C starting point of passengers, whereas in case of section 13, it is ending point of goods other than mail or courier. Of course, here majority it will be other than mail or courier only na. So therefore it is ending point of the goods. In case of passengers, starting point of the passengers. Okay, and transportation of passengers, both 12 and 13, it is starting point of the passengers only. See. So starting point of the passenger, starting point of the passenger. Okay, somehow we need to remember no other go. And then here in case of mail and courier, what we need to do? We need to apply general provisions. Then services on board a conveyance. So during the journey they will be providing some services. For that what will be taken as place of supply? In case of 12 as well as 13 common, starting point of the conveyance. So we have in 12 starting point of goods, starting point of passenger, starting point of conveyance. So starting point of goods for transportation of goods, and in case of passenger, starting point of passenger. In case of services on board a conveyance, starting point of conveyance. Understood or not? Whereas in case of 13, it will be ending point of goods, starting point of passenger, starting point of conveyance. Understood? Then next, OIDR services. In case of OIDR services in section 12, we don't have any specific provisions. So general provisions will be applicable. In case of section 13, location of recipient. And banking and other financial services. Banking and other financial services, 12 we don't have any specific provisions. So general provisions. In case of section 13, we need to see whether they are providing service to the account holders. This point is tested in July 2021 exam. Okay, whether they are providing services to the account holders. Yes, they are providing service to the account holders. Then location of supplier will be place of supply. If they are providing service to other than account holders, then it will be general provisions. See this, if service are provided to account holders of the bank, location of supplier, otherwise it will be general provisions. Then intermediary, many times we discussed. So for 12 we don't have general provisions. For 13, location of supplier will be taken. Then hiring of a means of transport, 12 we don't have, it is only 13. If it is aircraft or vessel, general provisions. Other than aircraft or vessel, up to 1 month, then it will be location of supplier. Beyond 30 days, it will be general provisions. Now, there are 3 places where location of supplier will be place of supply, and coincidentally, all these 3 falls in 13 only, correct? Check that and tell me, what are the 3 places where location of supplier will be the place of supply in section 13? Number 1, banking and other financial service to account holders. Number 2, intermediary services. Number 3, hiring of a means of transport other than aircraft or vessel up to a period of 30 days. So you can see that below. Location of supplier is the place of supply in 3 cases. Banking services to account holders, intermediary services, hiring of other than aircraft or vessel up to a period of 30 days. Clear pa? So this summary is very important. Okay. So that whenever you get confused, this will help you. Okay. Sublocation of supplier only in 3 places. And only in 3 places B2B versus B2C classification we will be having. Sir, who is called as an intermediary, sir? Intermediary means outsourced contracts will not come under intermediary. For example, you need to do some work. You outsourced it to me. I am not called as an intermediary. That will be principal to principal. If you are providing services to one person, you are selling goods to one person. Now I am facilitating this transaction or arranging this transaction. I am intermediary. You understood or not? When you need to do some work, for example, you got a contract to do the software development. Now you gave that contract to me to develop. Now I am not your intermediary. That's a principal to principal. Now you want to develop a software. Another person need a software. I am acting as a marketing agent, connecting you both. Then I am facilitating or arranging transaction in securities. I will be called as an intermediary. Is it clear or not? So this definition of intermediary is very important. Please read the meaning of intermediary. An intermediary is someone who arranges or facilitates the supply of goods or services or securities between 2 or more persons. Okay. So transact in the supply of goods or service, that is the main supply, and the one in arranging or facilitating the said main supply. Got it? Therefore, outsourced activities will fall under intermediary? No. Outsourced activities do not fall under intermediary services. Then last one, telecommunication including broadband DTH services. We need to see in case of 13 there is no specific provision, general provision. In case of section 12, we need to check it is a fixed line. If it is a fixed line, always it will be location where it is installed. So even if it is prepaid or postpaid, etc., don't get confused. Fixed line always where it is installed. Suppose if it is a mobile, then we need to check prepaid or postpaid. Suppose if it is postpaid, we need to take billing address. If it is prepaid, how we do recharge, online recharge, then location of recipient in the records of supplier. Suppose that is general provisions. Suppose if it is through a dealer, location where the payment is received. Suppose if it that is location of the dealer. If it is through any other person, location where the payment is received. See this: mobile postpaid billing address, mobile prepaid dealer address, online recharge general provisions. This much you remember. This is common for broadband as well as DTH also. Then services provided, advertisement services provided to government. We need to take each state where the service is provided. Actually that comes in the rules. But so far what I have discussed is section 12 and section 13, that is in the context of services what will be taken as the place of supply. Then we have IGST rules related to this. This IGST rules, first we need to understand when which rule is applicable. Rule 3 is applicable in case of advertisement services to government. So there is a person who is providing advertisement service to government or any statutory body under government. In that case, see, because so far they have already tested this 12 and 13, in many exams they have tested, but this rules is not yet tested. One attempt also they did not touch the rules. So rules are very, very important. If at all you get questions, that will be from these rules only I am expecting for November 22 exam. So please concentrate and listen. We will complete this place of supply and leave. Okay, no? So this rules, whenever it is completed, okay. So rule 3 is applicable in case of advertisement services to government. What should be taken as the place of supply? Place of supply will be each state where the advertisement is provided. How that will be segregated? So for that purpose only they gave rule 3. It will be segregated depending upon the type of advertisement. Suppose if it is advertisement on the train, so then we need to take the length of track in each state and we need to divide it between the states. And suppose if it is railway tickets, advertisement on railway tickets, we need to take number of stations in each state and we need to divide it between each state. And suppose if it is television channel based on viewership data, first we need to divide based on viewership data given by BRC, Broadcast Audience Research Council. Thereafter, if one channel is being telecasted in 2 states, then we need to divide it based on population census. So then we will be arriving at the state-wise value. Then suppose if it is internet, it is deemed that it is provided across the country, because once it is internet you cannot control it. So then it is across the country, then all states, how it will be divided? Based on internet subscribers it will be divided. Suppose if it is through SMS, it is based on telecom subscribers data. Based on telecom subscribers data we need to divide. Apart from this, so only 5 we have here. Length of track, not length of train, length of track. And in case of tickets, number of stations in each state. And then in case of television, BRC data, each state based on population data. First viewership, primary allocation. Secondary allocation based on population census. And in case of internet, across the country, and we need to take internet subscriber data and divide. If it is SMS, you take the telecom subscriber data and you divide between the states. Understood or not? Apart from this, any other advertisement, suppose advertisement in newspaper, advertisement in hoardings, advertisement in cinema halls, advertisement in radio, all these cases, amount payable ratio. For example, a newspaper, if they collect 10 lakhs for first page in one edition and 5 lakhs for first page in another edition and 20 lakhs for first page in the other edition. So therefore, what is the generally amount payable ratio? 10:5:20. Now how much ever money they are getting from the government, that needs to be divided in this ratio. Got it? Then for keeping a hoarding, to keep a hoarding in Tamil Nadu, I will be collecting 50 lakhs. To keep a hoarding in Karnataka, I will be taking 20 lakhs. Now I got 5 lakhs from government. So therefore that 5 lakhs I will divide in the ratio between 40:50. You understood or not? That is in my expenditure ratio. Matching concept pa. In my expenditure ratio, I will recognize my revenue. Simple. Okay. That is amount payable ratio. In any other case, it is amount payable ratio, that is expenditure ratio. And which data should be taken, that is in case of television channels, which data, that is which period data should be taken, last week, last quarter should be taken. Figures of the last week of the given quarter, figures of the last week, figures of the last week of the given quarter you can see now, so that will be taken for the succeeding quarter. Okay, and if the data pertains to, so for pen battery also over. Then suppose if the data pertains to more than one state, we need to take the ratio of population. Even for SMS also, for SMS also we need to take the TRI data. The TRI data, which period should be taken? Same, last quarter, last week. Then look into rule 4 and rule 8. So rule 3 we completed. Rule 4 and 8 is applicable in case where the immobile property is in more than one state. For example, we have booked a package, and according to that package, so we are going for multiple places under the tour package. Accommodation is in multiple places. Now, number of nights stayed in each state. Under that package, 3 nights in Tamil Nadu, 2 nights in Kerala, 1 night in Andhra Pradesh. Now, whatever is the package amount, you divide it based on that number of nights in each state. Then, suppose if it is accommodation in a boat or vessel, we have boarded a houseboat and we slept. Morning woke up in another state. Now, in that case, what will be taken as the ratio for division between these two states? We need to take number of hours spent. When this person is going, won't he do the work for which he is going? So, will he sit and count? So, definitely it is on the standard time. Okay, right there, standard time. So, based on the standard time, we need to divide. Then, all other services. I said about person, you are only thinking bad. I said one person, single person. Okay, you don't take anything else. So, then, all other services provided in relation to immovable property. All other services means, for example, repairs and maintenance service in relation to immovable property, and a hotel. That hotel is having 4 branches. Now, in that case, I need to take the carpet area, floor area, and I need to apportion. You understood or not? Usually AMC and all when we take, so we take for all their branches. So, then in that case, based on carpet area, we need to divide. So, first point, accommodation, number of nights stayed, houseboat, hours spent, and then number 3, any other case, carpet area or floor area. Then 5 and 9, that is event. So, whenever the event is held in more than one state. For example, so Marvel is releasing a movie, and that movie they wanted to target in India because they are converting in all the languages in India. So, because they understood that, so Indians are crazy, we will watch anything. So, therefore, they wanted to release in all languages. Now, they will be conducting an event in India, multiple states. So, one organizer is there who is conducting events in multiple places against a single consideration. Simple, based on the expenditure ratio, we need to divide the revenue. So, GAAP ratio. GAAP means as per generally accepted accounting principles, how revenue will be recognized based on our expenditure. That is this. Then, rule 6 will be applicable in case of telecommunication services through a leased line where they are connecting more than one point, one circuit point. For example, a bank is there. So, bank will be having multiple outlets and multiple ATM centers. So, connecting that one leased line they are putting, and that crosses each like 2 different states. Then what they need to do? So, number of circuit points in each state, in that ratio we need to divide the consideration. Why are we dividing between the states in all these cases? Because, so if the place of supply is Tamil Nadu, that money will go to Tamil Nadu, 50%. If the place of supply is Karnataka, then that 50% will go to Karnataka. So, states are adamant onto this place of supply. It is not the central government. Central government is very, very happy. Because if the place of supply cannot be determined, full amount they will put and later on they will be giving. So, therefore, they are very happy, but the states are adamant onto this place of supply. That is why we have this. Then, next rule 7. In case of rule 7 is performance based services, only in the context of 13. Performance based services, it is not goods actually performance based services in relation to individual and goods, in relation to individual or goods, because we have two things now, performance based service in relation to individual, performance based service in relation to goods. In case of performance based service in relation to goods, as per section 13, what is the place of supply? Come on. If the physical presence of the goods require location where service are actually performed, if the physical presence of the goods not required, location of goods will be taken. Performance based service in relation to individual, what will be taken? Physical presence of the recipient required, location where service are actually performed, physical presence of the recipient not required, general provisions, correct? So therefore, what if the performance is in more than one state? For example, services supplied, so AMC, so wherein performance based service in relation to goods, say computers for a MNC which is having branches in multiple states, but the company is a foreign company. We got a contract, so we are providing services to the foreign company. So supplier in India, recipient outside India, they have multiple branches in different states in India, and same goods are different goods, same goods, all 4 branches, it is the same computers only, I need to provide AMC, simple. Whatever is my contract price, I will equally divide between all the states, equal ratio. Suppose if it is different goods, some state branches it is computers, some states it will be laptops, some states it will be data centers, then what I will be doing? So depending upon the invoice value of those goods, I will be apportioning invoice value ratio. Suppose if it is services, services provided, for example, there is one fitness trainer. That fitness trainer is appointed for the purpose of providing fitness to the actor for the shooting. So shooting takes place in multiple spots. So he need to travel to each and every place, and he need to provide the fitness services so that the actor will look good in the movie. Okay. So therefore, yes, before the shooting only they will do exercise and they will be coming. So then only that muscles and all gets pumped up. I don't know you have been to gym and all. So if you go to gym, no, in that mirror is a cheating mirror. There it will be showing properly and you will be really looking good. But you come home and bath, thereafter you look at your mirror, like this you will be, okay. So therefore, it's normal. So therefore, before that shooting spot only, they will be providing that pumping, muscle pumping, okay. So for that purpose, so this fitness trainer will travel in multiple states. So then what will be taken as the place of supply? Because location where service are actually performed, then it is in each and every state. So divide it based on expenditure ratio. See there, GAAP, that is expenditure ratio. Understood? That's it, over. See, these 7 rules only we have, rule 3 to rule 7, and 8 and 9 is common for 4 and 5, okay. So 2 pages for place of supply in case of services, 2 pages for place of supply as per rules, okay. So, but according to me, I feel like somehow my conscience is telling that rules will be tested this time, okay. Then next, circulars we have, quickly we will complete. Listen, in case of exporter of service outsourcing a portion, so I will not read it, I will explain with an example. Listen, very simple part. You are located outside India, I am in India, I am providing services to you. Contract is that I have to provide service to you, either I will provide or I will provide it to some other person, but I have to provide you service. Now what I did, I provided services to you, and part of the service which I could not provide, I appointed one person. That person is in your country only. He provided services to you, and my service ka value $5,000. So therefore, what I asked, so you give me $3,000 to me, you pay directly $2,000 to him, so that I will not have this currency conversion problem. And you listened. So 5,000 is the contract price. You are giving me how much? $3,000. You are paying to him how much? $2,000. Understood or not? Now, for me, what is the export of service? $5,000. For me, how much will be taken as export of service? $5,000. Now, that person is receiving $2,000. Nah, that is a import of service for me. because even though he provides service to you, on whose behalf he is providing service to you? On my behalf. So therefore, that person who is appointed by me, he is my supplier, I am his recipient, I am importing services for which $2,000 I need to pay GST under RCM. So what they are telling, export of service will be treated for $5,000, provided on the $2,000, I am paying GST under RCM under import of service. Got it? That is only this circular. Then number 2, in case of cargo handling service is provided by custodian in the customs port. Whenever the goods are imported, that goods should be unloaded and delivered to the custodian, and till the time we file the bill of entry, the goods will be under the control of custodian. Due to that reason, custodian will be charging a custodian charges. So now this is known as cargo handling services. What custodian will do? He will keep the goods inside one place and he will be watching at the goods so that no one will come and steal those goods. Won't it come under warehousing services? Possible. It may come under warehousing services. Possible. That's why people interpreted that it is service in relation to immovable property. But CBSE clarified that no, it is not service in relation to immovable property. Therefore, it should be treated like a general service, and general provisions are applicable in that case. That is, this cargo handling services, we will not treat it as immovable property services. Then, next one, we are importing a product, and that is a prototype. That is not a final product, that's a prototype, and along with that one software also is coming. Okay, for example, so iPhone and all, I expected this iPhone, if you drop, no, so then what will happen? So wings should come, okay, and it should fly so that it will not land on the ground. Like that one technology, if it is there, then I will sell my kidney also and I will buy, okay. But otherwise waste. Same thing for camera, only they are changing order here to here, here to there, nothing else, okay. And this iPhone, suppose new technology is coming and I need to do the testing with respect to the software. Now product came, prototype came, I am doing the software testing also onto this. Will it come under performance based service in relation to goods? No, this will come under software testing only. Therefore, general provisions only will be applicable. This is not performance based service in relation to goods. Understood, pa? So, place of supply of software are designed by supplier located in taxable territory to service recipient located in non-taxable territory by using sample prototype or hardware test kit is a composite supply where testing is an ancillary, and for that we need to take general provisions 13 subsection 2. Then next point is that I am importing some raw diamonds, okay, stones. I am importing and I am cutting it and I am polishing it, making it into diamond, and I am exporting because that craftsman is in India only. So India only we have very good craftsmen with respect to diamond polishing and cutting. So therefore these diamonds are imported, raw stones are imported, we are doing cutting and polishing and we are exporting. So now in this case, will it come under the exceptions to the performance based service in relation to goods? Yes. Goods temporarily imported for carrying out repairs or any other process, not only repairs, any other process. See, exception 1 you see. So, temporarily imported for carrying out any other process, exception, that is exception 1. So, is it only repairs? No, any other process. So, which means this raw diamonds imported for the purpose of cutting and polishing, and when we are exporting back will come under exception 1. So, location of recipient will be taken as the place of supply. Understood? Then one small concept I missed that I am telling you, make note. That is, there is 2 sections, section 13 and 13 subsection 6 and 13 subsection 7. What does these 2 sections say? There are 3 services in the context of 13. Immovable property services, immovable property services, immovable property services, performance based services, performance based services, let it be goods or individual, let it be goods or individual. Then event related services, event related services. For these 3 services, immovable property related services, performance based services, then event related services, partly in India, partly outside India. Partly in India and partly outside India. Partly in India, partly outside India. Wide a single contract. Wide a single contract. What will be taken as the place of supply? So, entirely taxable in India. Entirely taxable in India. Okay, this is one point which is given there. Section 13.6 and 13.7 says that immobile property services, performance based services, event related services, if it is partly in India and partly outside India, so this will be entirely taxable in India. So what we should have made? We should have made a separate contract. If it is a single contract and partly in India, partly outside India, entirely taxable. In India, how we will segregate that? Following the rules. For immobile property, we have rule 8, which says that, so accommodation service are number of nights, houseboat are based on number of hours. Any other case of immobile property are floor area. Suppose if it is performance based service, same goods, equal, different goods, invoice value. And if it is individual, GAAP ratio. And event related service, GAAP ratio. Like that you divide. Means even that part which is provided outside India will be taxable in India in that ratio. Got it or not? That is the twist here. So if it is under a single contract, if we are doing this, suppose if we make two separate contracts, for portion in India separate contract, for portion outside India, so then the place of supply accordingly will be different. You understood? That's it, pa. This is with respect to place of supply. We completed, and tomorrow there is no class. Day after tomorrow we have class, and day after tomorrow session I will complete these 4 topics in GST, and thereafter customs portion I will complete, and that mighty 50 questions, actually that mighty 50 questions are from solved workbook only. If you are already having solved workbook, you can bring that solved workbook. Otherwise, I will be sharing a PDF. So for online students also I will share a PDF. So you can watch from that PDF also, and top 50 questions I am selecting and I am discussing that. So that's the agenda for the purpose of day after tomorrow. And tomorrow there is a mock test that is being planned, and if you want to write that mock test you can write. That is tomorrow afternoon 2 to 5. So and it will be here only in this place. If you want to write online also you can write, and you can see the Telegram group of mine for more details related to that. Okay, and thank you. We will meet day after tomorrow morning at 10 o'clock. Okay.